Alright guys, so let's begin a new chapter which is called income from capital gains. So you can just write down the heading, capital income from capital gains. Very important chapter. There is no question paper on in income tax without questions on PGBP and capital gain. Salary may come, may not come. House property may come, may not come. I mean, though it will come, but there will never be any question paper without these two, PGBP and capital gain. So the idea is to finish off all the important chapters so that other things will be carried. And I don't want to just finish off everything one shot. We'll keep revisiting it. That's why we have, not kept continuous classes for 15-20 days so that the chapter will be over. It's not like that. DT is something which can be, which is like, wine or whiskey. It's an acquired taste. You should keep sipping it. You can't gulp it down. Correct? You cannot just have it like beer. You should have it like whiskey. One sip, one sip, one sip. So few days a week, like 7 to 10 days like that. If we break it down across 2-3 months, then you will really understand because you will be revising constantly. So that is the strategy that we have to use. Unless there is no option, then we can do it one shot. But we have option now. We have time. So we'll do it slowly. That's what I wanted to, because you'll always constantly be in touch with the subject rather than, because one shot if it's over, no, then you'll forget about the subject. Should constantly be in touch. So especially DT, IDT. That's why we have given like 1 break, 2 breaks. It will be easier. Right guys. So in income from capital gains, you need to understand 3 main concepts. First concept is called capital asset. If you understand what is capital asset, this is first one. So you need to understand what is a capital asset, what is not a capital asset. So first concept is capital asset. When that capital asset is sold, you will get some money. And that money minus cost will be obviously the capital gain. If it's a minus figure, it is a capital loss. So when a capital asset is sold, it is called as a transfer. What is transfer? What is not a transfer? So one is what? Capital asset. So a capital asset, what is a capital asset, what is not a capital asset, you will decide. And second part is, it is called as a transfer. Transfer we need to understand. Transfer is sale. So we need to understand the second part, transfer. Third one, when I sell that asset, you will get something called as FVOC, full value of consideration. Full value of consideration. That is the third part. And then of course you will be subtracting all the expenses. You will be subtracting all the expenses. And ultimately what you will get is capital gain. And with that capital gain, next you will have to pay the tax at a special rate. At special rates. This is what you need to understand. First is capital asset. Second one, that capital asset will be transferred. Third one, when you transfer it, you will get some selling price. That selling price or consideration is called as FVOC, full value of consideration. Fourth, you will subtract all the expenses. Then you will get either capital gain or maybe a loss. And if there is a gain, then you will have to pay tax at special rates. The tax at special rates will be based on something called as period of holding. If the asset is held for a longer time, it is called as long-term capital gain. Long-term capital gain, or it is short-term capital gain. It is purely based on long-term or short-term. Short-term is few months, long-term is few months. We'll discuss all that later. So the entire chapter is this only. So write down the main pointers, guys. Write down this. First is capital asset. Second one is transfer. Third one is FVOC, full value of consideration. Fourth one is expenses. Fifth one, capital gain or a loss. Sixth one, tax rate. Tax rate is based on whether it is long term or short term. Everything we have not discussed only. We'll discuss each and everything. Don't worry. I'm just telling you what all is covered in this chapter. What are the things covered in this chapter is what we are discussing. Right? So now, write the heading. So first of all, what we are discussing is, we are going to be discussing one by one this capital gain concept. First of all, section 45(1). Section 45(1). Charging section of house property is which one? 22. Charging section of PGBP 28. Like this is charging section. Charging section of capital gain is 45. So write along with me, guys. What does the gist of the charging section say? Any gain, you can write along with me. Any gain or profit. Any gain or profit arising from transfer of a capital asset shall be taxable under the head capital gains in the year in which transfer takes place. Any gain or profit arising from the transfer of a capital asset shall be taxable in the year in which transfer takes place. Very simple, guys. What does it mean? The year you sell it, you'll get money. That year you have to compute capital gains, obviously. Yes or no? If I sell it today, I'll get the money today. Which year I will compute the capital gains? This year. If I sell, basically the year I sell, that is the year you have to compute capital gain tax. But there are exceptions. However, there are exceptions to this rule, which we'll see later. There are exceptions to this rule. What do you mean by exceptions? Year of transfer will be different. Year of taxation will be different. That is, what do you mean by this? That is, year of transfer is not equal to year of taxation. Year of transfer is not equal to year of taxation. Any gain arising from transfer of capital asset shall be taxable under the head capital gain in the year in which transfer takes place. We don't know what is transfer now. We don't know what is capital asset only, first of all. But this is a charging section. That's why, because of charging section, what did I tell? We need to understand what is capital asset. We need to understand what is transfer. For it to be taxable, it has to be sold. So we need to understand what is full value of consideration, what are expenses, everything we have to understand. So first and foremost, and which year will it be taxed? Which year will it be taxed? Year of transfer. But there are certain exceptions. But let's now discuss to clause 14. You can write along with me only, no problem. First and most important, guys, what do you mean by capital asset? Capital asset means what? What do you mean by capital asset? So capital asset has three things. 1, 2, 3. So we take the entire capital asset definition. It is here, you see, A, B, C. That's it. A, then B and C. One, two, three. We'll discuss. First of all, we will only discuss one. Capital asset means property of any kind, but excludes 4 items: A, B, C, D. This is the structure. Once you understand structure, you will understand, guys. Guys, capital asset means only 3 items. Can you take anything other than these 3 items? No. But in first item, no, it just says property of any kind. But in that, they have excluded 4 things. Means these 4 items, are they capital asset or not capital asset? Not capital asset. These 4 items are not capital asset. Because now, one by one, we will discuss. So first we'll just discuss one, property of any kind, and then we'll discuss what are the exclusions from that property. Exclusions from the property means they are not capital asset at all. If it is not a capital asset, it is not a capital gain chapter only. Simple. For capital gain to arise, there should be a capital asset, most important. Second, there should be a transfer of capital asset. And third, you should get a full value of consideration, and then there should be some gain left. Other things are 3 and 4 are secondary. 2 most important things. Are you a capital asset? If yes, is it a transfer? If it's a capital asset but not a transfer, not capital gain. Not a capital asset but a transfer, no capital gain. It should be capital asset and there should be a transfer. Both should be. So if you know what is capital asset, half the confusion will get over. So let's discuss one by one. First one, property of any kind. So point number 1, property. Property. So you can write down one by one, guys. First one, property of any kind. Property of any kind. Tell me, guys, when I use the word any kind, is it movable, immovable, which one? Is it tangible, intangible? Anything. So write down any kind means what? Movable, movable, immovable, tangible, intangible. Movable, immovable, tangible, intangible. All 4 items. It is a thing held by the SSC. Held by the SSC. which asset should be, property should be held by the SSE, guys. And whether it is connected to business or not, whether connected to business or not. Property of any kind, movable, immovable, tangible, intangible, held by the SSE, whether connected to business or not. So guys, tell me, what do you think? My laptop. Okay, forget about laptop because that is a different example. Okay, now tell me, here only you see KSA is a business. AC, according to you, is it a capital asset? Yes, but that capital asset is already part of PGBP, so it will not come. It's actually a capital asset, but it's part of PGBP. When will capital gain arise? When obviously you are selling it, and if it goes beyond that block of assets and all that, then it will obviously be capital gain. So projector, definitely it is capital asset. AC is a capital asset. Everything is a capital asset. Personally also, when you are using anything, you have a house, it is a capital asset. Property of any kind, movable, immovable, tangible, intangible. You have developed a patent, you are a patent holder, you are a scientist, is it a capital asset? Yes. Correct. You have some Bitcoin, is it a capital asset? Yes. You have some shares, is it capital asset? Yes. Everything is capital asset. So this is one deadly definition. Everything is capital asset actually. Property of any kind, movable, immovable, tangible, intangible. Then you went and asked Nirmala madam, what about the spoon that I am eating with? What about the tatte, steel tatte I will eat, plate, that also capital asset? Yeah, held what? Movable, immovable, tangible, intangible. Correct. In school and all, if we won some third prize, they used to give one cup, no? Steel cup. Is that also capital asset? Yes. Held by the SSE. You are holding it and taking picture. Held by the SSE. Have you got steel cup prize? Yes, you have all got. What do you think? So the thing is, where will you stop then? Everything is capital asset means. Correct. You left your chappal outside and came. Chappal, capital asset or what? Yes. Why? See, movable, immovable, tangible, intangible. It is tangible and movable. So chappal is capital asset. Correct. Think about it. Deadly it is. Everything is capital asset. Correct. If the same chappal is worn by some celebrity, you are buying that chappal. Is it capital asset? Yes. Correct. So if you see any kind, movable, immovable, tangible, intangible, whether connected to business or not, held by the SSE. That's why they wanted to give exclusions, guys. Otherwise, you will die. Everything, if you sit and tax, imagine. Correct. Imagine you now throw that chappal. You will say scrap value 0. Chappal was bought for 100. Chappal you will not put depreciation. So you will do capital loss 100 you will put. No. There is no end to it then. Think about it. So they gave exclusions. What did they give? Exclusions. So excludes. Now we need to disclose, in excludes, A, B, C, D is to be excluded. One by one we'll discuss. First one, A. A, B, C, D, no, first one, A. Stock in trade. Stock in trade. Guys, they say stock in trade will be PGBP. It is not capital gain. Correct? No, obviously. Stock in trade. I am a manufacturer of TVs and I sell TVs. That stock, closing stock, I have 100 TVs. Is it a capital asset? Yes. But then if I use it as capital gain, then it's a problem. So it is converted to PGBP. So stock in trade is not a capital asset. It is actually part of PGBP. So what are the 4 exclusions we are discussing? In that, exclusion number A is stock in trade. Exclusion number B, movable personal asset. Movable personal asset. Movable personal asset. That steel cup that you won, thankfully, is not a capital asset. Your plate, spoon is not a capital asset. Your chappal is not a capital asset. What about this water bottle? No. What about this laptop? Laptop, if it is bought by the company, used for business, capital asset. Because it's part of the block of assets. Personally, if I use this laptop, then personal laptop, definitely not a capital asset. If I use it in business, then yes, it's capital asset. Otherwise, not a capital asset. Car. Car, if I use for business, then it will go into the block. Personal car, if you have, you use it for your personal trips and all that. Is it capital asset? No. So the beauty is, though it says everything is capital asset, there are certain exclusions. Thankfully. Movable personal asset. But then I'll ask you other doubts. Then you will be like, oh, this should I take or not? You have a 1 crore worth jewelry on your neck. This is worth more than you. What do you think? You are not capital asset. What about the jewelry? Personally, you have used for a personal purpose, for wedding, you have taken. It's not capital, it's personal, not capital asset actually. But if you sell it off, you will make a lot of money. Gold price will increase like crazy. When you are selling it, obviously you will make more profit. What do you think? So Nirmala madam said, okay, personal effect will be some items, but in that personal effect also I'll give some exclusions. Exclusion of an exclusion is what? Inclusion, yes or no? What does it say? Capital asset excludes ABCD. But B excludes something else. A is stock in trade, you leave. B is what? Personal effect. In personal effect, we'll exclude something. Exclusion of exclusion is what? Inclusion. Very smart. Because she said gold jewelry and all you will use and say personal effect. If I leave that, gone then. I will lose out on lot of money. Guys, gold jewelry bought 20 years ago. If you sell today, imagine the money you will make. What is the gold rate? How much? 9,000 something. 9,000 or 90,000? 10 grams. 90,000. You had bought it for 900 rupees 25 years ago, assume. Today it's selling at 90,000 rupees. If you say no capital gain, gone then, no? So she did exclusion of exclusion. Means what? Exclusion of exclusion is an inclusion, right? So what all did she say? She said except. You can write down except. Jewelry. She said drawing. Guys, artists and all will do drawing, no? It is sold at crores of rupees. Art is sold at crores of rupees. Drawing, painting, sculpture. Or Arun Yogiraj will make a sculpture of Lord Ram he had made. Correct? Like that he will make sculpture of many gods. You will go and buy. Is it a personal effect? Yes, it is. For your house you are buying. But is it a capital asset? Yes. Because it excludes. Exclusion of exclusion is an inclusion. Sculpture. Archaeological collection. Archaeological collection means what? Archaeology means what? The olden days. If you dig up the earth, you will find some old artifacts. Archaeological collection. Any other piece of art? Sir, I am only piece of art. That and all don't tell. Any other piece of art. Correct? My parents are the artists. All that don't tell. Right? Any other piece of art. Any other piece of art. Basically, artists, whatever they do. That is all what? Capital asset. So if you draw on Mickey Mouse, is it capital asset? Let's say you draw on shitty looking Mickey Mouse like this. Assume it's Mickey Mouse. Yeah. Okay, not bad. Mickey Mouse. Fat Mickey Mouse, yeah. Correct? Now, this Mickey Mouse, if I put one nice, what do you say, I'll print this out and all, and I'll put it, this is art by PJ. Correct? You will never find this art. Guys, nowadays art is not, I'm not even joking, there was one wall and they put one banana on the wall. that sold for 1 crore. I'm not even making it up. I swear I'm not making it up. I'll show you. You see that banana on the wall, that art got sold for, my Mickey Mouse only is better. Banana on the wall art price. See, 6.5, I told 1 crore, my bad. 52.3 crore. What is the art? You should see it now. This is the art. He went outside Malleshwaram, one banana I bought, 2 rupees. He put one tape and put it on the, I am not even joking. Some fool bought this for 52.3 crore. Correct? If I had gone, I'd eaten and come. I would have eaten and come. Banana salad. Correct? You see this. Am I kidding? No, I'm not kidding. See, a yellow banana duct taped to a wall by Italian artist Maurizio Cattelan has become one of the most talked about pieces, sold for 52.35 crore. Sorry, my bad. I told 1 crore. My mistake. 52 crore. Banana 5 rupees, sold for 52 crore. That was the art. God knows what was the thing in that. I don't know. Comedian challenges conventional ideas. They only should understand. They'll have extra money, they'll buy it. By the time he takes it home, it will become black banana. Right? So imagine. This is the art, guys. That's it. I'm not even joking. See, I'm not making it up. This is really, I'm telling. Correct? I can't go put all these pictures online. This is really true. Correct? That my this thing only is better. Give me 10 rupees enough. 52 crore don't want. Right? Yes. So tell me, is this, what do you say? Is this capital asset? Yes. Drawing is capital asset. Correct? Yes. It is definitely capital asset. So everything is capital asset. Jewelry, drawing, painting, sculpture, archaeological connection, any other piece of art, all will be what? Capital asset. Now, so movable personal asset means what? Anything that is, for example, you write down, guys. What is the example? Personal laptop, fridge, bottle. Just example I'm telling. Chappal also. These are all examples of what? Personal effect. But it excludes these things. Jewelry, drawing, painting, sculpture, archaeological collection, any other piece of art. Now guys, what about utensil, patre? Utensil. You will have utensil, no? Steel utensil. Normal steel utensil. What do you think? The what do you say? Plate, spoon, etc., which you use at home. Not a capital. This is personal effect. Guys, what about silver utensil? Pure silver utensil also will be there. You would in your birthday they would have given, somebody would have given, on your first year birthday they would have given, thanks for being born. 20th birthday, why were you born? Now on that birthday only they'll give you that plate to eat. What do you think? This silver plate, is it a capital asset or what? Jewelry, but this went to court. This went to court. Supreme Court it went to. He said, sir, I did not buy a silver plate. This is a family heirloom from, you will have your great-grandfather's silver plate. Correct? But you will keep it. It's your family heritage. So you are about to sell that. Nirmala aunty is telling, pay tax. So I am telling, no, it is my family heirloom. I will sell it. It's a capital asset, not taxable. It's a personal effect. It went to Supreme Court. Supreme Court said, yes. It is a personal effect, no tax. It is not a capital asset. What about gold utensil? Your great grandfather had gold chambu. RCB will get this, ESCN, correct? Yes. Isala cup namde. That cup your great grandfather had, gold chambu. Yes. What do you think? Is it capital asset? This also went to court. They said, boss, silver and all I agree, but gold is definitely capital asset. So any gold chombu that you have, it is called capital asset. Definitely yes. Oh, what do you mean by jewelry then, guys? Accessories, gold biscuit, or it's only chain? What is, or what metal? So write down jewelry means gold, silver, platinum, ruby, silver, alloy, emerald, everything, pearl, etc. Everything is a capital asset. Gold, silver, platinum, ruby, alloy, emerald, pearl. Guys, what if I have this? Have you seen this guy? You know, the gold shirt man. This fellow. See this guy, guys. You should see him. See. This full gold shirt. This fellow died also. Rowdy he was. He was a rowdy. Correct, he was murdered many years ago. But anyway, this he was known for this. So in his walking, he is wearing full pure gold shirt. What do you think, guys? Is it capital asset? Yes. So you would have seen no gold phone, all these things. So gold phone, pure gold phone, anything sewn into the garment. Gold sari, Kanchipuram sari, pure gold. Have you seen? Yes. Lakhs of rupees it will be. Is it a capital asset? Yes. Pure Kanchipuram sari. Kanjivaram sari. So many saris are there. No? Pure Mysore silk, which has gold sewn into it. They make it from gold. They are all capital asset. Sewn into the garment. So that gold shirt that I showed you. Saudi Arabia has gold toilets. I'm not even joking. It has gold toilets. Those people are so rich, they don't know what to do. Let's do toilets also of gold. Actually have gold toilets. Crazy, guys. Right? Like that fellow who bought 53 crore that banana. Like that jobless fellows will be there. They have so much money, they don't know what to do. So they'll spend. Right? Yes. So all this will be what, guys? Capital asset. What about your car? You have a BMW car, 1.5 crore worth. If you are using it for personal purposes, it is not a capital asset. If you are using it for business, it comes under PGBP. And definitely it is a capital asset. Car. So these are all the examples of what? Personal effect. So what is capital asset? 3 items. Second and third we have not yet seen. We have only seen the first item. Property of any kind. Property has 4 exclusions. Exclusion number 1, stock in trade. Exclusion number 2, movable personal. But that exclusion has many exclusions. Exclusion of exclusion is inclusion. What is the exclusion of exclusion? This one. Gold, jewelry, drawing, painting, sculpture, archaeological collection, any other piece of art. Correct? It will all be called what? It will all be what? Capital asset. Utensil, gold is a capital asset. Silver utensil is not a capital asset. Steel, not a capital asset. Gold, silver, platinum, ruby, silver, gold phone, capital asset. Anything sewn into the garment, capital asset. Car. Car is personal. Personal, not a capital asset. What if it's a gold car? Capital asset. Very simple. So if a jewelry comes along with it, is always capital asset. Many people have gold phones and all that, full gold phones, and that back cover also is gold back, pure gold back cover and all, they get it done. 100% capital. So you will wear some jewelry, no? Is that all capital asset? Yes. If you buy some roadside stuff, 50 rupees, is it capital asset? No. Like this, for example, I bought it in Amritsar many years ago, for 100 rupees I bought. That 100 rupees, is it capital asset? No. Is it any of these things? No. It should be a what? Gold, silver, platinum, ruby, silver, alloy, pearl, all these should be what, guys? Capital asset. It is used for personal, it is not for business. Yes, PGBP, capital asset. Got it? Simple. Doubt? Huh. Huh? Correct. I'm not even talking about income. I'm talking, is it a capital asset? The discussion is here not about what income it is. Discussion, is it a capital asset? Yes. Yeah, if it is used in business, is it a capital asset? Yes. When you sell that capital asset and it goes beyond that block, don't you charge capital loss? We have already calculated that. Capital gain. Yes. Any asset used in business is always a capital asset. Right? Yes. The chargeability may vary. If it's used in business, it's charged in PGBP. But is it a capital asset? Yes. So, one is what? Property. In that exclusion, stock in trade, movable. Third exclusion. Two exclusion, did you understand, guys? Yes. Third exclusion. Write down point number C. Third exclusion. Third exclusion, guys, is rural agricultural land. Rural agricultural land in India. Rural agricultural land in India. Rural agricultural land in India. Is it a capital asset? No. Deadly. Most important, all our ministers are enjoying with this only. They don't have to pay any tax. Income from agriculture also exempt. If you sell the agricultural land also exempt. Crazy. So I am working on a deal now. I told you yesterday. Per acre 7.63 crore is charging. 40 acres he has. Grandfather's property. 40 acres into 7, how much? 40 into 8 you do? 320 crores. And the best part is, that is rural agricultural land. So he wants to sell the land now. And what will be his income? 320 crores tax free. All politicians do this only. Income tax, can they charge tax on agricultural income? No, we saw in the basics. It should only be a state levy. Will state anyway always impose any tax? No. Politicians, all of them have farmlands. Crores of rupees worth of farmland. Their entire life is set. Got it? That is what I am trying to tell. Rural agricultural land in India. Now the next question is, what is rural agricultural land? Based on this only, people will come to you and ask for an opinion. Like last month only I gave an opinion because they wanted to sell. The case was, it was somewhere in Kerala, that land, and they wanted to sell it off to a joint development person who would come and do JD, joint development. They will construct homes in that and give a part of it to somebody. JD, joint development. So the thing is, where will it go is the question. Will it come here or somewhere else? So rural agricultural land in India. So the thing is it rural or urban? That was the opinion. Correct? It was just like a 2-page opinion. You have to give an opinion whether it's rural or urban. You have to understand all those things and give an opinion. So like that people will come to you to ask whether it is rural or urban. So rural agricultural land in India, 1. Rural agricultural land outside India, what? Capital asset or not? Yes. Write down next one. Rural agricultural land. Rural agricultural land outside India is capital asset. Just because it's agricultural land, don't think of it like taxable, not taxable. Rural agricultural land outside India, capital asset. Urban agricultural land in India, that also is capital asset. Rural agricultural land outside India, capital asset. Urban agricultural land in India, capital asset. Okay, now what do you mean by rural agricultural land? Come here guys, page 8.2. Agricultural land situated in a rural area is what we've seen. What do you mean by rural area, guys? Check it out. Anything where population is less than 10,000. See, everything population is handled by a cantonment board or a municipality. Municipality records, they will have the population. The municipality records has less than 10,000, 100% rural area. This you have to remember, guys. Less than 10,000, rural area. More than 10,000 or more, but less than or equal to 1 lakh. Greater than or equal to 10k, less than or equal to 1 lakh. Greater than or equal to 10k, less than or equal to 1 lakh. One more is greater than 1 lakh, less than or equal to 10 lakh. Third one is more than 10 lakh. Greater than or equal to 10,000, less than or equal to 1 lakh. More than 1 lakh, less than or equal to 10 lakh. Population. So guys, if my population is less than or equal to 10,000, then 100% rural area. Any land within that area is rural area. If my population is between 10,000 to 1 lakh, I'll have to go a radius of 2 kilometers around it, around that cantonment board or around that municipality. Within that 2 kilometers, urban area. Beyond 2 kilometers, rural area. Did you understand? Let's say my population is 50,000. My population is 50,000, 2 kilometers radius from my municipality, 2 kilometers radius, that will be urban. Beyond 2 kilometers, rural. What if my population is between 1 lakh and 10 lakh? Let's say population is 5 lakh. Radius will increase to 6 kilometers. 6 kilometer radius, urban. Beyond 6, rural. What if my population is more than 10 lakh, like Bangalore? Bangalore municipal jurisdiction. I should see radius of 8 kilometers. 8 kilometer radius, urban. Beyond 8 kilometers, rural. This is very important. You have to remember this. Less than 10,000, rural always. 10,000 to 1 lakh, radius 2 kilometers, urban. Beyond 2 kilometers, rural. 1 lakh to 10 lakh is the, what do you say, population. I have to go what, radius 6 kilometers. Within 6 kilometers, urban. Beyond 6 kilometers, rural. Then more than 10 lakh is the population. I have to go radius 8 kilometers. Within 8 kilometers, urban. Beyond 8 kilometers, rural. Everyone understood? Yes. So that is the thing. So if you see this chart, less than 10,000, always rural. 10,000 to 1 lakh, within 2 kilometers, this will be urban. Beyond 2 kilometers, rural. If the population is 1 lakh to 10 lakh, less than 6 kilometers, urban. Beyond that, rural. Population is more than 10 lakhs, 8 kilometers, urban. Beyond that will be rural. So if the plot of land is somewhere here and the population is more than 10 lakhs, this will be called as a rural agricultural land. Will be called as what? Rural agricultural land. Correct? Rural agricultural land. Very simple. So guys, what are the exclusions? Point number A, stock in trade. Point number B, movable personal asset. Third one, rural agricultural land. Rural agricultural land. Is it a capital asset or not? It is not a capital asset. Fourth item, D. Gold bonds of 1999 and gold monetization scheme of 2015. Gold monetization scheme of 2015. This is not a capital asset. Gold bonds issued under 1999 and gold monetization scheme of 2015 are not capital asset. What is this gold monetization scheme? Arun Jaitley came to everybody in the year 2015 and said, sir, whatever gold you have in your house that you have kept, you give it to me. If you give me all your gold, I will melt that gold and give you a ISO certified pure gold biscuit, depending on the gold that you have given. That gold biscuit also I will only keep. I will give you interest, maybe 2% per annum. Instead of keeping in the locker at home, I'll only give you money. If you have given me gold worth 10 lakhs, you will be getting, 20,000 rupees per annum. You keep it free only you are getting. That is tax free also. Exemption I'll give you. No need to pay tax. 20,000 enjoy. What is the benefit for the government? I will collect all your gold, melt everything, make gold biscuit and keep the gold. That will be my security. Gold reserve. Gold reserve of a country is always positive. I will use that gold reserve and maybe if I want money from World Bank, etc., I can give it as a pledge. Superb idea. And after few years, after 5 years, 10 years, minimum you should keep with me. That's a condition. 5 years, let's say. After 5 years, you want to take the gold back, take the gold back, no problem. Now, the thing is, you have given your gold to me. Isn't it a transfer actually? Yes. And moreover, isn't the gold capital asset? Yes. Arun Jaitley said, one more benefit I'll give you. Forget about transfer later. You don't even have to think about transfer. That gold, if you give it to me under the gold monetization scheme, that is not at all capital asset. Imagine, deadly. If it's a capital asset and then it's not a transfer, it's a different issue. He said, forget about transfer. I will not even call it as capital asset. So you freely give the gold to me. It's a very good scheme. Win-win situation. For you, it's a win. Instead of keeping in your house or keeping in your locker, you give that gold to me. I will give you pure gold biscuit, gold bar. Pure gold. You can keep it. Are you understanding, guys? Yes, that is the concept of gold bonds. So is it a capital asset or not? No. So what did we see here? 1, 2, 3. 1, property. Property excludes 4 items. Stock in trade, movable personal asset, gold monetization scheme thing, then rural agricultural land in India. But personal assets excludes 3-4 items. What? I mean, so many items. Jewelry, drawing, painting, sculpture, archaeological, all these are personal effects or not personal assets? Not personal assets. First one, property of any kind. Second one, understood guys? Second one. Here only you connect. Third one is ULIP, unit linked insurance plan. Third one is unit linked insurance policy, where 1010D exemption does not apply. Unit linked insurance policy, where premium is more than 2.5 lakh. Any unit linked insurance policy. Unit linked insurance policies, you give money to the insurance company, they will invest it in the market. That is called unit linked insurance policy. That is definitely a capital asset. Second one, guys, foreign companies, foreign institutional investors, foreign investors started investing in India. They invested in shares of Indian companies. They started doing a lot of business in India. They came to India and they started doing a lot of business by buying and selling shares of Indian companies. Foreign money coming into India, good or bad? Very good. US reserves, dollar reserves, foreign currency reserves. But aren't they doing business in India? Yes. Aren't they buying shares? Yes. Is share a capital asset? Yes, 100%. So they were buying and selling of shares, they were taking it as capital gains. Correct, no? Capital asset. But assessing officer, no. He said, are you holding it as capital asset or is it stock in trade for you? Guys, a company which is only into buying and selling of shares. Shares will be stock in trade or shares will be capital asset? Stock in trade. Stock in trade will come under PGBP or capital gain? PGBP. So assessing officer, income tax officer used to tell, hey, you are all, what is the nature of your company? Investment. So what will be the shares held? It will always be stock in trade. It will not be capital asset. So they said it is PGBP. The foreign companies in India who are buying and selling shares, they said, I am belong to PGB, I am capital gain for me because it's a capital asset. Assessing officer said, no, it is not capital asset, it is PGBP. PGBP rate was 40% for foreign companies. Whereas for capital asset, it was just, that time long term was exempt also. Short term was just 10%. Which is better? For assessing officer, 40 is better. For foreign company, 10. There's a confusion. Went to court. Some court said capital asset, some court said PGBP. They went to finance ministry. If you don't make it capital asset, I will exit the country. You do whatever you want. I'm a foreign company investing in India, buying and selling of shares I'm doing. Yeah, maybe if you understand the transaction, you are also right. Maybe it is stock in trade only, but I will not pay 40%. You either reduce the tax rate for me, or why will I pay 40% tax to you? Or you give me the option of, not option, you make it capital asset. If you make it capital asset, I'll pay 10%. What did they do? Reduce the tax rate or converted it to capital asset? So guys, actually if Indian company is trading in shares, that shares will be stock in trade. But if a foreign company is trading in shares, they change the law only for them. They said that will be called as capital asset. Imagine, deadly. Even though you are doing it as a business, it will be called as capital asset. This is purely to ensure that foreigners stay in India. That's the logic. Otherwise, there's no other logic. That's the main logic of that, right? So if you see here, see, any securities held by FII. So second one, guys, securities held by foreign institutional investors were deemed to be what? Capital asset. Actually, it is capital asset or stock in trade? Stock in trade. But you know the reason why. Clear, guys? So, securities held by FII, ULIP, all these things. Understood? So, this is the entire thing about capital. This is the capital asset definition. What is capital asset? Property of any kind. So, three items. Property of any kind, FII and ULIP. That's all. But in that property, so many things are there. 4 exclusions. Stock in trade, personal effect, gold bonds, then rural agricultural land in India. That's it. This is the entire definition and meaning of capital asset. So first is what is capital asset that we are trying to understand, and we understood what is capital asset. So the next part of the story is whether it is a transfer or not. Yes or no, whether it's a transfer or not. So we saw here, any gain or profit arising from the dash of capital asset. Capital asset, what do you mean by capital asset? We saw now. If it is not a capital asset, whether it's a transfer or not, I don't care. For example, the steel utensil is not at all a capital asset. So if I sell that steel utensil to you, I don't care. You will put one scrap value, all old steel utensils, you will sell it for 500 rupees. Is it capital gain? No, because it is not at all a capital asset. I had a Celerio car in the year 2014. Maruti Celerio I bought for 5 lakhs. In the year 2019, just before COVID, 5 years usage, 1 lakh plus kilometers used. So I sold it off. On depreciated value of that car was some 1 lakh. So I thought 1 lakh rupees I'll get by selling that Celerio car. I went to this Maruti showroom. They said 1 lakh 10,000 I'll give you. I said okay. Anyway, depreciated value only so much. That much only I'm getting. But then I put this car on this app called Spinny. Spinny is there. Car Deco. 2 apps were there. That fellow came. I thought that fellow will give me 1 lakh 10, 1 lakh 20. I'll just immediately sell it off. He said, sir, when we do the assessment, if you say I want to sell it, immediately I'll give you the money. I'm like, okay, super. The best part of the story is they offered me 3,53,000. Till today I'm shocked. How they gave me for a car used for 1 lakh kilometers 3,53,000. Now I made 3,53,000 from that deal. Is it capital gain? No. Why? Movable personal asset. Full money tax free. Right? That's what. So car and all, if you sell, no tension, guys. But if that car I'd use for business, then PGBP. Then it is PGBP. But it was a personal car, right? Yes. So if you see, that's all. So what is this capital asset? Next heading, what do you mean by transfer? So next heading is transfer. Everyone understood what is capital asset? Yes. Second, transfer. First one, sale of capital asset. Sale of capital asset. New people. What is your name? Arshita. Understood? Yes. And your name? Kamlesh. Do you understand Kamlesh? Yes. This is anyway not linked to PGBP, so you will understand. So sale of capital asset. What do you think? Yes, obviously it's a transfer. So any capital asset that we have discussed till now, if I want to sell it, if it is within the block, PGBP. When it exits the block, capital gain. But ultimately, is it a capital asset? Yes. If it is not reaching the block only, like for example, you are an individual, you have a building, you have a house, you are selling the house. Is it entering any building as such? No. Is it entering any block? No. You are not doing business, you are a residential house. You want to sell that house. Is it capital asset? Yes. That's why any sale of property will attract capital gain tax. Sale of capital asset, what do you think? Will it come or not? Yes. Second one, exchange of capital asset. Sale of capital asset, exchange of capital asset. In exchange of capital asset, one asset you will give, the other asset you will exchange. That is also like a transfer. You will sell your one building, you will sell, and in return you will get one more building, and plus some money also. Yes, that is also capital asset. So you will sell a building worth 1 crore, and you'll in return you will get a building worth 70 lakhs plus some 20, 30, 40 lakhs cash. Definitely that is also transfer. Third, relinquishment of capital asset. Fourth one, extinguishment of right. Extinguishment of right therein. Relinquish means to give up, surrender. Relinquishment of capital asset, extinguishment of right therein. So relinquish means what, or extinguishment means what? Give up or surrender. Extinguishment also means exhausting. I'll give you an example. Exhausting. So relinquishment of capital asset is to give up the entire asset. Extinguishment of right means right getting exhausted completely. Practical example, in 2020, Reliance Industries issued something called as right shares. True story. When people were battling COVID, they had the guts to actually do it. They wanted to ask money from the shareholders. That was called right issue. They said the market value of Reliance is 1,500 or something, it was 1,600 per share. They said, I will offer you the share at 1,300. What is the right share? Right share is share given to existing shareholders as a benefit. What is the face value? 10 rupees. But the market value 1,600. I am offering you discount of 300. Can you issue share at a discount less than face value? You cannot issue. But market value little bit less I can issue. There is no harm. 1,600 rupees share I am selling at 1,300 rupees. 300 rupees benefit for me. They said for every 15 shares you will be getting 1 share. So if you have 15,000 shares, you will be getting 1,000 right shares. Now, Do you get the right shares or you get the right to buy shares? They'll send you a letter saying that you have the right to buy the shares. You have the right to buy the shares. If you want to buy the shares, you can buy 1000 shares. Let's say I have 15,000 Reliance shares. I have a right to buy how many shares? 1000 shares. These 1000 shares I can buy. This 1000 shares I will now give it to anybody. I can only buy, no problem. Now, I don't want to buy 1000 shares. What I will do? I will come to you and say, why don't you? I have a right to buy 1000 shares. This right I am going to sell it to you. Give me 200 rupees per right. Right to buy how many shares you have? 1000. 1000 into 200. How much? How much? 2 lakh rupees I'll make. Did I buy the share? No. Did I sell the share? No, I sold the right. Now you are buying the share. You have the right now, you are buying the share. How many shares you are buying? 1000. You will pay 1300 to Reliance. You will pay 200 rupees to me. Ultimately, how much you paid? 1500. If you had gone in the market and bought, you should have paid 1600. For you benefit only anyway, so you'll definitely buy. But for me, what did I give up? What did I extinguish? I extinguished a right. I extinguished a right. What was the right? Right to buy the share. On that 2 lakh, is there a capital gain? Yes. Nirmala aunty will not leave you. You should always subtract the expense. Expense will be the cost. What is the cost of acquiring this 200,000 shares? Nothing. Was there any cost from me? No. What is the income? 2 lakh. What is the cost? 0. What is the capital gain income? 2 lakh. I hope you got it. So 2 lakh minus 0. 2 lakh. Tax will be paid on how much? 2 lakh. Tax will be paid on 2 lakh rupees. So this is the meaning of relinquishment of right. Extinguishment of right. Relinquishment of asset. Give up. Right? So this is the concept of extinguishment or relinquishment. Understood, guys? So first one, sale of capital asset. Second one, exchange of capital asset. Third one, relinquishment of capital asset. Fourth one, extinguishment of right therein. Extinguishment of right therein. Fifth one, conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade. I will have some jewelry with me. Let's say an auntie is wearing jewelry. This auntie, full hand and all jewelry will wear. For jewelry, different color will use. This color. See, full jewelry. Correct. So is it capital asset or stock in trade? Capital asset. So she has capital asset. She will only come and sit in a shop and tell all this I am now selling. So that same auntie will now sit in the shop. Correct. And all this jewelry will now be sold. Correct. Capital asset now is converted to what? Stock in trade. That is possible. If you have so many artifacts at home, you can bring it and start selling, no problem. So the jewelry, tell me, the jewelry was worth, when you bought it, your cost of acquisition, when you bought it, it was 10 lakh. But today, the fair market value of that jewelry is 60 lakh, assume. Did you sell it? No. You just bought it from the house to shop. You are only starting a shop now. You have converted it to stock in trade. Tell me now. After, and you sold this jewelry for 80 lakh. Tell me guys, what will be my PGBP income? PGBP income. Income will always be sale minus cost. Sale is always 80. Will you do 80 minus 60 or 80 minus 10? That's the question. What is my PGBP income? 80 minus 60 or 80 minus 10? Ultimately, what's the gain? Gain is 100% 70, no doubt about it, because 10 lakh is the cost. 80 lakh is the selling price. 80 minus 10, 70 is actually the gain. My question to you is, my profit and gains from business or profession, PGBP is how much? 80 minus 60 or 80 minus 10? PGBP. PGBP is always 80 minus 60, 20 lakh. Because the moment it converts to stock only, I am selling, no? But then, Nirmala madam said, what about 60 minus 10, 50? 20 I will charge here. This 50 also I have to charge, no? Yes, Nirmala madam says this 50 will be capital gain. This 50 will be what? Capital gain. And how? When I bring my jewelry from the home to the shop, she said that itself is a transfer. That is what I am telling. See, conversion of capital asset into stock in trade will be a transfer. Did you actually transfer anything? No. You just brought it from the house to the shop. But is it a transfer? Yes. And what will be the consideration? Even though you didn't do anything, the fair market value will be deemed to be consideration. So what is the capital gain? FMV minus cost. 50 will be capital gain. What will be PGBP? 80 minus 60, 20. Ultimately, how much you are paying tax? 70. That is correct only, but split into two heads. Capital gain, PGBP. Now you understood. You are asking now, how can that be capital asset? Caller. Now you understood. She didn't see only. Super. So how can it be capital gain? It's not about capital gain or PGBP. It is what? It is about capital asset. What is the capital asset? Jewelry. 80 minus 60, 20 is what? PGBP. It's the same capital asset. And 50 minus 10, sorry, 60 minus 10, 50, that is what? Capital asset. That is under which head? Capital gains. So same stuff, two different things. So conversion of what? Capital asset into stock in trade is transfer. Did you sell it? No. Did you extinguish it? No. You just brought it from your house to the shop. That is also Nirmala madam is telling transfer. And the FMV, fair market value, that is in my example 60, that will be deemed to be sale consideration. FMV will be deemed to be sale consideration. Did you actually get any money? No. But she'll say assume that you got money. And when will you actually get the money? When you actually sell that jewelry later for 80 lakhs. That 80 lakh is split into two, 20 and how much? 20 and, so 70 lakh gain. 70 lakh gain is split into two, 20 and 50. 20 and 50. Got it? Next point, 1 or 2 points, and I'll give you a break, short break. Like this is 5, 4. Like 6th point you write, then we'll take a short break. 6th point, guys. Conversion of 6th point. Okay, 1, 2, 3, 4. Okay, 6th point. Compulsory acquisition of capital asset Compulsory acquisition of capital asset. Bangalore Metro. So many buildings have been taken over. So everything has been demolished. Is it voluntary or compulsory? Compulsory. They will come and tell in your entire apartment complex A block will go, because A block I will destroy because metro line is coming there. Is it a transfer? Yes. Is it willingly or unwilling? Unwilling. So government will demolish your house which you didn't want to demolish, and after 2 years government will give you compensation. When they are demolishing your house, is it a transfer? Yes. When they are giving you that money after 2 years, do you have to pay tax on that? Yes. That act of taking over that property from you, that is also transfer. That is also a transfer. Two things are there. We'll finish that and then we'll take a break, because this at least this section will get over. Now guys, yes, this both you already know. That's why I'm quickly doing 7, 8, 9. 3 things. All the 3 you know. You know all the 3. That's the best part. 7th one, guys, write down: allowing possession of immovable property. Allowing possession of immovable property. Allowing possession of immovable property. 8th one, transfer of shares. If I explain these things, you'll tell, oh, correct, you had discussed it before. Transfer of shares of any cooperative society. Transfer of shares of cooperative society. And 9th one, ZCB. ZCB, zero coupon bond. That is redemption of ZCB. All the 3 we have discussed. Quickly, 2 minutes and then you can take a break. Allowing possession of immovable property. Allowing possession of immovable property. Guys, today the building is being constructed. 2 years later, they will allow you to take possession. But 3 years later, they will register the sale agreement. When is the transfer valid according to you? In 2022, you paid the amount. In 2023, they'll allow you possession. Means they'll allow you to stay in the house. In 2024, the sale agreement you will formulate and register with the sub-registrar. Ownership is transferred which day? Ideally 24 only. Actually, legally 24. But according to income tax, the day that person allows you to take possession, transfer has happened. As per income tax 23, it is also part of the Transfer of Property Act. Transfer of Property Act. TOPA. Transfer of Property Act. So what is it, guys? Transfer of Property Act. It is always based on transfer of possession. So according to Nirmala Madam, when is the house transferred? 23. Even though legally, as per law, other laws, property law and all, when will it be registered? 24. Next one, ZCB. I'll come to that 8th point. 9th one, ZCB, zero coupon bond. What is zero coupon bond? I will issue a bond at 70 rupees. While redeeming, I will pay 100. So when I'm redeeming, is it a transfer? Answer is yes. That's all. You already know concept of ZCB. Point number 8 also you know, I had discussed it in house property, concept of deemed owner. What did I tell you? Apartment homes do not have, apartments, etc. Are you the owner of the apartment or do you have shares of the society? Shares of the society. Apartment is fully transferred in the name of the society. Society will give you shares. You don't have ownership of the house. You have ownership of the shares. Tomorrow you want to sell the house. Will you sell the house or sell the shares? Sell the share. Selling the share is called capital asset. That we know. Selling the share is called transfer. That we know already. Simply to clarify they are telling. That's all. Share, is it a capital asset? Yes. But am I selling the share or selling the house? House I am selling actually. But in what way am I selling? By selling shares. And Nirmala madam is selling the shares is equal to selling the house only. Everything is called as a transfer. Just to clarify, she is telling. That's all. Got it? So this is the, we did capital asset, we did transfer. Now we need to understand after the break, what is this long term, what is this short term. That has been amended in Finance Act 24 by Nirmala. Very, very important concept. Easy, no? What is there? Very easy. Capital gain also is very easy. Take a break, guys. Okay. So, guys, we did what? Capital asset done, then transfer done. Very simple. Now, as I told you, the most important part is there is something called short-term capital gain and long-term capital gain. We have to understand what is short-term, what is long-term. Once you understand what is short term and what is long term, other things will become very simple. And also there is, of course, a period of holding and many other things. In that short term, long term, period of holding, how many years, etc. All that we need to see. Most important thing is the types of capital asset. What was there before, what is there now, all those things. And unfortunately for our attempt, which whatever we are writing, you need to remember certain dates, because till a certain date different thing was there, after a certain date different thing. But anyway, now everything is now merged into one going forward, but in the exam also they'll ask accordingly. But either way, we should understand that. So now write down the next heading, types of capital asset. We have understood now what is capital asset. Based on the type of capital asset, period of holding will be decided. So the next part of the story is types of capital asset. Types of capital asset. Types of capital asset. So guys, now there are only two types. Earlier, no, there used to be three types. Earlier there used to be three types. Let me write that also, it will be easier for you to understand, that's why. Because in that first and second type is the same, no change. Third type is shifted to either 1 or 2, that's all. There are three types. Period of holding 1 year, period of holding 2 years, period of holding 3 years. If it was 1 year, less than 1 year short term, more than 1 year long term. Less than 2 years short term, more than 2 years long term. Less than 3 years short term, more than 3 years long term, it used to be there. But now that 3 years concept only is removed by Nirmala madam. Now it's either 12 months or 24 months. Less than 12 months short term, more than 12 months long term. Less than 24 months short term, more than 24 months long term. So big change is 3 years concept is no longer there. So first of all, let's keep it simple only. Let's keep two things. Write down, guys. First, point number A and point number B. That's it. First one, any security Any security including units, including units, including units. This came from 23rd July 2024. Units came from 23rd July 2024. Finance Act 24. Guys, what is our previous year for our exam? 1st April 24 to 31st March 25. 1st April 24 to 31st March 25. So Nirmala madam said from 23rd July 24 onwards I am changing the full concept. So till 23rd July different concept. Otherwise it is from, so let's just stick to what is there from now only. 23rd July, what is the concept? Including units. Units means what? Units of any mutual fund. Whenever you invest in mutual funds, they will allot something called units to you. Mutual fund will use that money. You will pay to mutual fund. Mutual fund will use that money and buy shares of various companies. Will they give you shares or will they give you units? Units. Those are units. So if you see any security including units, next is listed. These are all keywords. Listed in recognized stock exchange in India. Any security including units listed in recognized stock exchange in India. Second one, units of Unit Trust of India, UTI. Units of Unit Trust of India, UTI. Third one, units of equity oriented mutual funds. Units of equity oriented mutual funds. Fourth one, ZCB, zero coupon bonds. First, any security including units. This including units is important because it's an amendment. Listed in a recognized stock exchange. Second one, units of Unit Trust of India. Third one, units of equity oriented mutual fund. Fourth one is ZCB, zero coupon bond. So guys, for these items, it is 1 year. Means less than or equal to 1 year is short term, more than 1 year is long term. If you hold these assets for less than or equal to 1 year, short term, more than 1 year, long term. For short term, different tax rate, for long term, different tax rate. That's why short term, long term are important. For short term, it's a different tax rate. For a long term, it is different tax rate. So less than or equal to 1 year, short term, more than 1 year, long term. Got it? Yes. Any security including units listed in recognized stock exchange in India, units of Unit Trust of India, units of equity oriented mutual fund, then ZCB, zero coupon bond. Less than or equal to 1 year short term, more than 1 year long term. Point number B, first one, immovable property. Second one, shares. Shares means what, guys? Equity shares, preference shares. Shares of company other than that covered in Part A. Shares of company other than that covered in Part A. Third one, all other assets. This all other assets used to be 3 years before. Now in Finance Act 24, they have made it 2 years only. Other assets, other than all these things. Other assets. Correct. Immovable property, shares, equity, preference of company other than that covered in Part A. Third one, other assets. This will be 2 years. So less than or equal to 2 years short term, more than 2 years long term. These other assets also, what has happened? You can say shifted from 3 years concept. Shifted from 3 years. Shifted from 3 years to 2 years. Finance Act 24 from 23rd July 2024. This one date you please remember, 23rd July 2024. So many changes happened on 23rd July 2000. If it's your birthday or girlfriend's birthday, boyfriend's birthday, easier to remember. 23rd July 2024. Got it, guys? So this list you have to remember. So what is it? That's all. Earlier it used to be 3 years and all. Now nothing. Any security, it used to be excluding units before. Now they have made it including units. Listed in a recognized stock exchange in India. Units of Unit Trust of India. Units of equity oriented mutual funds. Means those mutual funds which only do what? Equity oriented funds. Means they are only selling equity funds. Then zero coupon bonds. Then any immovable property is under B. Shares of equity or preference of company other than that covered in Part A. Then all other assets will now be how many years? 2 years. So some examples. I will give you the examples. You need to tell me the you need to just write down those examples and then tell me the answer. Yeah. Write down these 4. Tell examples and write down these 4. Then after that you only need to solve. There are some 15 that I will give you, 10 to 15. Then you need to tell me what is the period of holding. For example, first one, house property. What will be the period of holding? 1 year or 2 years? For house property. House property is immovable. So 2 years. So like that. Write down, guys. 1, 2, 3, 4. House property. Second one is jewelry. Third one is equity share of Reliance Industries Limited listed in Bombay Stock Exchange. Preference shares of Infosys listed in NSE. Like that, some 10 I'll give you. Done. 4. Next. 5, 6, 7. Shares of PJ Private Limited, which is unlisted. Next, unlisted units of UTI. Unlisted units of UTI. Next, debt-oriented units of Sheila Mutual Fund, listed in Bombay Stock Exchange. There is no such mutual fund. Don't go search Sheila Mutual Fund. Sheila Mutual Fund listed in Bombay Stock Exchange. Five, 6, 7. Done. 8, 9, 10. Shares of Tesla Incorporated. Shares of Tesla Incorporated listed in US Stock Exchange. ADR means what? American Depository Receipt. American Depository Receipt of Infosys listed in NASDAQ. ADR of Infosys is in NASDAQ. Right. 10. Equity oriented mutual fund of KSA Mutual Fund, unlisted. Units of business trust, listed. 11 unit of business trust, listed. Also you write down bonds, debentures, gold. 12th one. 12th one, bonds, debentures, gold. Bonds, debentures, gold. Come on guys, take 2 minutes and write the answer. You only read the chart, write the answer. Come on, try. House property, 2 years. Jewelry, 2 years. Everyone understood? Equity shares of Reliance Industries Limited, listed. How much? 1 year. Preference shares of Infosys, listed. 1 year. Shares of PJ Private Limited, unlisted. 2 years. Why? It's unlisted. Unlisted units of UTI. Unlisted units of UTI, 1 year, because it never said listed or it just said units. Good. So unlisted units of UTI is 1 year. Debt oriented units of Sheila Mutual Fund, 1 year, because all units now listed has come under 1 year category. Everyone understood? Debt oriented units of Sheila Mutual Fund, listed in BSE. All listed units is now how many years? 1 year. Shares of Tesla in US Stock Exchange, 2 years, because it is not listed in India. It is not listed in India. American Depository Receipt of Infosys, listed in NASDAQ. American Depository Receipt of Infosys, listed in NASDAQ. Answer. 1 year or 2 years, guys? Answer. security, but it's listed where? In Nasdaq. Is it listed in India? No. Answer, 2 years. Equity oriented mutual fund of KSA mutual fund. Unlisted. Equity oriented mutual fund of KSA mutual fund. Unlisted. What do you think? 1 year or 2 years? 1 year. Why? It is unlisted equity oriented mutual fund. Is it listed or unlisted? Unlisted. So where will it come? 1 year or 2 years? 1 year. What is covered here, guys? Only units of equity oriented fund only covered, not other things. Units of equity oriented mutual fund. These units will be business trust and other things. So it is what? 1 year or 2 years? 1 year. Units of business trust listed. 1 year. That will be 1 year. Bond, debentures, gold, etc. 2 years. Earlier it used to be 2 years. Now it is 1 year. That comes under other asset. Bond, debentures, gold, etc. will come under other assets. Did you understand this? Please go through again. Please go through. Most important, guys. Please go through. Any doubt? Please let me know. You are able to understand? Third bench. What's your name? Behind. What's your name? Are you able to understand? Yeah, because I can't see you. That's why I'm asking. Right. So what is the 12th one? Bonds, debentures. All that is what? 2 years or 1 year? 2 years. Got it, guys? Simple. So this is the list now. This is the list. Types of capital asset. Next, write down section 48. So section 47, 45 we have done. 47 little bit we did. What is transfer? And then capital asset we discussed, 214. Types of capital asset also done now. That's all. These are the capital assets. It will either come in A or B. Sir, if it is not covered in A, it has to come in B only, because B will include other assets. So whichever capital asset doesn't come in A will come in B. You need not remember B also actually, anything. You just remember A and go. Everything else will have to be B only. Earlier it used to be A, B, C, so you have to remember A and B. Now apart from B, which always had 2 points, now they have added the C point also into B. So you have A, B, C or only A, B? A, B. That's also. Remember A and go. B is sorted. Very, very important chart. That is whatever we have done. Plus all examples already given. Okay. Next, write down, guys. What is it? Computation of capital gain. Computation of capital gain. Section 48. Section 48. Computation of capital gain. What did we see in capital gain? We saw there should be a capital asset. It's there. There should be a transfer. It's there. And there should be the gain should be short term or long term. That also we know. Now we have to see the computation. What will be the computation? As I already told you, there will be full value of consideration minus expenses. What will be the expenses? It will be transfer expenses and cost. That's all. After transfer expenses and cost, what will remain only will be the gain. Simple. So write on the first point, short-term capital asset. In case of short-term capital asset, is less than 1 year, less than 2 years as the case may be. Less than 1 year, less than 2 years as the case may be. That is short-term capital in case of STCA. From now, whenever I say STCG, it is called short-term capital gain. Whenever I say LTCG, it is long-term capital gain. STCA, short-term capital asset. LTCA, long-term capital asset. These are the terminologies that we are going to use from today. Last bench, are you understanding? Behind you. Understanding? Yes. Right? So STCA, LTCA. STCG, LTCG. right? Now, one by one. So, guys, you only tell me, guys, what will be the, let's say you take a house. House is 2 years or 1 year? 2 years. I buy a house today, in 6 months I'll sell it off. Short term, correct? No. So, I buy it for 1 crore, sell it for 1.1 crore. So, what will be the capital gain? Is it just 10 lakh? No, there will be transfer expenses also. Registration fee, stamp duty payment, some lawyer if it is involved, lawyer expenses, the drafting expenses, all that I have to subtract. So it is not just 1.1 minus 1, it is also legal expenses. Let's say 2 lakhs I have spent. Okay, okay. I bought the house for 1.1 crore. I built one additional floor for 5 lakhs. Can that also be subtracted? I got one lift installed inside, one small lift, 5 lakh rupees. That's okay. Let's forget about additional floor. I got one extra item inside, lift, small lift. My grandmother stays, she cannot go upstairs, so one small single person lift and all you will get now, like a chair. Sit on that chair, it will take you up. Like that, one small chair I installed for her, 5 lakh rupees I spent. Now I am selling off that, including the lift. So is it 1.1 crore minus, I told you that legal expense 2 lakh? Is it 1.1 crore minus 1 crore is definitely the house, no doubt about it. 10 lakhs I have. In that 10 lakhs, can I subtract 2 lakh also, 5 lakh also? What is 2 lakh? 2 lakh is legal expense. What is 5 lakh? Lift. What do you think? Or everything I can subtract? So guys, any additional expense if I spend on the house to make it look better, or additional things that I add, that is also allowed to be subtracted. That is called cost of improvement. Two things you have to understand. One is cost of acquisition. Three things: transfer expenses, cost of acquisition, cost of improvement. What is transfer expenses? 2 lakhs. What is cost of acquisition? 1 crore. What is cost of improvement? Lift, 5 lakhs. Everything the government will allow me to subtract, right? So the structure will be like this. For short term capital asset, particulars and rupee, full value of consideration less transfer expenses will be my net consideration. And from net consideration, two things: cost of acquisition, cost of improvement. Cost of improvement will always be capital expenditure, and whatever balance remains will be called what? Short term capital gains. Copy. Example if you want to write, otherwise you leave. Brokerage, stamp duty, all those things. So if I bought a house and for 41 crore and sold it for 2 crore in 1 year, whatever, you can write down the example if you want to, or leave it. But left side you have to write for sure. That's the structure of short term capital asset. So full value minus transfer, net consideration, cost of acquisition, cost of improvement, STCG. Got it? Now tell me guys, in long term is there any change? Long term will be what, more than 2 years. Let's take a house for example. Now this is very interesting because there is a change by Nirmala madam. That's why it's very interesting. I'll explain the concept also. Let's say your great grandfather's property is there, which he had bought in 1960. He had bought it for just 1 lakh rupees. In my consulting, I find many people. Chaprasi fellows who are crorepatис. Yesterday I met one Chappar fellow. 100% rowdy he is. But he is worth 100 crores. No class, nothing. He called me 3 times now. I cut the call. I told I am in class. That English also you won't understand, I'm sure. Right? So that guy, his father had bought in 1960 actually. In full Malleshwaram, 3 corner properties he had bought, guys. That time Malleshwaram was one jungle. So he had bought for some 10,000 rupees it seems. Today each building is worth 80 crores, 90 crores, each one. So it's actually worth more than that actually. More is at least worth 500 crores easily. Correct? So no class, but then family, generational wealth he has. He has nothing to worry about. His children, all covered. Think 8 properties in Malleshwaram. If you have, you only think about it. In Malleshwaram, you own 8 properties, which actually belongs to your great grandfather. So let's say, so now he's building all these things and giving it on rent. That's what he's doing. So each rent from one building only, he'll get a rent of from 15 lakhs per month. What more? No, nothing to do. Chilling life. Right? So some brokerage we have to pay 1 lakh rupees. For that he is calling 10 times every day. Imagine guys, a person who is earning 15-16 lakhs per month minimum from one building. He needs some 1 lakh brokerage. Somebody hasn't paid 1 lakh. For that he is calling regularly. So if you see, I mean, you can take it in any other way. You can take it as anyway he's asking for somebody else's money, or he's so sharp that he will not leave 1 rupee also. You can take it whatever way you want, but that's how it is. So let's say that fellow only 1960 his father had bought a property at 1 lakh. Today in the year 2025 it is worth some 15 crore. My question to you is, what is the capital gain? Is it forget about other expenses, improvement and all. For one moment we'll forget about all that. Is it 14.99? 14 crore 99 lakhs. Is that the capital gain? Or I should at least bring this to little bit using inflation, some inflated cost of acquisition I should do. Little bit of inflation, because inflation is also 1960 what was the value of money, today what is the value of money, right? So little bit of inflationary items I should add, and then let's say after adding all the inflation, 1 lakh in 1960 is valued today, let us say at around 5 crore, assume. So what would the capital gain be? 10 crore or capital gain will be 14.99 crore? That is my question to you. What is the most logical thing? 10 crore. Most logical thing will be 10 crore. That cost, you should make that cost adjusted for inflation. Cost I bought it 1 lakh, I agree, but I have to adjust it for inflation. Today that 1 lakh would have been 5 crore. But market value of the property is 15 crore. That's it. That is only the gain, no? Market value minus cost. So that 1960, whatever I spent 1 lakh, today it would have been 5 crore. But actually, a 5 crore worth of property I am buying at 15 crore. That is the value of this area. Nothing can be done. Malleshwaram area is crazy. It looks like one old area. All only Tata Sajji stay there. But the thing is, it's super costly. You want to buy and all here, very costly. It's almost unaffordable to buy any property in Malleshwaram. So my question to you is, what should I take? I should actually take that inflation adjusted cost. So government only started this only in the year 2001. Imagine. Till 2001 they had no clue what to do. In 2001 they started something called indexing. And 2001 they said, let me take 100 rupees in 2000. In 2001 they made it 102. In 2003 it became 104, which means 100 rupees in 2001 would be 102 in 2002, like that. Today this value is around 370 or something. 363 is the value today. Means 100 rupees in the year 2001 would be 363 rupees today. If you spend 363 rupees today, it's like spending 100 rupees in 2001. So if I had bought a property, let me not take 1960, let me take today. If I had bought a property in 2001, if I had bought a property in which year, guys? 2001. If I had bought a property, yeah, see, today it is 363. If I had bought a property, let us say, let me keep it simple, in 2001 only, if I had bought a property for 1 crore, in the year 2024-25, what would it be? Correct? It would be 3.63 crore. That's what I am trying to tell. How 3.63? 1 crore into 363 by 100. Basically, in 2000, for when the value was 100, 1 crore. If the value is 363, how much? 363 into 1 crore by 100. It's simple, nothing but 1 crore into 3.63, which is 3.63 crore. Right? An asset worth 1 crore today is valued at 3.63 crore. If I am selling this property, let's say I bought it in 1 crore in 2001 only, today market value of that property is 8.63 crore, assume. What is the adjusted cost of that? 3.63. What is the selling price? 8.63. What is the capital gain? 5 CR. On the other hand, if I don't take that indexation only, that's called indexation. If I don't take indexation, what would be the cost? Direct, 8.63 minus 1. How much will it be? 7.63 will be the capital gain. Now tell me, Nirmala madam will give you indexation or no indexation? Will she give you indexation or no? Yes, they say you will definitely get concept of indexation. When did it start? In the year 2001. Now my question of 1960, what to do? 1960 property I am doing, keeping it now, guys, but I don't know, the indexation starts only in 2001, unfortunately. But from 1960 to 2001, can I do something about it? Can I do something about it? Can I calculate what? Inflated value. But there is no how to calculate inflated value. You have to calculate for sure, because I bought it in 1960. You are telling I am calculating only from 2001. Don't you think so I have to bring that 1960 value to 2001 value? Yes or no? Yes. So I went to Nirmala madam and said, madam, if I bought in 2001 or anything after 2001, no problem. You have given me that entire list. That list is given here, you see. 8.12. In 8.12 page number, I have given you the indexation. This is government released index. 100 rupees became 105. 105 became 109. 109 became 113. 113 became 117. Like that, see. Today, 100 rupees in 2001, 2002 is today how much? 363. That's the logic. Let's say you bought a house in 2013, 2014 for 1 crore. At 1 crore you bought, but the indexation is 220. What will be the indexation at 363? 363 into 1 divided by 220. That's how you should calculate always. Indexation of the year of transfer divided by indexation of the year of purchase. When is the year of purchase? 220. Year of transfer 363. Indexation of the year of transfer divided by indexation of the year of purchase. 363 by 220. Always. But what if my house is in 1960? We'll come to that, don't worry. Now, indexation is allowed or not? Indexation is allowed. But in 2024-25, auntie created one bomb. What bomb? She said indexation removed. Huge. It was created some crazy amount of controversy. In July 2024, same 23rd July, she said, I will remove the concept of indexation. Then people cried, people fought. Then she did some correction. All that we'll see later. But did you understand the concept of indexation? Today, as of today, indexation is there or not? It was there. She removed, again brought it back. For some cases only. So indexation concept you should understand. Right? For this part I still haven't discussed. Later we'll see. Let us for argument's sake only assume I bought the house only when? 2001. Correct? For argument's sake, I will assume I bought the house in 2001 for 1 crore. What is the index value? 100. I sold the house in 2024. What's the index value? 363. So, 1 crore property is today valued at 3.63 crore. My next question to you is, in 2010, I also built another floor. For that I spent 20 lakhs. So today, what will be my full value of consideration? I told you 8.63 crore. I told you I sold it for 8.63. Less indexed cost of acquisition will be how much, guys? 3.63. Everybody with me? 3.60. Because 1 crore value today is how much? 3.63 crore. So index cost of acquisition will be 3.63. My question is, cost of improvement I have spent 20 lakh. Should I subtract 20 lakh or should I subtract indexed cost of 20 lakh? Index cost should I do or only cost? Obviously I should do index cost. So in 2010 how much was it? You see 2010, 2011 value was 167. Means this 20 lakh is represented as 167. But today at 363 how much is it? Tell me. 363 into 20 by 167. 363 into 20 lakh by 167. How much? See, 20 lakh spent in 2010 is as good as spending how much? 43 lakh 47. Let me keep it round figure, 44 lakh. It's like spending 44 lakh today. Spending 20 lakh in 2010 is like spending 44 lakh today. Everybody with me on this? So I should also subtract indexed cost of improvement 44 lakh. And then what I get will be my capital gain. Short term or long term? Long term. I'm using it for bloody 25 years. It is long term. So there is only one difference between short term and long term, and that is called indexation. That also auntie removed. Now there is no difference only. For many items there is no difference. In the calculation there is no difference. Got it? It is called, what is the only difference? Indexation. And indexation is what? Into the year of purchase, into the year of sale. That is this year. Divided by the year of purchase. When did you purchase it? Whenever you purchase. 2010, in this improved, all those things. So write down the next one, guys. Next part of the story. Yes, long-term capital asset. No change, only this left part you write down. Long-term capital asset. Full value of consideration less transfer expenses, net consideration less indexed cost of acquisition. Right, index cost of acquisition, index cost of improvement. What is indexation, guys? Into the year of transfer divided by year of sale. You see, you wrote this down? All right, down. FVOC is what? Same. Full value of consideration less transfer expenses, net consideration less index cost of acquisition, less index cost of improvement, LTCG. Right. Now what is index cost of acquisition? Index cost of acquisition into index for year of transfer divided by index for year of purchase. Cost of improvement also will be same. Index for year of transfer divided by index for year of improvement. Index for year of transfer divided by index for year of improvement. Done. Now, my question to you is, I still haven't cleared that doubt. 1960 what to do? 2001 if you bought it, you understand this one. Now if you bought in 1960 what to do? From 2001 to 2024 you can do, but 1960 to 2001 you have to do something about it, no? What will you do, guys? It went to Nirmala madam long time back to finance ministry. They said okay, what is inflation? It is nothing but the market, fair market value, not the real market value. So they said, now you only tell me, is it fair for you to take 100 from 2001, or you should also take the inflated cost from 1960 to 2001? You should take the inflated cost. So in that example where my grandfather had bought a property at in 1960, In 1960, he bought a property for 1 lakh. In 2001, 40 years later, that property would have been 60 lakh. Would have been 60 lakh. And from here I can take it, or it would have been 1 crore, assume it would have been 1 crore. Let's say I bought it for 10 lakh. That would have been 1 crore 40 years later. And in the year 2024, I sold. So this 1 crore will become 3.63 crore. That is okay. But this 10 lakh to 1 crore also I should show, no? I cannot show this 10 lakh into 363 by 100. I cannot show. I cannot make it 36 lakh 30,000. It is very, very wrong. I should show the growth from 10 lakh to 1 crore, and from 1 crore I can do 363 by 100. That makes sense. I cannot do 10 lakh into 363 by 100 and ignore this 40 years. That is 100% wrong. So you are Nirmala madam. What option will you give? Cost is 10 lakh. Let's say the fair market value of that property as on 2001 is 1 crore. You will allow the assessee to take 10 lakh or 1 crore, whichever is high, or 10 lakh or 1 crore, whichever is less as the cost. Yes, you will allow the assessee to take 10 lakh or 1 crore, whichever is high. Sir, how do we know the fair market value? There will be valuation experts. In 2024, when you are selling the property, you will go to the valuation expert and say, sir, my great grandfather had bought it in 1960. I'm giving you the documents. Kindly bring that value to 2001 and give me. From 2001, Nirmala aunty only has given me formula. Into 363 by 100 I will do and close it. But till 2001, bring the value, sir, please. You use all your method, whatever you have earned, whatever you have learned. So that fellow will apply based on which area, all that he will have calculation. He will calculate that 10 lakh has now shot up to how much? 1 CR. And he will give me the property value in 2001 for 2000. And I will do the rest. What I will do? 2001 into 363 by 100. Sorry, that 1 crore into 363 by 100, and I will close it. But whose job is it? Valuer's job to make it from 1960 to 2001 using various You and I cannot do it. This concept is called valuation. So Nirmala madam has now told, for all properties acquired before 1/4/2001, what is the formula? What is the cost of acquisition? Cost or FMV, whichever is high. Write down, guys. 4th point now. Understood? Everyone understood? Logic? Note number 3. Property acquired before 1/4/2001. Property acquired before 1/4/2001. Cost or FMV, whichever is higher. Cost of acquisition or FMV as on 1/4/2001, whichever is higher. Understood? The last part of the day is one more interesting. That's okay. I don't want to simply strain you with so many concepts. Too many we have learned today. We'll chill. But this concept is interesting. We'll finish it off with this. Our fellows are brilliant guys. Our fellows are some other level only. So what they were doing, I'll tell you. That same. You tell me now. This happened recently. In 2020 only this amendment came. See, my grandfather had bought at 1 lakh, 10 lakh. How much it has become? 1 crore as per 2001. From here I will make it no problem. I used to go and tell the valuation officer, sir, this 1 crore no, please make it 6 crore. If you make it 6 crore, for me what will happen? 6 crore into 363 by 100. 18 crore I will show. And I will give you 1 crore fee, sir. I will give you 1 crore. Please make it. Actually it is 1 crore only. But corruption. I used to go to the valuation officer and say, please hike it up. Because this is purely valuation by whom? Valuation officer. Valuer used to be there. I used to go and give money and make it very, very high. Only to save tax. I would have saved how much earlier? 8.63 minus 3.63 would have been the what? Cost. Now let me say I am making it around, forget about 1 crore. I am just telling make it 2 crore, it's okay. 2 crore into 3.63, 2 crore into 3.63 is how much? Now 7. I am showing loss. So cost only will become 7, no? Selling price is 8. Cost is 7. Okay, not loss, 1 crore. Where is 3 crore? Where is 5 crore capital gain? Where is 1 crore capital gain? I can't hike up to 6 and all. I can hike up little. 1 crore can become 2 crore. I used to tell him, please hike up to 2 crore. You please take 10 lakhs. I'll give you 10 lakh rupees fees. Enjoy. You just have to make it 2 crore and sign and give. People were cheating. Nirmala madam found this out. Then she went to that particular sub-registrar's office. They'll have all land records from before. They went and saw, you please tell me what is the, sub-registrar's rate that time in 2001. Some cases it was available, some cases it was not available. Wherever it's available, you please tell me what is it. He told, madam, it is actually just 1.1 crore, madam, sub-registrar's amount, or maybe 90 lakhs is the value in the sub-registrar's office. That is popularly called as stamp duty value. Stamp duty value in the year 2001 in this area was 90 lakh. How much is this fellow showing? 2 crore. Cheating. So now Nirmala madam, you need, they are cheating only, no? Will you give them 2 crore or will you give them 90 lakhs? 90 lakhs. Correct? So what did Nirmala madam do? She added one dialogue. She said, FMV can never be more than SDV, deadly. FMV as on 2001 can never be more than SDV. What is SDV? Stamp duty value. 2 crore can never be more than 90 lakhs. So she said, before you do cost or FMV, whichever is higher, before that you should do one more step. FMV or SDV, whichever is lesser, deadly. This was inserted very recently, 5 years ago, in 2000. Till then people were cheating left, right, center. In 2020 only she inserted, during COVID amendment. Very good amendment. I am telling you the reason of each and every amendment. Simply don't mug up. Correct? So in what did he say? FMV can never be more than SDV, because you are cheating. Because FMV is done by external party. SDV is government approved stamp duty rate. Records are already there. You cannot change all that now. So step number 1, SDV if it's available, or FMV, whichever is less you do. And from that step, you compare the cost. Cost or step number 1, whichever is high, that's okay. Instead of cost or FMV, whichever is higher, let us tweak it. It is what? FMV or SDV, whichever is less. That is step number 1. And using that step number 1, what you will do? Cost or step number 1, whichever is high. Then it makes sense. So very, very important amendment came in the year 2020. Copy. The dialogue she told was, this is Finance Act 2020, Nirmala Sitharaman special. Correct? What did she say? FMV as on 1/4/2001 cannot be more than SDV, where SDV is available. What is SDV? Stamp duty value. Government approved property rate for that area. You cannot change it. In 2025, can you go and change those records? No. So, what is the first step? FMV or SDV, whichever is less. Then, cost or step 1, whichever is high. FMV or SDV, whichever is less. Then, cost or step 1, whichever is high. Got it, guys? So, FMV as on 1/4/2001 or SDV as on 1/4/2001, whichever is less. Then cost or step 1, whichever is higher. This is the scene. Now, last question. Note number 4. What about the cost of improvement which was done before 2001? We did cost of acquisition. That we do valuation. FMV you will take. What about cost of improvement? In 1960, my great-grandfather bought one land. In 1980, he constructed one building on it. That's cost of improvement. So what will you do with that value? Write down last one. Cost of improvement before 1/4/2001. Cost of improvement before 1/4/2001. Cost of improvement before 1/4/2001. What do you think? Should you go for valuation or not? Answer, ignore. Why? No. What is the reason? It is not a small part. What if I have invested 1 crore and all if I have invested? Land I bought 10 lakh. But on it I have made 40 lakhs extra worth of stuff. That is improvement. But still lawmaker says it's ignored. Why? Give me the proper logic. There is a logic. You already know it. You just have to think. Cost of improvement before 1/4/2001 should be ignored. I am asking you why. Sorry? So? No. It's not that. I have to consider it, but still they are telling ignore it. Why? Adding to cost, how? 1960 to 2001 I am taking valuation. 1980 to 2001 should I ignore? I'll add to the cost for sure, but they're saying the indexation should be ignored. And the cost also they ignore is what they're saying. Why? Guys, very simple. In the year 2001, what do? I will take FMV. Don't you think so? FMV will include that also. It's already included, no? What is fair market value? Market value of that particular land including whatever you added as on 2001. So the person who is making the assessment will consider everything, land, building, and then only he'll make FMV. There's a lot of difference between FMV of a normal land and FMV of land plus building. Building may have depreciated, but building is building, right? You will obviously have a lot of value for that building. So he already would have considered cost of improvement in the FMV. So why is it ignored? What is the reason? It's already considered in FMV. Hence you will ignore it. It's already considered in FMV. Guys, that's about it. Cool. So tomorrow we will continue with this. We'll see other areas. So today we discuss full in depth what is capital asset, what is transfer, and what is cost of, what are the types of assets, what is period of holding, and also other. So many things we discussed. Easy, difficult? Yes guys, happy morning. How are you all? Fine, awesome. So guys, let's quickly revise yesterday's discussion and then we will move on with other things. Yesterday we discussed a very interesting thing called capital gain. In that, let me see what all. So first of all, there has to be something called as capital asset, and then that capital asset has to be transferred. Capital asset must be there, it should be transferred. And then after transfer, what did I say? That whatever you get money, no, it is called FVOC. What is FVOC? Full value of consideration. FVOC is full value of consideration. And then we have to subtract the expenses. What are those expenses? We'll see. That is stamp duty expense, cost of acquisition, all those things. And then ultimately you will get something called capital gain. Now that capital gain, I have to understand whether it is short term or long term. So short term capital gain, long term capital gain. So ultimately the taxation is on the year of transfer or in the year of, when is the taxation happening? Always in the year of transfer. Moment the transfer happens, taxation will happen. But there are certain exceptions. We will see that later as already discussed. First we discuss what do you mean by capital asset. Capital asset means three items. Item number one, property of any kind. Second one, securities held by FII. I told you the logic also. Third one is ULIP, unit linked insurance policies. Why? Because it's linked to the market. So if I sell that, obviously it will be taxable. Now, property of any kind excludes four items. What are those four items? That is stock in trade. Second item, movable asset. That is personal movable asset, the personal effect. Third item, rural agricultural land. Fourth item, gold bonds, gold monetization scheme. I explained the gold monetization scheme also to you. Right? Property of any kind. Now, first one, the stock in trade you leave. Personal effect, property of any kind, movable personal asset. Laptop, fridge, etc. But that also has exclusions. Exclusions of exclusion will be an inclusion. Means jewelry, drawing, painting, sculpture, archaeological collection, any other piece of art, all this will be capital asset because it's excluded from the personal effect. And all that visa, utensil, gold, silver, all those things. Rural agricultural land, very simple. If the population of a cantonment is less than 10,000, it is rural or urban? Rural. Then what do you say? 10,000 to 1 lakh. Then the radius within 2 kilometers, urban. Beyond 2 kilometers, rural. Then 1 lakh to 10 lakh. Within 6 kilometers, urban. Beyond 6 kilometers, rural. Then more than 10 lakh. Within 8 kilometers, urban. Beyond 8 is rural. That's all. All that only they'll give in the exam only. Population is 35 lakh, like that they'll give. So you just need to figure out. And it is within 16 kilometers, like that they'll give. So then you need to understand where it is rural or urban. Or mostly 99.99% they'll actually give this is urban land, rural land, like that. Rural agricultural land in India only is not taxable. Urban agricultural land in India taxable. Rural agricultural land outside India is also taxable. Gold bond, gold monetization scheme, all that we saw. Then, first of all, what is a capital asset? Point number one. Second one, what is a transfer? What is a transfer? Sale of capital asset, exchange of capital asset, relinquishment of capital asset, extinguishment of right therein. Relinquish, extinguish means giving up or surrendering. Then conversion of capital asset into stock in trade. Compulsory acquisition of capital asset. So conversion of capital asset into stock in trade. If you have some jewelry at home, you bring it to the shop. The day you bring it to the shop only, it's a transfer. Even though you didn't do anything, you didn't sell it to anybody. You just brought it into the shop. That is only a transfer. Then sale, exchange we saw. Relinquishment, extinguishment, we gave an example of right shares. So when you give up your right, that is called as extinguishment of a right. Compulsory acquisition of capital assets. So when they do compulsory acquisition, even though you don't want to sell, automatically it will become a transfer. Then yes, immovable property, as per the Transfer of Property Act, the moment you give, allow what? Possession of immovable property, that is a transfer. Then in the house, flats, transfer of shares of any cooperative society also is a transfer. They'll never ask you explain transfer. That's all BCom question. Explain transfer with examples. So you have to write all 8. Like that they'll not ask in the exam. They'll give you a sum and you need to solve it. That's it. ZCB, zero coupon bond redemption. Then we saw types of capital asset A and B. Only 2 types now. Very easy. Any security including units. Earlier it used to be excluding units. Now it is including units. With which date you should remember? 23rd July 24. Any security including units listed in recognized stock exchange in India. Second one, units of Unit Trust of India. Third one, units of equity oriented mutual funds. Fourth one, ZCB. All that is 1 year. After that, point number B, immovable property, shares of equity or preference shares of company other than that covered in Part A, then other assets. Other assets used to be 3 years, now it is shifted to 2 years. So anything less than 1 year will be short term, more than 1 year will be long term. Similarly, for point number B, anything less than 2 years will be short term, more than 2 years will be long term. And after this, guys, we saw the concept of cost of acquisition, COA, correct? And also the entire concept of short term and long term. So in short term, what all expenses will you subtract, guys? Transfer expenses, and then cost of acquisition, cost of improvement. And then in long-term capital asset, I explained the concept of indexation. It is index cost of acquisition, index cost of improvement. But the indexation started only in the year 2001. So the question is, what happens before? So I need to go to a valuer. Whichever year you had bought, from there till 2001, he should help me fix the value. So the rule was cost or FMV, whichever is higher. Cost of improvement before 1st April 2001 will not be considered because it will be part of the FMV. But I told you people were bribing these valuers and were hiking up the FMV. It was way more than something called as circle rate or stamp duty value. So they brought about one more rule as early as 2020, or rather as recent as 2020. Just 5 years. And what did they say? That imagine 1960 is the law. This is 2020, just 5 years ago. So they brought about this wonderful rule where they said first step should be FMV or SDV, whichever is less. And then step number 1 or cost, whichever is high. 90% of the students don't even know this logic. They'll just mug up and go. Right? So you should not mug up. You should understand everything as per the law. So that is what we saw. So that is the SDV and all that. We have seen that. Very simple. So let us see. Indexation, there have been few changes, but ultimately, guys, indexation is still applicable. For some they have removed, for some they have kept. Right, guys. Now, check it out. Concept capsule. page 8.1 in our material. You have the this thing. You can see the screen also, no problem, or you can see the mobile, no issues. State which of the following are capital assets for Miss Deepika, an actress who has furnished the following details. Sale proceeds on sale of Audi car for 70 lakhs. It was used exclusively for personal purpose. Answer. Yes, car was acquired for 50, she sold it for 70. Nobody will buy for 70, but anyway. In that 20 lakhs, is it capital gain or what? Not a capital gain. It is a receipt which is not at all taxable. Sale proceeds of Ben's car used for her profession was sold for 10 lakhs. WDV was 7.5 lakh. This will be capital gain because it is used in the business. So the same capital asset has gone into the business, gone into the block, and in the block you are selling it. So block will no longer exist. So the difference will be deemed to be short term. Even though the car was used for 5 years, whatever it is deemed to be short term. Why is it deemed to be short term? I told you the logic in PGBP. Because for short term, it is a higher tax rate. For long term, it is a lesser tax rate. You have already taken the benefit of depreciation. Again, will you take benefit of long term? No. So the moment it goes into block of asset, even if it is held for more than 2 years also, it is always gain will be short term. The block of asset concept. We saw section 50 sale of assets. I told you in PGBP, this section 50 is actually capital gain chapter. But we have to do that here is what I had already told you. So we have done it already, right? Yeah. Sale of personal jewels made of platinum and paintings for 1 crore. My Mickey Mouse painting they sold for 1 crore. When banana can sell for 53 crore, my Mickey Mouse is good enough for 1 crore. Which were acquired for 25 lakhs. Capital loss. Yes, all the same, guys. Then you see, state whether the following transactions are subject to capital gains. Shobha Builders Construction Company have sold 25 flats for 25 crores. Is it capital gain? No. For them it is what? Stock in trade. Perfect. Stock in trade. Jupiter Capital, a Mauritius-based FII, foreign institutional investor, sold Indian securities in Indian company held as stock in trade. For them it is capital asset, guys. Yes. But I told you, no, that is what was happening. Though they held it as stock in trade, Indian assessing officer was charging 40%. He said, no, I don't want 40%. Make it capital asset. Only for them specifically, they made it capital asset. Even though you held it as stock in trade, for him it is called capital asset. Whereas Shobha Builders, it is stock in trade. It comes under PGBP. So Shobha Builders PGBP, second one, capital asset. Even though it is stock in trade, it is capital asset. We have understood the logic. This question number 3, we have already solved one. We have written everything. You can solve this. Right. Next. See, Mr. Aditya. Mr. Aditya purchased house property for 1,06,000 on May 15th, 1987. Following expenses are incurred by him for making addition or alteration to the house property. Cost of construction of first floor in 93-94. Should I take or ignore? I should ignore. Why? It is like cost of improvement. I should ignore because it happened before 1/4/2001. FMV will include 1,06,000 also, 1,35,000 also. FMV only when they will give the FMV here. FMV will include everything. No problem. Cost of construction of second property, should I take or not? Yes, this I should take. Reconstruction of the property 11-12, yes, I should take. These are all cost of improvement. Renovation is called cost of improvement. Fair market value on April 1, 2002 is 4,50,000 rupees. It is 0102 is what they are saying. House property was sold by Mr. Aditya on August 12, 2024 for 7,20,000 and expenses were 60,000. Compute the capital gain for assessment year 25-26. Assuming indexation is still there. Right? Assuming indexation is still there. How will we calculate? What it would be? Overall sales consideration less expenses, net consideration. Then index cost of acquisition, index cost of improvement. Two index cost of improvement will come. One in 2005, 2006, one more in 2011, 2012. The indexed value you can see in this chart. I told you, no, yesterday when I showed you one chart. They'll give in the exam, guys. Don't worry about it. They will only give in the exam, the figures. You don't have to do anything. This one. Page 8.13. This date should be 1st April 2001, not 2002. Not 2002. FMB always on 2001 you should take. Anyway. Yeah. So, indexation in 2005, 2006, how much was it? 11, 12. They'll only give in the exam, but in this they have not given, so we'll see. 2005, 2006 is 117. 2011, 2012 is 184. And 2024, 25 is 380, 363. Right? So how will it be? Write down, guys. And we'll have to make some changes here, but write down. Full value of consideration 72 lakh, correct? No? How much is it? 7 lakh 20,000 they've given. It's actually make it of 72 lakh, guys. Okay. Full value of consideration 72 lakh. Less transfer expenses 60,000. Right? 72 lakh less transfer expense 60,000. Net consideration 71 lakh 40,000. 71 lakh 40,000. Less indexed cost of acquisition. Indexed cost of acquisition. What is the index cost of acquisition, guys? It is cost or FMB, whichever is higher. Cost or FMB, whichever is higher. What is higher? Cost is how much? Cost. When did he purchase? What did he purchase for? How much is the cost here? 1,06,000. What is the FMB? 4,50,000. SDB they have not given. So, cost or FMB, whichever is higher. So 1,06,000 plus 1,35,000 actually. It will be, but ultimately you cannot take this. You should only take this 1,06,000 or 4,50,000, whichever is higher. Which one? 4,50,000. That 4,50,000 is as on 1/4/2001. From there I should bring it to 24/25. So I should use indexation. What is the index of 2001, 2002? 100. What is index of 24/25? 363. So what we should do? You check cost of acquisition. This is obviously old. I will just delete it because you need to give me the answer now. So cost of acquisition 1,06,000. FMB as on 1/4/2001 4,50,000, whichever is higher. So 4,50,000 into 363 by 100 is what I should take. How much? 16 lakh 33,500. Yes. 16 lakh 33,500 is what you should take. Got it, guys? Cost of acquisition 1,06,000, FMB 4,50,000, whichever is higher. SDB not given. Wherever it's given only you should take. Less indexed cost of improvement. Guys, 3 improvements are there, no? See, first one is cost of construction in 93, 94. Cost of construction in 93, 94. Ignored or what? Ignored. 93, 94 ignored. Second floor construction in 2005, 2006. Second floor construction 2005, 2006. Then reconstruction in 2011. So second floor construction is 3 lakh 10,000. Guys, everybody, are you understanding? Cost of improvement, first one is cost of construction of first floor, ignore. I've told you why you should ignore. Because it's part of FMV already. Second floor construction in 2005, 2006 is 3 lakh 10,000. 3 lakh 10,000 was in 2005, 2006. I should bring it to 2024, 25. So into 363 divided by 117. 363 divided by 117. How much? Everyone understanding logic? Last bench. Yes, sure. Tell, it's okay. Just came now means? Oh, of this sum, okay. You just came now. Fine, no problem. But yeah, this is okay. You can go through that later. So 3 lakh 10,000 into how much? 363 by 117. Why 363? 2024-25, because that's why I am selling. Why 117? Because in 2005, 2006, that was the index. Means 100 rupees in 2001 is 117 rupees in 2005, 2006. And 100 rupees in 2001 is 363 rupees in 2024. That's the logic. Anyway, so do this. 3 lakh 10,000 into 363 by 117. Answer. 9 lakh 794. 5. Now, reconstruction in 11-12. 11-12 indexation was 184. 363 by 184. 4 lakh 206. This will be full cost, guys. So 71 lakh 40 minus 1633 500 minus 961 795 minus 493 206. You are understanding? Sure. Next to you, Soumya, right? You are understanding? This camera is, I can't see you. That's why I keep asking. Right. How much, guys? 4 lakh? 40 lakh? 500. 1 rupee or like, fine. 499. Perfect. Alright, so this is what it is. Now this entire indexation only she removed, guys. Nirmala aunty. According to Nirmala aunty, it is how much? 72 lakh minus 60,000 minus 4 lakh 50 minus 3 lakh 10,000 minus 2 lakh 50,000. That's all. So what she did know in 2024 in this budget, she said, actually how you should calculate, she said, 72 lakh minus 60k minus this one, cost of acquisition, 4 lakh 50,000 minus 3 lakh 10, no indexation, direct cost, 3 lakh 10,000 minus 2 lakh 50,000. This is what she told. So tell me how much this will come gain. Direct, no indexation, only the figures. 61 lakh 30,000. See, with indexation 40 lakh 51 499. Without indexation, 61,30,000. Deadly. So, that is what happened. Tell me you only. Which is better? Index without index. What if I tell you that if you do the indexation, rate will be 12.5% tax rate. If you don't do indexation, rate will be 20%. Second one. Ulta I did. This will be stupid. Sorry guys. I would have to wake up. Good morning. Yes. What if I tell, if I tell you, Nirmala madam will come and tell you, okay boss, don't do indexation. How much will it come up to? 61,30,000. Don't do indexation. If you don't do indexation, I will give you a lesser rate. Which is a lesser rate? 12.5%. But if you do indexation, you have already taken indexation benefit, no? So pay little higher tax. So she has told this will be 20%. Just calculate the tax, how much will it be? This is the tax rate. 8 lakh, 300 here, 7 lakh, 66,000. Now tell me guys, which is better? See, magic. So, Nirmala auntie, when she told indexation is not there, people started crying. Then she said, see the next picture, no, see the tax rate. Tax rate have reduced from 20% to 12.5%. Why are you crying? Correct? Still people started crying. People said, no, it is cheating, blah, blah, all that. Right? In some cases it was profit, some cases it was loss actually. In some cases, see, this is because of the figures here and indexation, etc. Sometimes it may change, no? Some amount may be high, amount may be low. So it can go anyway actually. The old law was how much? You take indexation, but tax rate will be 20%. In the new law in July 2024, she came and said, no indexation. But tax rate will be less, 12.5%. But in some cases it was high, some cases it was low. They started fighting left, right, center. So only in October 2024, crazy, he again changed the law. He said, you either follow with indexation or you follow without indexation, your choice. Whichever is less or whichever is high. Tax, whichever is less or whichever is high. No, your choice means you will pay high. No, they said SSE's choice. SSE's choice. SSE can do with indexation, SSE can do without indexation, his choice. If he uses indexation, higher tax rate. If you don't use indexation, lesser tax rate. So then there's no tension only, no. If I tell you no indexation, you'll fight with me. So I am telling you do old or new, your wish bro, I don't care. Your wish. So this is the rule as of today. That's why you should know indexation also, you should know without indexation also. But this is only for house, not for anything else. If you sell jewelry, no indexation. If you sell jewelry, no indexation. If you sell shares, no indexation. Indexation is restricted only to which one? House. Residential house property owned by an individual. All that we'll see later, but I just want to tell you what the logic was. In July 2024, what she told indexation removed for everything. Concept of indexation only is not there. Indexation concept was introduced in a landmark Supreme Court judgment called Manjula Shah. Very famous judgment in the income tax, regime. Manjula Shah judgment. So essentially, Nirmala Madam's amendment wiped out Manjula Shah's amendment, her judgment. He said nothing, no indexation now. But when people started crying, especially people having family heirloom property like this many years ago, Then they said, okay, leave it, no problem. We will simply start fighting. I cannot sit and justify. They said old method, new method, whichever is less. Or old method, new method, whichever is beneficial to you. Whichever is beneficial to you means obviously you will use whichever is lesser only. No, they'll never said whichever is less. They said whichever is beneficial to you, use. This is only for house. Only for house. So, indexation we have to study for this only. The exam, if they ask you, you should do both the methods. Before with indexation, without indexation. And without indexation, tax rate is less. With indexation, tax rate is more. You should calculate this and then tell which is better. Sir, what about jewelry? No indexation. What about shares? No indexation. What about painting? Mickey Mouse? No indexation. No indexation. Removed. But that indexation was removed after a particular date. Before that particular date, if you sell, indexation is still there. But after the particular date, if you sell, no indexation. All that we'll see later, guys. That's all later. Leave it. Did you understand this? Yes. So that's why I wanted to show you both the things. So now it's clear. So when Nirmala madam said no indexation, it created huge hangama. Because people were not understanding. Indexation is not there, I understand. But see the rate also, no? From 20% they have reduced it to 12.5%. But I agree, in some cases 20% only was better after indexation. That's why what happened was they're like, okay, leave it, man. I cannot sit and justify each and every single time to my people. I'll give them only the option. So they changed the law again in October. 24 was this thing, election year, no? So first an interim budget came in February. Interim is what? Just before the election, the budget will come. If a new government is formed, that budget is useless. After interim budget, one final budget will come in July. But in 24, peculiar case was interim budget also came, final budget also came in July. After that, the many changes happened by October end. And in those many changes that happened, this was one major change. They said this or this, whichever is beneficial, you use. Because in July, in February, she didn't tell anything. In July, she put one bomb. What bomb? Indexation removed. July, August, full fighting. That's why September, when she came again, September, October, she said, okay, don't cry. I'll insert one more rule. This or this, whichever is beneficial to you, use. Only for house, but nothing else. Only for house. So as of after July 2024, there is no indexation on any asset. Deadly. It is only available for residential house property owned by individual. Sir, what about residential house property owned by company? Can company own homes? Yes, why not? Can company own homes? Yes. Company has bought a house for their director. Of course they can. Will it apply for them? Indexation. No. Indexation, the benefit is only for these family properties which are there for many years. So residential house property, and that too only for a particular date. After that, no. We'll see that, all that we'll see later. But did you understand the logic? Yes. When I asked you first one, which is better, you told 40 lakh. But after putting the rate, you have understood which is better. 61 lakh only is better. This is the beauty. So this is the major change for you in capital gain. You need to figure out which is which. Okay. Perfect. So normal dialogue, you should write this only, guys. Calculation of capital gain of Mr. So and so, you should write capital asset, year of transfer. Based on the marks, you write this. Some 5 mark question, 6 marks question, 4 mark question, you should write this. Calculation, this one line you anyway have to write, but write, I would suggest write for everything. Calculation of capital gain of Mr. So and so, Mr. Dash, for assessment year, which one? 25, 26. This will always be assessment year 25, 20. Depends on the question. Capital asset, previous, year of transfer. I'm just deleting all these things. Period of holding. This is like a format I'm giving you of Mr. Dash or AY Dash. Calculation of capital gain for Mr. Dash for assessment year Dash. Capital asset, year of transfer, year of acquisition, year of transfer, type of capital asset, LTCA or STCA. This is the format. You can always write the format. Got it, guys? Simple. So like this, you should write always. Capital asset will be house. Year of transfer will be generally 24, 25. Year of acquisition, year of transfer, period of holding. Period of holding will always be from year of acquisition to year of transfer. Then you will come to know whether it is short term or long term. If it is less than 1 year in category A, then it is short term. More than 1 year, long term. In category B, less than 2 years, short term. More than 2 years, long term. That's all. Actually, they have simplified. To be honest, they have simplified for you. Quite easy now. Earlier, it used to be, all this indexation for everything you should give. Now, nothing like that. Also, same. Right. Now, guys, now important point. Write down. So, some special points will write, some other things will write down. Did you read the material yesterday? Yes. Understood? Yeah. So if you see, this 50 AA and all we'll do later. The amendment, some amendments I have not done on purpose because you need to understand something else. But this I have already given you all these things. 50 AA is later we will do. 24 months, 12 months. That's it. This amendment later we will see. Then see, this will be the expenses, full value of consideration, indexation, all that we saw. Yes, as I told you, on or after 23rd July 24, indexation benefit is not available. That's all. No indexation benefit except house. House only. That we'll see later. But ultimately, nothing. 23rd July is a very important dialogue date. Today, if I am selling my jewelry, which I bought in 1980, is there indexation? No. But today, if I sell my house, then there is indexation. Anyway, I'll give it in a structured format, then you can read the notes later. Yes. Next, write down, guys. Next heading. 45.2 Conversion of capital asset into stock in trade. 45.2 Conversion of capital asset into stock in trade. Little bit we have to spend some time here. 45.2 Conversion of capital asset into stock in trade. Actually, guys, before that, sorry, just above it you can have one more heading. What is the general rule? Taxation will be in which year? In the year of transfer. But I told you there are exceptions. You can write down the heading exceptions. Exceptions to the rule of, exceptions to section 45. Exceptions to section 45. What does 45 say? Charging section. Taxation will be in the year of transfer. But exceptions are 4. For CA Inter, 4 exceptions are there. We will discuss one by one. The first one is this only. Conversion of capital asset into stock in trade. So, what will you write the heading as? Exceptions to general rule of section 45. Exception to general rule of section 45. Now, what is the general rule? So, you can write on general rule is equal to year of transfer is equal to year of taxation. Year of transfer is equal to year of taxation. Exception, year of transfer is not equal to year of taxation. Taxation is happening some other day. Which day we'll see, or which year we'll see. In that first point, conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade. Right. Now, guys, tell me something. You have jewelry at your home, which you bought in 2010. In the year 2021, you will bring it to the shop. Is it transfer? Yes. Yesterday only you saw that is transfer. The moment you bring it to the shop, I told you should see the FMV. You bought the jewelry at 10 lakhs, but when you are bringing it to the shop, it is 40 lakhs. So that 40 minus 10, 30 lakhs, that is a transfer for sure. Will you pay tax that day only when you bring it to the shop? No. When will you pay tax? When you actually sell it. That's all it is. You sell it maybe 2 years later, 3 years later, only then you will bring it into the tax net. Right? So example I'll give you, then you can copy. I'll show you the example. Hold on. Sheila auntie. Yeah. So Sheila auntie had in previous year 2001-2002, she had jewelry costing 20,000. Right? So she transferred it as stock in trade in the previous year 18-19. Fair market value was 60,000 rupees. But she actually sold that only in the year 23-24 for 80,000 she sold. Yesterday also similar question only I asked you. The actual gain is 80 minus 60 or 80 minus 20? 80 minus 20 only is the actual gain, but that gain is split into two. One is capital gain, one is PGBP. What is PGBP? 80 minus 60 will be PGBP, but 60 minus 20 will be capital gain. Capital gain has arisen in the year of transfer, that is 18-19. But when is it actually taxed? In 23-24. When is it taxed? In 23-24 in this example. That's the beauty. is an exception. Year of transfer is 18-19, but year of tax 23-24. In 23-24, I will pay tax under two heads. PGBP 80 minus 60. Capital gain 60 minus 20. All the calculations will be only till 18-19 for capital gains, but the taxation will be happening in 23-24. Understood? This is the first exception. What is the general rule? Year of taxation is equal to year of transfer. What is the exception? Capital asset converted to stock in trade. Year of taxation is different from year of transfer. Transfer happened in 18-19, but when is the taxation postponing? Taxation is postponing to which year? 23-24. The year you sell the stock in trade, then only it will happen. Can you tell me the ulta thing? Stock in trade converted to capital asset. Already discussed. If you tell no and all, that's all. Already discussed this. Come on. Stock in trade converted to capital asset. Yes, FM. This is not in capital gain. It is in PGBP. Remember, builders, they had stock in trade. Ground floor, they converted 2 homes into, this thing, what do you say, office. What did you do? FMV only you took and you created to the P&L account directly. So then, but stock, the stock will be the debited. The cost will be debited. So ultimately, that gain will be that. That is PGBP. So stock in trade to capital asset is PGBP. Capital asset to stock in trade is capital gain. Capital asset to stock in trade is capital gain. Stock in trade to capital asset is PGBP. You had a Shobha Builders, ground floor converted to 2 homes, and the 2 homes is now into offices, will be PGBP. This is ulta. I had a capital asset, that I converted to stock in trade, that is capital gain. Right? So capital asset to stock in trade will be capital gain. Since capital is there, you can remember that. Capital asset into stock in trade will be capital gain. So capital comes first, so that will be capital gain. Right? So general rule 45(1), capital gain will be in the year of transfer. But 45(2), year of transfer I should ignore. What is year of transfer? Conversion of capital asset into stock in trade is a year of transfer. I should ignore that. When is the taxation? Whenever the jewelry is sold. 23-24. Got it, guys? Yes or no? And then my PGBP will be what? 80 minus 60. And my capital gain will be 60 minus 20. And the 20 also I should give indexation. Assuming it is sold before July. Or no? Assuming it is sold before 23rd July. Will I give indexation? Yes. If it is sold after 23rd July, no indexation. If it is sold before 23rd July, indexation. Sold after 23rd July, no index. That is why I am teaching both. Sir, but I will not study. You have to study. For your previous year, it is 24-25. And 23rd July comes in 24-25. You have no choice. Next year, fellows, they are chill. Next year, fellows, what is their previous year? 25-26. For them, do they have to study 23rd July? No. But I'll just tell in that class, okay, you remember this date, I'll tell. But my all explanation will be what? No indexation. But for you, you are in a peculiar position. You have to study till 23rd July one thing, after 23rd July one more thing. Are you understanding? Yes. So here I'm assuming that the asset is sold before 23rd July. You will get indexation. Asset sold after 23rd July, since it's jewelry, no indexation. Are you understanding, guys? Yes. And obviously it is indexation will come because it is taxed in 23-24. I told you sale happened in 23-24. Obviously it will be 23rd July 24 only, no? Or no? Won't it be 23rd July 24? Before 23rd July 24? Yes. Got it? So I should give the indexation of which year? Don't by mistake also give indexation of 23-24. I told you everything is sticking on only till 18-19. Only what is getting postponed? Taxation. Indexation is not getting postponed. Taxation is getting postponed. So taxation you should give till which date? 18-19 only. That is the most important thing in the exception. Everybody with me? Now you can copy it. Coolly copy, no hurry. Everyone understood? Everybody? Yes. Copy, coolly copy, guys. With the example, first you write the example, then I'll scroll down. Hold on. Yeah, come on. Right. You drew your own drawing. Don't want to do drawing, you can just say jeweler. Okay, no problem. Taxation part. Why indexation also you write down. Why is the indexation, guys? Because it was sold before 23rd July 2024. Because they're telling 23-24 here. Obviously, indexation is available. Any sale before 23rd July 2024, indexation is available. More on the tax rates later. One. Why? Cost is 20,000, no? 2001, 2002. Why are you doing on 60,000? 60,000 is a sale consideration. FME will be deemed to be sale consideration. This is the on conversion. FME on conversion is a sale. What is the cost of acquisition? When did she buy the jewel? 20,000 in 2001, 2002. 160. 20,000 into 280 by 100. What is 280? That is the indexation on 1890. Commonly made mistake, they will take indexation on 2324. Wrong. Only thing that is postponed is taxation. Nothing else. The only thing that is postponed is taxation. LTCG 4000. Done, guys. Did you get it? Everyone understood? Yes. So it is, that is the first exception. First exception. Right. The same question. Write down. Note. 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 If part of stock in trade is sold, part of stock in trade is sold. The same question, guys. If part of stock in trade is sold. That is 40% is sold at 80,000. 40% is sold at 80,000. Guys, this 80,000, no. Here I am assuming all the jewels are sold. What if only 40% were sold? So what will be my PGBP? Sale consideration 80,000. Less cost. 60 is for the full jewels. I am only selling 40%. Yes, 60,000 into 60%. Oh, sorry, 40% is 24,000. So in this example, first example, full 100% is sold at 80. I am giving one more example that 80,000 only represents 40% of the jewels. So in 23-24, sale consideration of 40% of the jewels is 80,000. Cost of that jewel is 60,000 into 40%. So 24,000. So 80,000 minus 24,000, that will be my PGBP. What will be capital gain then? Capital gain. No, FMB will be how much? 24,000. Minus cost. Cost. 40%. 8,000, no? 8,000 you will give indexation. Same. Ultimately, you should make the same thing. So, 1,600, correct. You got it? How is it 1,600, guys? 24,000 minus 22,000. How did you get 24,000? Same. 20,000 into 40%. Then, no. 1 second. I'll do that. So, capital gain, how did you get? 60,000 is the FMV, right? Into 40%. So, only 40% is sold, 24,000. What is the cost? 20,000 is the cost into 40%. How much? 8,000. If you do indexation of 8,000, so 280 divided by 100 will be 22,400. So what will be the capital gain? 1,006. Like this also you can do, or since 40/40 is here, 24 minus 20, 4,000 into 40% also you should do. You can do that also, will come to the same thing anyway. Leave it, you do like this only, it's fine. So what is the ultimate, capital gain? 1,600. And what is PGBP? 80,000 minus 60,000 into 40%, 24,000, 56,000. So write this as part of stock in trade is sold, 40% is sold at 80,000. Write this one. This is capital gain calculation. This PGBP calculation. Copy down. So in the exam they will ask you, these are all important areas. We'll solve 2 sums. You'll understand that much better way. Capital gain 60,000 into 40%, 24,000. 20,000 into 40%, 8,000. 8,000 I should do indexation. 8,000 to 280 by 100, 22,400. So what is the capital gain? 1,600 only. PGBP 40% was sold at 80,000. Cost 60,000 into 40%. Guys? Okay, next. Question 9. Mr. Kiran, an individual, purchased unlisted shares in Indian companies as investment on 10/5/2012 for 30 lakhs. On June 1, 2018, he started a business as a dealer in shares and transferred 50% of such holding to business, conversion of capital asset into stock in trade. FMV of the entire shares was 60 lakhs, but how much was transferred? 50%. The shares held in business were sold by Kiran for 34 lakhs on October 20, 2024. Compute the taxable income. What had happened, guys? In 2012, he had shares worth 30 lakhs. 2018, converted 50% into stock in trade. FMV 30 lakh for the entire 100%. 50% was converted to stock in trade, means 30 lakh worth was converted to stock in trade. And this 30 lakh was the cost for 100%. What will be for 50%? 15 lakh. So my only figures that I should see is 30 lakh and 15 lakh. And anyway, ultimately this full business, the shares were sold for 34 lakh. What will be my PGBP? 34 minus 30. 34 minus 30 will be PGBP. Correct or not? Yes. What will be capital gain? 15 lakh. No, 15 lakh I should do cost. No, this thing I should do indexation. Allowed or not indexation? Indexation is there or not? No indexation. Why no indexation? But guys, that is if you sell the shares after July. That's okay. But the thing is, I already told you, indexation is not, I am not doing indexation till 24. No, I am doing indexation till 2018. Or no, what is postponed only? Taxation is postponed. Correct? If you sell the shares and drag the indexation till 24, that's a different issue. This is a very peculiar case. Am I dragging the indexation? No, indexation stops at 2018. What is getting postponed? Taxation is getting postponed. That's all. The money from my pocket is going out only in 24. Indexation is allowed or not? Yes, it is allowed. Why? Indexation stops in 2018. Is 2018 before 23rd July 2024? Yes. Hope you got it. Right? That's what. You see? So capital gain 60 lakh into 50%, 30 lakh. India's cost of acquisition. When did I bring it into business? 1718. 1718 or 1819? I had to change it. 1819. I keep changing the question. So 1819. Correct. 1819. And when did I buy it? 1213. I bought it in 1213. Check the list and tell me what is the indexation for 1213 and what is the indexation for 1819. 1819? 280. 1213? Everyone got it? Yeah. So how much is 15 lakh into 280 by 200? 21 lakh. Which means what is the long term capital gain? 9 lakh. Direct, easy. Guys, indexation is allowed because I am not actually dragging the indexation to 2024. The indexation stops in 18. Only the taxation is postponed. So in the conversion cases, indexation is 100% allowed. I hope you understand. Even if I sell it in 2030 also, indexation will be allowed because it stops in 2018. Business income easiest. 34 lakh minus 30 lakh, 4 lakh. Come on guys, write down one question, mark it as very important. Are you done with this? Oh, sorry, you didn't copy. Copy it down. Then I'll dictate one sum. It is similar to a previous year question which had come. You tried solving that. After you solve that, we can take a break. Done? Write down a sum, guys. You can write your name only. Your name. You can write Mr. or Miss Dash. Your name. Had bought a land. Had bought a land in the year 2002-2003. Mr. or Miss Dash, that is your name, had bought a land in the year 2002-2003 for 10 lakhs. For 10 lakhs. The land was converted to stock in trade. The land was converted to stock in trade on 1/4/2015. On 1/4/2015. FMB was 150 lakhs. FMB was 150 lakhs. "20 flats were constructed on that land. 20 flats were constructed on that land. And in the year 23-24, in the year 23-24, 15 flats were sold. 15 flats were sold. Selling price of each flat. Selling price of each flat is 20 lakhs. Selling price of each flat is 20 lakhs. Cost of construction of each flat. Cost of construction of each flat is 8 lakh. 8 lakh. Compute capital gain and PGBP. Compute capital gain and PGBP. CII for 2002-2003. CII is what? Cost Inflation Index. Cost Inflation Index. CII for 2002-2003 is 105. CII for 2002-2003 is 105. For 23-24, for 23-24, much? 348, 48, and for 15-16, 254. 15-16, it is how much, guys? 254. Correct? Whoever solves this correctly will get 500 rupees. Not even joking. Solve it. No cheating. I want the correct answer. Take your time. Whoever solves this correctly, 500 rupees. Correctly first. I can't give under 500 to everyone. That's all. I have to go beg in front of Ammani temple. Right? Yes. Whoever solves it correctly first with steps. I need the answer. Both should be correct. One, if you tell the 250, don't bargain for 250 rupees. Sir, PGVP, I got it correct. 250 rupees. No. Capital gain, you should tell me correctly. PGVP, you should tell me correctly. Fully solve. But it should be first. Perfect answer it should be. Very interesting question. 4 marks asked in the exam so many times. It came in CA final also actually. Then they started asking in CA Inter. Come on guys, try it out, try it out. His reward is just for fun. But then you should really try it out. Done guys, time up. Leave it. Good, very good try. I will give you more opportunities in the future to get these rewards, don't worry. But this time you did not do it. Fine. So, first of all, let's understand and then I'll give you time to write and then you can go for a break. So, very simple guys. Most common mistake that you will do in PGVP is what? Okay, tell me what is the selling. First of all, let's do PGVP. PGBP or let's do capital gain. Capital gain is easier. What is capital gain? How much, what you should take? FMV minus cost. What is cost? 10 lakh. What is FMV? 150 lakh, right? So without going into 15 lakh flats, 20 flats, just compute the normal capital gain. How much? 150 lakh minus 10 lakh. For that 10 lakh, I should give indexation. Correct? No? Everyone with me? So 150 lakh is the FVOC minus transfer expenses nil, net consideration 150 lakh, less cost of acquisition. What is cost of acquisition? 10 lakh. 10 lakh into I have to give indexation. Indexation I will give till 15-16 or till 23-24? 15-16. So 10 lakh into what? 254 by 105. So what is the final capital gain amount? Everyone got this? 1 crore 50 lakh less index cost of acquisition will be 10 lakh into 254 by 105. Everyone got this? Yes. But guys, this is not the capital gain amount. Why? No, why? Because only that was for 20, that was for the full land. But is full land sold or 15? Only 15 sold. 15 is sold. So you have to do this. This you don't do. Or no, out of 20 flats, basically entire land comprises of 20 flats. Is 20 flats sold or 15 flats sold? 15 flats is sold, which means full land is not sold. Only 15 by 20, that is 3/4 of the land is sold. Are you with me, everyone? Only 3/4 of the land is sold. So capital gain also should be proportionate. No, this we miss out. 100% you have done this, no? Only he has done it, you have done it. Yes, good. Both of you have done it. Others have not done it. Others would have stopped it off here only. Wrong, guys. Actually, marks will be okay. This is the real deal where you will get marks. Correct? No? So 1 lakh, 1 crore 25, 80, 952, 15 by 20. 94 lakh 35,714. Yes? Okay. I'll give you time to copy. But did you understand this? Yes. But in PGBP, it's very easy PGBP actually. What is PGBP, guys? How much is sold? 15 flats is sold. 15 into 20 lakhs. Correct? No? 15 into 20 lakhs. What is the cost? 15 into 8. 1.2. Guys, you have taken the cost of the flat. Will take cost of the land that you've conveniently forgotten. Cost will include two costs now, guys. Cost of constructing the flat. Sure, no. What about cost of land? You will not take cost of land? Take cost of land, no. What is cost of land? It, how much? Sale price 15 lakh into 20, 3 crore. Cost of flat 15 lakh into 8. You have done this and left off. Guys, you should take the proportionate FMV as the cost, no? That is also cost, no? 150 lakh into 15 by 20. That is the cost of land. Without cost of land, how will you do? So 1 crore, 12 lakh, 50,000 you should take, and PGBP will become 67 lakh 50,000. This is where marks will be allotted. Correct? One is FME, okay. This difference you took. Which difference you took? 150 minus 10, PGBP you calculate, okay. Chapter close. But guys, all the other things also, I've just told you in this sum, you see. This sum, you have done 80 minus 60, no? Where have you done it here? You have chumma done that 20 flats into cost of construction. You have not even taken this into consideration. Guys, FM you have to subtract, no? Not done that only. What have you done? 15 flats into 20 lakh, 15 flats into 8 lakh. That is construction of the building. But what about FMB? FMB only have not taken, no? That's a big blunder. 150 lakh is the FMB. For how many flats? 20. I should take how many flats? 15. 150 into 15 by 20. This is actually a silly mistake. Are you understanding? In the previous sum, you only have done it 80 minus 60. Here you have not done minus 150, you didn't do only. Right? Because I took you to another cost. Which cost? Cost of flat. Cost of flat, okay. But land cost, who will take? Are you understanding, everybody? That is the blunder. Very important question. Copy down the answer, then go for a break. Those of you who have tried, very good. Next time you will get it, don't worry. Copy and take a break. Copy this for 5 minutes, or if you have already copied, just go through. Then take a 20-minute break. 10:40 will. Copy will take 5 minutes, 10 minutes. Alright, guys. So we did this particular sum before. The first exception is what? This. Yeah. So now there are 4 exceptions I told you, no? These are the 4 exceptions. General rule is what, guys? Taxation is in the year of transfer. But exception, tax is paid in some other year. There are 4. In that we have done 1. 3 more we have to do. 45.2. Conversion of capital asset into stock in trade. Next, compulsory acquisition of a capital asset. Next, damage or destruction of a capital asset. And lastly, joint development agreement. So you can copy. Which are the 4 exceptions where tax is paid in some other year? What is the general rule? Taxation is in the year of transfer. 4 exceptions where taxation is some other year. 45.2, 45.5, 45.1a, 45.5a. In that first one done, other 3 we have to do. These are exceptions. Then we will see some special provisions. Copy down. 45.2 conversion of capital asset to stock in trade. 45.5 compulsory acquisition of capital asset. 45.1a damage or destruction of capital asset. 45.5a joint development agreement. Right now 45.2 is done, guys. What is that? Conversion of capital asset into stock in trade. Second one, write down 45.5 compulsory acquisition of a capital asset. This is your metro construction, best example. 45.5 compulsory acquisition of a capital asset. So I'll explain, I'll just give you the gist of this and then you can write down. So in 45.5 how it goes is very simple, guys. Check it out. I'll explain, then you can copy. Compulsory acquisition. In 2001-2002, I had bought a house worth 3 lakh. The year 2001-2002. In 15-16, government permanently acquired it. The government permanently acquired it, compulsorily acquired it. What is the year of transfer? 15-16. But do you think I will get the, do I have to pay tax on that day? No. When do I have to pay tax? Whenever I receive the money. Without receiving money, will they ask me to pay tax? No. So year of transfer is 15-16. The period of holding will be from 2001-2002 to 15-16. Correct? But I received the compensation in 22-23, guys. Guys, there are two types of compensation. One is called initial compensation and one more is called additional compensation. What is initial compensation? They'll give you the compensation. Then if you are happy with it, leave it. If you are not happy with it, you can sue them. Can you sue the government for more money? Yes. You will tell, boss, if I had sold this property on my own, I would have got 1 crore. You have given me 70 lakhs. That's not enough. 30 lakhs loss because of, first of all, I didn't even want to sell. You only compulsorily acquired and giving me less money. So I want to sue you. So I will sue you and I will get some additional compensation later. So this is the entire structure. Now you need to tell me whether taxation will happen in 22-23 or is it in 25-26. In 22-23, compensation is received 30 lakh. That is called initial compensation. That's a short compensation. Guarantee they will give. Government only is agreeing to give 30 lakhs. But you sue them. You say that's not enough for me. And you put a case, and that case you will win in 25-26 and you will receive additional compensation 20 lakhs. When will you tax it? The question is, when will you tax what? What is the year of transfer? 15-16. So will you be, what taxation is it on 22-23 or is it 25-26? That we need to see. Year of tax of initial compensation is always 22-23, guys. But final compensation, what to do? Apart from that, if you receive initial compensation in installments, what to do? Final compensation in installments, what to do? All that is other thing. This is also very important and interesting. Copy this structure, guys. Copy. Are you understanding? I still haven't discussed when the taxation will come. We will do that now after you copy this. Compulsory acquisition. Done? Copying? So 3 lakh worth of 3 lakh property sold in 1516, not sold, compulsorily acquired. The year of transfer will be 1516. Yeah. Which one? Sure shot. This one down, no? Sure shot. POH, period of holding. Whenever I use the word POH, it always means period of holding. These are all the terms that we need to know in capital gain. POH is period of holding. CG means capital gain. LTCA, long-term capital asset. STCA, short-term capital asset. STCG, short-term capital gain. LTCG, long-term capital gain. POH is period of holding. We had done this in the previous, and I gave you the structure format. We have written POH there. Same thing. Period of holding. Whether it is short term or long term depends on period of holding. And simple. So now tell me, let's say for the sure shot compensation of 30 lakh rupees, when is it taxed? Simple rule, when is it taxed? 22, 23, whenever it is received. Whenever it is received. So if 30 lakhs is received upfront, then it is taxed in that year. So write down the first point in this: receipt of initial compensation, receipt of entire initial compensation, receipt of entire initial compensation. Receipt of entire initial compensation. 30 lakhs. Year of transfer 1516. Year of tax 22-23. Guys, how will it be? Full value of consideration 30 lakhs. Transfer expenses nil. Net consideration 30 lakhs. Index cost of acquisition. What is the cost of acquisition? 3 lakh. Indexation will be till 22-23 or 1516? 1516. Indexation will stop at 1516. What is postponed? Taxation. Same concept, no change. Into 254 by 100. Long term capital gain will be 22 lakh 38,000. Initial compensation 30 lakhs minus transfer expenses nil, net consideration 30 lakh minus index cost of acquisition 3 lakh into 254 by 100, 7 lakh 62,000. Long term capital gain will be 22 lakh 38,000. Done, guys? What is the long term capital gain? 22 lakh 38,000. Done. 22 lakh 38,000. Now what is, okay, now tell me, I've already done this calculation. Okay, so when should I pay this tax gain into 30 in 22-23? But immediately I sue the government. I ask for more compensation. When will I get more compensation? 25, 26, 20 lakhs I'll get. My question to you is, logically tell me, 20 lakhs when I get in 25, 26, what will be the cost that I can take? Will you take again 3 lakh cost? No, I've already taken, no. For the same house, I'm getting compensation twice. One is 30 lakh, one is 20 lakh. My question to you is, in that additional 20 lakh that I'm getting, what are the expenses which are allowed? Transfer expense already covered, no. There's no transfer expense only. Actually, what transfer? Did I pay stamp duty? Nothing. Every the government took over. Nothing. What can I claim? I can claim one thing. One, tell me. One? Tell, what did you say? One? Correct, you're right. Legal expense. Guys, I would have sued you, no? I would have sued the government. Don't you think so? I have to pay the lawyer? Yes. Because I paid the lawyer, I got 20 lakh extra. So what can I take expense there? Full legal expenses. Everything I can take. Can I take cost of acquisition? No. I've already taken. No. Why should I take again? So here I've given a chart which will help you. Check it out. So then I'll explain. Then you can copy. Compensation general rule. Initial compensation. FEOC compensation minus cost of acquisition, cost of improvement, short term or long term. ICOI means index cost. ICOI index cost of improvement. Then it will be either short term or long term capital gain. These are all common terms, guys. COA cost of acquisition. ICOA index cost of acquisition. COI cost of improvement. ICOI index cost of improvement. ST short term. LTCG long term. Additional compensation FEOC additional in my example 20 lakhs less litigation charges. Litigation charges. Period of holding will obviously be what? Date of acquisition to date of transfer. What is transfer? Date of transfer will be date of compulsory acquisition. Date of transfer means, what do you mean by date of acquisition? We know. What is date of transfer? Date of transfer will always be what? Compulsory acquisition date. No COA. No COA means no cost of acquisition. In which case? In additional case, you cannot take cost of acquisition because already you have taken. This is the chart to remember initial and final the initial compensation and additional compensation. Next iteration will be, if initial compensation is received in installments, what to do? Like in 22-23, they gave an order saying that they will pay me 30 lakhs. But in 22-23, they paid only 10 lakhs. 23-24, they paid 10 lakhs. Do you think government will pay everything at once? No. Practically, they will pay in installments. So should I tax also in installments? That we will see. Similarly, additional compensation also, you will receive it in installments. What to do? That is the variation of this. We'll see later. First, you copy this. Variations we'll see later, guys. Got it? So date of acquisition to date of transfer. Very simple. Now write down variations. Variations. I told you what are the variations. What if the initial compensation is received in installment? Write down variation. Initial compensation received in installments. Initial compensation received in installments. In this variation, 30 lakh, 20 lakh is received in 22-23, 5 lakh is received in 23-24, 5 lakh is received in 24-25. $20 lakh in 22-23, 5 lakh in 23-24, 5 lakh in 24-25. How much will be taxed in 2023? Guys, tell me. Is it 20 lakh or full 30 lakh? How much will be taxed? So basically, when the government announces 30 lakh, they will 100% give that money. There is no doubt about it. Additional compensation you may or may not receive. That depends on the court. But this initial compensation, 100% you will get. So is it a sure shot payment? Yes. Since it's a sure shot payment, government says the moment you receive the first installment, please pay the full tax. Don't wait for the remaining amounts to come. Please pay the full, because in the first installment, they'll give you bulk of the amount anyway. From that only you pay the full tax. That is the logic. So answer, how much will be taxed in 22-23? Full 30 lakh is taxed in 22-23, even though only 20 lakh is received. Write down. Logic also I told you. Because it's a sure short thing and first installment always will be huge. So they say anyway, first of all, you should have been taxed only in 15-16. Already there is a delay. Plus I'm giving you a lot of money in the first installment only. Please use that only and close. Next one. Variation 2, guys. Additional compensation received in installment. Did you understand this, all of you logic? Everyone, guys, yes or no? Second one. Additional compensation received in installments. Additional compensation received in installments. Enhanced compensation. $20 lakh. Overall, right? So 10 lakh is received in 25-26. Lakh is received in 26-27. 4 lakh is received in 27-28. So this one, guys, the enhanced compensation, is it sure shot or you don't know? Don't know. Hence, this will be taxed as and when received. Taxed as and when received, since the payment is not sure and depends on various facts. So in 25-26, you will have to tax 10 lakh. In 26-27, you will tax 6 lakh. In 27-28, you will tax 4 lakh. So this I don't know what it is. Done. Taxed as and when received. Very simple. Everyone written? Third one. Now, one more thing, guys. Will they give you interest on delayed payment? First of all, they had to pay on time. They didn't pay. They delayed so long, 7 years. And after that, also they are giving in installment some 1 year, 2 years before. Will you get interest on delayed payments? What do you think? Yes, will get interest on delayed payment. Now the question is that taxable? Compensation, okay, taxable. Interest also is a taxable. What do you think? Nirmala auntie will tax everything. Other income from other source. He will tax everything. No mercy. How much? But she'll give some benefit. See, if interest is received on delayed payment, taxable as IFOS in the year of receipt. How much is taxable, guys? Yes. Taxable amount is interest received, not accrued. Interest received into 50%. Standard deduction she is giving 50%. Giving a discount of 50%. The remaining 50% it is taxable. Write down. He will tax everything, guys. No mercy. You do whatever you want, she'll tax. You breathe also, she'll tax. Going forward, breathing tax. So if interest is received on delayed payment of compensation, taxable IFOS in the year of receipt. Taxable amount is how much? Interest into 50%. Standard deduction. Yeah, sure. Ask all. Problem. All right, guys. So into 50% done. So now let's solve a question. Check out question number 10. See, guys, question number 10. The house property of Sanjay was compulsorily acquired by the government on March 14, 2011. The government awarded 14 lakh in the first instance. What? Initial compensation. But only 10,000 was received in 24. Balance was received in 25. Even though you just received 10,000, when should you pay? 24, 25 or 25, 26? In 24, 25 only you should pay the full amount. Practically speaking, they will give the major amount first, small amount next. Here the institute, no, they will give whatever they want just to test you. Practically, it won't work like this. They'll give you bulk amount first, small amounts later. That's the logic. That's why they said, please pay everything first only. These stupid fellows have reversed it. Leave it. So anyway, but don't say that because 10,000 only I cannot pay. No. When will you pay? When you receive 10,000 only, you have to pay tax on the full amount. Sanjay had purchased the house in 2000 to 2003 for 2 lakh rupees. On an appeal to the High Court, Sanjay urged for an increased compensation of 16 lakh 50,000 rupees. Expenditure in court's proceeding is just 6,000 rupees. The additional compensation of 2 lakh 50 is received on 2 lakh 50 is received on July 2nd, 2026. What do you think? And note the capital gain. Should I tax on 16 lakh 50 or should I tax on whatever is received? 2 lakh 50. So first one, how much will I tax, guys? Full 14 lakh is taxed in which year? 24, 25. It is taxed in 24, 25. Or no? Yes. Then the remaining, this thing, what do you say? Increased compensation of 16 lakh 50,000. But in that, how much I have received? Only 2 lakh 50,000. That will be 2 lakh 50,000 minus expenditure is 6,000. I can take expenditure. So that remaining 2 lakh 44,000 will be taxed in which year? 26, 27. Or no? Simple. Initial compensation, I will have to tax the full amount. And this 14 lakh minus cost. Or no? 14 lakh I received. What is the cost? 2 lakh. 2 lakh I have to take till which day, guys? 10, 11 or 11, 12 this is? 10, 11. Right? And this is 2001, 2002 or 2002, 2003? So what is the indexation for 10, 11? You can see the chart. What is the index for 10, 11? 167. What is the indexation for 2002, 2003? Sir, should I remember all these things? No, don't worry. They'll only give in the exam. You don't have to remember anything. You remember 24, 25, how much? 363. That you remember. That's all. Everything else they will give. So, what will it be, guys? 14 lakh minus. What is 2 lakh into 167 by 105? 3 lakh 80,000. 95 minus, that 14 lakh minus that much, how much? 10 lakh 81,000 will be my taxable capital gain for which one? Initial compensation. For further compensation, I cannot tax 16 lakh 50. I have asked for 16 lakh 50. They have only given me 2 lakh 50. Then I can again sue. Then they'll again give like that. So if I give this, how much will I get? 2 lakh 50,000. So 2 lakh 50,000 will be taxed minus 6,000 rupees. 2 lakh 44,000 is the taxable. That's all. Simple. Next, write down. Variation 3. Variation 1 and 2 done. Yes or no? Variation 3. I'll explain, guys. Interim, this is the concept called interim compensation. Interim means what? Temporary order. So when I ask for enhanced compensation, no, in the first example, 30 lakhs they've already given you, I'm not happy. I will ask for extra. How much I'm asking for? 20 lakhs. That time the court will say, okay, let's, your case will go on, hold on. They will tell the government, first, this fellow is crying. First of all, you've taken away his house. Now he's crying. Just to shut his mouth, pay some amount. Generally, if you pay some amount, you will keep quiet, no, for some time. So they will pass something called as a interim order. Interim order is a temporary order. This is another variation we are doing. Temporary order. What will they say? They'll say 5 lakh, I will pass interim order. You ask for how much? 20 lakh. Whether the extra 15 lakh should you deserve or not, I don't know. But I know you deserve at least 5 lakh. So immediately I'll pass one order called interim order. They'll say the court is still hearing the case, but 5 lakh is a reasonable amount to be paid now in the interim as a temporary order pending the final order. In the final order, I may decide to pay overall 12 lakh, overall 15 lakh, overall 8 lakh, but 5 lakh pakka you will get. What is that order called? Interim order. So first I will pass interim order 5 lakh and I will tell 15 lakh will be passed when the final order comes, whenever it is. Final order is pending. Remaining 15 lakh is based on the final order. Interim order is passed in 1920. Compensation is granted, received in 1920. And guys, final order is passed for 12 lakhs in 22-23. Interim order, when is it passed? 1920. Final order, when is it passed? 22-23. And it is passed for 12 lakhs. Is it 12 plus 5, 17 or overall 12? Overall 12. I asked for 20, they gave 5, final order is overall 12. Means extra they gave how much? 7. That's it. So now the question is, final order is paid, how much I received? 12 lakhs. So first you copy this one, guys. First you copy. Now, interim order, when will it be taxed, guys? Interim order, 5 lakh, we will see. Then in this 7 lakh, how, when it is received, when it is, all that we'll see. Just copy this. Till here you copy. Till only this 5 lines. Till here, received in 1920. After that, I'll show more. Or you can copy this also, no problem. Till here, guys. See, till here. Final order is passed for 12 lakhs in 22-23. What does it mean? I claim 20 lakh. Interim order 5 lakh. Final overall 12 lakh. Which means extra how much? 7 lakh. Everybody understanding? Yes. Any doubt? Please ask me, guys. Copy. Got it? So now tell me guys, you have to do the taxation of two things now. One is 5 lakh, one is 7 lakh. 5 lakh is received in 1920. 7 lakh order is passed in 22-23. But 7 lakh is received in installments, assume. 7 lakh is received in installments. So we'll see that. Till here, did you understand everybody? So 5 lakh is received in 1920. This is a final, this is not a initial compensation. This is enhanced compensation. The interim order, or also called as a temporary order, will always be passed for what? Enhanced compensation. Because you are already very, very angry with them for taking away your house and you are asking for extra. In that extra court, just to keep your peace, they will give you some amount. Actually, it always works. When you give some money, no, you will keep quiet. It always works. Because let's say we are fighting over money, you have to pay me 10,000 rupees, or I have to pay you 10,000 rupees. I'll tell Naleba, like as if you are on Bhuta. Correct? But eventually, then you will get super pissed and like, boss, I'll go to court. Then, okay, just take 3,000, sir, 7,000, I'll pay you later, I'll tell. You'll at least keep quiet for a while. That's the beauty of it. So, guys, I'll explain this, then you can copy. Hold on. Final order is passed for 7 lakh in 22-23. Guys, I have already received in 1920. Remember how much? 5 lakh. Out of 7 lakh, 6 lakh was received in 22-23. 1 lakh was received in 23-24. Assume. This is called compensation due to the final order. Compensation due to the final order. This 5 lakh is called compensation due to the interim order. Correct? General rule, guys, in variation 2. Enhanced compensation. What is the general rule? Variation 2. You will, whenever you receive the money, you will have to pay the tax. So see the general rule in 22-23, this one, 6 lakh and 1 lakh. General rule. Year of receipt, taxable. Year of receipt, taxable. This is variation 2 only, no? Variation 2, what's the answer? Whenever you receive the money, you will have to pay tax. Whenever you receive the money, you have to pay tax. Year of receipt, taxable 22-23. Year of receipt, taxable 23-24. Variation 2. ₹5 lakh received in 1920. Compensation due to interim order. Variation 2, what does it say? It is always taxable in the year of receipt. But variation 3 overrides variation 2. This amount alone, 5 lakh, is taxed in which year? Not in 1920. It is taxed in the year in which the final order is passed. That is which year? 22-23. That is the main point in variation 3. So guys, interim order, whatever, see, if you receive in final order, whenever you receive, you will pay tax, chapter close. But any compensation received due to the interim order, temporary order, in my example 5 lakh, even though it is received in 1920, variation 2 says you have to pay tax as on the date of receipt. But variation 3 overrides variation 2 only with respect to interim order. They say it will be taxed when the final order is passed. When is the final order passed? 22-23. Understood? It is passed in 22-23. Correct? Understood? So, in this again I repeat, overall 12 lakhs. In that 5 lakh was received in 1920. 6 lakh is received in 22-23. 1 lakh is received in 23-24. For 6 lakh and 1 lakh, no problem. It is in the year of receipt. But for this 5 lakh interim order, actual rule is what? Year of receipt. But by variation 3 overrides variation 2. For interim order, it's an exception. When will it be taxed? Final order is passed. When is the final order passed? 22-23. Got it, guys? Yes, this is the easiest way to understand compensation. Copy. copy and then go through the entire thing again once, please. Okay, that is the variation. But one thing is there in this, guys. There is one law. There is one law called right to fair compensation, transfer, land acquisition, rehabilitation, and tax. By the time you tell the law, you will die. That is long. 2013 law is there. There is what? RFCTLARR Act, it's called. Anyway, Right to Fair Compensation Act will call this. Simple words. This, no? If defense, army, navy, air force, they come and take away your land, build a air force compound, to build an army compound, to build a, you would have seen in Bangalore so many army areas are there. They would have taken land from somebody compulsorily. That, what do you think? Is it taxable or not? Ideally it is taxable, but as per this law it is not taxable. Right to Fair Compensation and Transparency in Land Acquisition, Rehabilitation, Resettlement Act overrides Income Tax Act. If these laws have compulsorily acquired land and given money to you, it is fully tax free. That money you can keep. Army land, defense land, and also land taken for building sports complex. Koramangala, there is your Olympics Games village. Have you seen? Yeah. And actually during Olympics, they had made that village for the players to stay. It was compulsorily acquired from that owners back then. So the owners would have got some money, no? Is it taxable for them or tax free? Tax free. So you can write down finally the note. Right to Fair Compensation Act. As per Right to Fair Compensation Act. As per Right to Fair Compensation Act. As per Right to Fair Compensation Act. Any compensation received is not taxable. Any compensation received is not taxable. Got it, guys? Simple. So next, 45(1)(a), write down. After this, we'll take a short break. 45(1)(a). Guys, this is easy. What 4 items were there? See, 4 items. 45(2), conversion of capital asset to stock in trade. Point number 2, compulsory acquisition of capital asset. Third one, damage destruction of capital asset, which you have to do now. Last one, joint development agreement. So write down next one, 45(1)(a). Damage or destruction of CA, chartered accountant, no. That when you take up coaching only, damage over. Correct? Damage or destruction of capital asset, not chartered accountant. Damage or destruction of capital asset. 45(1)(a). Damage or destruction of capital asset. Three years. Study 3 years properly, life is set. Because you will have the degree. Is life a struggle after CA? 100%. You'll have to really work hard. But one thing in the back of your mind is you already have the degree. So no tension. Wherever you go, you will learn. But is it easy or you have to struggle? Lot of struggle, guys. It's not a joke. But it is, you will still manage. Why? Because you are already a CA. But now the problem is, if you don't do CA, what you'll do? Bangalore University BCom, right? No, or any university BCom, useless. Maximum you can earn is some 50,000, 1 lakh maximum after 10 years of slogging. That is your first salary anyway as a CA. So 3 years somehow, by hook or by crook, we should sacrifice everything and just finish it off. After that, definitely struggle begins that time. But the beauty is, you can easily manage. So we are all doing to reach Mount Everest base camp, not Mount Everest. Once you become a CA, Mount Everest base camp, from there the journey starts. But I have already reached Mount Everest base camp from Bangalore. So then no tension. After that it will be easy only. So it's a struggle, you already know that you have reached till there. Yes, that is the beauty of our CA course. Many people can't do it, guys. Rest are in this room, yes or no? Many people can't do, but they are all outside this room. Those who are there are in this room. Right. Definitely you can do it. Good fun. A lot of work. We have all gone through this. So I can actually say we have gone through, so we know what it is. I have also sat in the class, all those, same like you only. But for us it was difficult in terms of class, but for you it is difficult in terms of exam. So I will not tell I am greater than you. Because for me exam would have been slightly easier, because now the syllabus etc. is huge. For us also it was huge only, but the examination quality was little easier compared to you. But for us it was harder in terms of class, because we had articleship after foundation only. Immediately after 3.5 years articleship. After foundation only I had to do articleship. So I was in articleship when I did my CA inter classes. So articleship was between 10 o'clock to 5 o'clock. Classes were in the morning and evening. So it was really horrible. I used to go home only to sleep. There have been times when my parents have not seen me only, because I used to go at some 1 a.m., get up at 5 a.m. and leave. So it was like paying guest accommodation, our house, for me. Right? So it was like that. So that way it was difficult, but then examination was slightly easy compared to yours. So I will not say, oh, yours is nothing, we did. Your boss will tell, that's the problem. Once you join a job, no, you will see your boss. Your boss would have finished in 1980s or 90s, Tata fellow. He will tell, when I was doing CA, full exaggeration. I swam across the river and then, did CA, all that nonsense he will tell. You will just listen, yes sir, very great sir, thank you. And that you come. He will tell you, see, I'm not joking. He used to swim across the river, floods and all used to come, right? All those Tata fellows, you can't help them. Okay, they'll keep telling. He will know, yes or no? Yes, see, he's already worked, no? He will know. Bosses will tell that. It was very difficult. For you, it's very easy. For us, it was very difficult. All that nonsense they'll tell. You cannot compare that time and this time. You cannot compare my time and your time. And mine was 10 years ago. As I told you, that time it was difficult. But you have your own other challenges. No, exam is difficult for you. For me, it was little easier actually. It's like that only, guys. Each time is different. You cannot just complain. Guys, 45(1)(a). What is this? Damage or destruction of a capital asset. You have a capital asset, it gets destroyed. Is it a transfer? Yes. You see the transfer definition. What is a transfer? Extinguishment of right. When an asset is there, it gets destroyed by fire. Can you use that asset? No. Is it extinguishment? Yes. Is it a transfer? Yes. Now what to do? You will go to insurance. Insurance will give you money. Once insurance will credit that money to your account, will Nirmala auntie be waiting for you next door smiling? Yes. Why? That is capital gain. Insurance money may come next year. When is the transfer happening? The day the asset is destroyed, transfer. But when is the taxation postponed? Is postponed until you get the money. Instead of money, insurance company can give you an exact replacement of the asset also. Is that also a transfer? Yes. Exchange is also a transfer, no? Destruction is a transfer. And when will you pay the tax? Whenever you get the exchange. What will be the amount or FMV of the asset exchange? That's all. So, in 45(a), destruction or damage to a capital asset is covered. General rule, destruction or damage is not a transfer. But if it happens due to these items, guys, natural calamity, enemy attack, fire, riot. I'll explain, then you can copy. Natural enemy attack means Pakistan will come and attack. That is actually whatever happened in Mumbai, that was enemy attack. All the properties destroyed by them was what? Enemy attack. Any fire that happens, accidental fire. What is willful fire called? During the Karnataka and Tamil Nadu Kaveri dispute, there was one travel agency called KPN Travels. They had one bus, 20 buses, 30 buses they had. Suddenly, all the buses caught fire. And they told it's because of the riot. Riot means, public unrest, where people start fighting on the roads. That's called riot. So they went and claimed insurance of those 20 buses. Later they came to know those fellows only have put fire for those buses. Why? Because those buses were some 20 years old, almost gone. They wanted new buses, so they wanted to claim insurance. They used the riot thing and then put fire on their own buses. Can you claim insurance compensation? No. When I say fire, it is only accidental fire. If it is willful fire, on your own you put fire, what do you think? Is it allowed or not? Not. That is called arson. What is arson? It is willfully setting things on fire. Arson, don't tell 6 children and all. In Kannada, arson means 6 children, 6 sons. Don't use Kannada here, right? Arson means fire. Aru is 6 in Kannada. Son is son. How many children you have? Arson. Right? No. So if you see, yes, natural calamity, enemy attack, fire. Fire doesn't include arson and rioting. Natural calamity means what? Flood. Flood happens in Tamil Nadu every time. Famine also happens. 1 year flood, 1 year famine. Tamil Nadu, it's alternative. Earthquake, tsunami, volcano, landslide, cyclone, avalanche. Examples. Avalanche is in the snow. You would have seen snow falling everywhere and then completely like a slide it comes. Earthquake, volcano, landslide. Landslides keep happening in Kerala and all it happens. Landslide in Karnataka also near Chikmagalur keeps happening. In Bangalore, nothing will happen. No earthquake. We are in such an amazing thing. No earthquake, no tsunami, no volcano, no cyclone. Cyclone effect will come. Cyclone will not come. Avalanche, no scene. Landslide, not there. Right? Only in the road, slides, holes, everything will be there in the road only. There only landslide will happen. You'll suddenly go inside. Right? That happens only on the roads. Apart from that, everything is okay only. Anyway, so basically these things are called force majeure. Force majeure means what? Act of God. It's a French word. It means act of God. There was a very interesting case in 2020. COVID, was it an act of God? The act of China, no? It's not act of God. So, it went to court actually. They said no, it's not force majeure. Because in Indian Contract Act, if any contract gets cancelled because of force majeure, contract is not void ab initio. You cannot claim damages. So, during COVID, because people were not able to pay, they went to court and said force majeure. They said no, it is not an act of God. Right? Some Chinese fellow ate some bat and because of that it happened across the world. Yes, so if you see insurance compensation, insurance claim, if it is received, no, it is taxed in which year? That year. Not in the year when the transfer happens. It is taxed in the year in which insurance compensation is received. That's it, guys. Copy. Then copy and then can take a break. This will take 4-5 minutes for you to copy. Then take some 15 minutes. 12:15 will do. 12:15 to 1:15. 1 hour enough. That's it. 1:15, 1:30 maximum. You can go. We are in a very good position. We are going smoothly. So I don't want to simply rush and simply take extra. It's fine. You go home, you study, you take rest. Everything is covered. Copy. And 12:15 you come back. Are you able to understand? Easy. Capital gain chiller. PGBP chiller. Salary is, you'll be like, why am I studying this? That chiller that is. House property is like, you can close your eyes and study. Taxation is easy, guys. Okay, guys. Any doubts? 4518 done. So next we have, yes. 1 second. Check this. Question number 6. Mr. Muni acquired jewelry in previous year 56 for 4 lakh rupees. In previous year 1920, due to flood, jewelry was damaged. Mr. Muni has insured the jewelry and received 40 lakh from the insurance company. Compute the capital gain. Fair market value of jewelry on 15/7 is 42 lakh. Should I take FMV or ignore FMV? Is there anything called FMV that we have discussed? No. Insurance compensation should be taken or FMV? So we should not make our own law. Insurance compensation or FMV, whichever is higher. Where we have not decided on, discussed only anything. So please don't make your own law. FMV to be ignored. So what is it? FEOC 40 lakh, less transfer expense nil, net consideration nil. Then when is the transfer happening? When did it go? Previous year 1920 it went due to flood. So the indexation is from which date to which date? 5/6 to 1920. 5/6 to 1920. Insurance premium is not allowed as a reduction. If no insurance claim is received, no capital gain. So guys, if no insurance claim is received, no capital gain. If insurance claim is not received, then there is no capital gain. That's all. Anyway, no need to write down. I'm just saying. Understood? No. Full value of consideration less index cost of acquisition. That's about it. So the last part of the story is what we have, the JDA, joint development. So write down the next heading. That is the last part, guys. After that, all special provisions will begin. Last part, JDA. (45)(1)(b). Not 45(1)(b). This is 45(5)(a). Sorry, 45(5)(a). 45(5)(a). JDA, joint development agreement. Joint development agreement. JDA. Not JD. NA. JDA. Girls are already know everything. Today we'll put NA. JD is Jack Daniels, not that. JDA. Right. So guys, how does this work? Guys, very simple. This JDA happens everywhere in Bangalore, everywhere in India. The deal that I'm speaking also as of now is JDA only. That fellow has 40 acres of land. So if there is one land, it will be given to a builder. builder will come and he will take over the land. You had a land long time ago. Your father and grandfather and all were very smart. They bought one land outskirts of Bangalore that time, knowing that in 30 years it will be in Bangalore. And they're like, let me keep my children happy, grandchildren happy. You may not have that mindset, but they had. Visionaries they were. Generational wealth is the only wealth that actually sticks. Very difficult to be rags to riches. From nothing to go somewhere is very difficult. But when you already have wealth, you can add on to it. So your grandfather had already built one land like this, taken one land, and today now you are reaping the benefits of your great grandfather's treasure. You are now giving this land to, let's say, prestige developers, brigade, whoever it is. Now these fellows will come, take over the land. For taking over the land, should you get cash? Only land, no. You will say, I want 20 crore. Prestige will give you another offer. Like say, boss, see, you give this land to me for 2 crore, that's all. I will construct 100 flats. I will give you 30 flats. Each flat you sell for 2 crore. You will make 60 crore. 60 crore plus this 2 crore. 62 crore instead of 20 crore. You are only asking 20 crore like on Chapper. Correct? I will give you, that's why it's a super hit. JDA is super hit in Bangalore. Everywhere you go, JDA. Right? So I know one CA, as I told you, senior man, he's only doing this only. CA, one small office he has kept there. If you go there, you'll be like, what is this CA office? You'll think. But he is loaded. So he is a developer. He ties up with construction people, goes to all these people wherever they have land or building. They'll go to Malleshwaram, an old building will be there. I'll go to him and say, sir, let us demolish this building and develop one 8 flats. In that, sir, you please keep 4 flats. You give me 4 flats. Full construction is my responsibility. Give me 4 flats. So I will construct the entire building beautifully with 4 crores. I will make 8 homes. 4 flats I will give it to the owner. He is also happy. Remaining 4 floors, I will sell it. Each one I will sell in Malleshwaram 5 crores I will sell. So for me as a developer, I am not owning any land. I cannot own all the land. I will go with a person who is owning land and make a joint development. So it's a very, very commonly used thing in Bangalore, in all the places. In Delhi, there is no land only. There are all old houses. So they will go to that house and say, let me demolish this house. And then I will build a 4-story. In that you keep 2 floors. 2 floors is mine. I'll do whatever I want with that 2 floors. So for me, I already have the land. Instead of taking 20 crore, see how I am getting now. Right? One of my other clients was there. I didn't know she would become my client. So we were just talking. Very simple lady. I said, what is your... So when she came, I thought, okay, maybe why is she coming to me and why she may not even have any income. Generally, appearances are often deceptive. When you see how they are coming, how they speak or how they look, you feel like, okay, they don't have anything. So I didn't judge them, but that's a sense I got. I asked, ma'am, what is your main source of income? She said, I have only one source of income. I said, what? Rent. Ma'am, how much, can you tell me how much rent you're earning per month? She told 76 lakhs. I was like, huh? 76 lakhs. So she had one great grandfather's property somewhere near, I think Wonderla is there, no? Wonderla or something. No, not Wonderla. There is one Neeladri water park was there. Have you heard? Long time ago it was there. Before Wonderla, there was one thing called Neeladri water park. So next to Neeladri water park, now it's not there. In that area, now that Neeladri water park next door, they've made it fully into Neeladri water park. I don't know what that is there now. Next door also, there was one land that is fully converted to apartment now. So that builder has constructed 1,000 apartments. He has got 500 apartments. In 500 apartments also, she's given it on rent. 76 lakhs she's getting per month, guys. I thought she's joking because she didn't look like she was earning 76 lakhs per month. True story, right? After seeing those fellows, you'll be like, where are you? 76 lakh per month. And she's not doing anything. If I give you 76 lakhs per month, you'll work? No. I'll retire today only if I get 76 lakhs per month. Right? Yes. Anyway, 76 lakhs per month, guys. Think about it. Anyway, so this is called JDA. That's the best part. Everybody goes for JDA because land value will get 20 crore, you will move out. So my other client who I just met recently, who I closed the deal for him, he sold his land for 30 crore. I told you, no, that 30 crore he sold his land. So that then he could have actually made 300 crore out of it, but he was not interested because that land actually has some problem. Legal issue, that issue. In India, land, they'll just, suddenly you will go to that land, they'll tell that land is mine. Correct? They'll say, my father had one affair, and that affair, I am that son. I'm not even joking. This is what they do. They'll go and put a case in the court. They'll go to High Court and put a writ. And then they'll come to you and say, let's do out of court settlement. Imagine all that happens. Very horrible, guys, land dealing in India. So this other client of mine, I don't want on you. Please give me that money. 30 crore you give me. You got 30 crore. That's it. So you can either choose to take 20 crore and be happy, or you can get into a JDA. There you can mint money. Now tell me, guys, you are not the builder. Let's talk from the owner point of view. What is your taxation? Today you will hand over the land and immediately you will get 2 crore. Let's say in 24-25 you will get 2 crore. And in the year 28-29 you will get 30 flats. What is the transfer here? Handing over the possession of this land to Prestige is the transfer. But taxation is postponed to which year? 28-29, including this 2 crore. Postponed to which year? 28-29. That's all. Now tell me, how much you have to pay there? What is the capital gain? Capital gain, first of all, is the cash received. Then what is the other capital gain? You are receiving buildings, no, flats. That's also a consideration. No? What will you take there? You will not sell, you will keep the flats. You sell the flats, that is again one more capital gain. I am not talking about that. I am talking about you have transferred the land for which they have given you 30 flats. What will be your capital gain? It will be the FMV of the flat. Obviously, no. Fair market value of the flat will be the consideration. 30 flats, 3 crores each will be the fair market value. 90 crores, right, will be your capital gain. And tomorrow you can sell that house later, no? That 3 crore you can sell it for 5 crore if you want. That is one more round of capital gain. Very simple. Two types of capital gain will come. One, at the time of transferring the land. What are you getting in return? 30 flats. For that you have to pay. And that 30 flats you can keep and keep getting rent like my client, 76 lakh per month. Or you can sell off those 30 flats also, no problem. For that again capital gain will come, no. But anyway, I am not talking about the second capital gain. I am talking about the first capital gain. I have given you land. What are you giving to me in return? 2 crore. Plus you are giving me 30 flats. How will I value that 30 flats? FMV. Fair market value. Understood, guys? That is JV. You read. Understood, everyone? Read, you will understand. Now, first of all, when is the transfer happening? The moment I transfer the possession of the land to you for, what do you say, Prestige to build, that will become transfer. That will become transfer. Of taxation, guys. What is the year of taxation? Year of taxation 28-29. I just told they constructed it in 28-29. But when should you take? Let's say they constructed it in 27-28. They got completion certificate in 28-29. They got occupancy certificate in 29-30. When will you tax it? Completion of construction, or when you receive completion certificate, or when you receive occupancy certificate? What do you think? Here is earlier, I got occupancy certificate before construction only. Correct? Open roof, go stay there. No, always construction will be completed. Then I'll go to RERA, Real Estate Regulation Act. There they will give me completion certificate, CC. Then they'll give me OC, occupancy certificate. Completion certificate, everything is over. Occupancy certificate is what? Whenever all the electricity, everything is set up and you can go and occupy there that house. That is called OC. Done. That is called occupancy certificate. Got it? So when will it come? So here I should see CC or OC is the question. CC, completion certificate. I don't care about occupancy. They've completed, that's it. So 28-29 in my assumption is they have got the completion certificate. So see guys, check out now, you'll understand. Check this. (45) Asset transfer in joint development agreements. Where capital gains arise to an individual or HF from the transfer of land or building under a specified agreement, same shall be chargeable to tax in the year in which the certificate of completion is issued by the competent authority. Year of transfer, previous year in which the possession of immovable property is transferred. The moment I hand over the land to brigade developers, that is the year of transfer. Year of acquisition to year of transfer. When is the capital gain postponed? Postponed to the year in which you receive completion certificate. You can write down guys. Year of transfer is year of transfer of transfer of possession. Year of transfer of possession. Year of transfer of possession. Year of transfer of possession of what? Of the immovable property. Year of transfer of possession of immovable property, including land also. Year of transfer of possession. Joint title always. Joint JDA, it is joint title. Next, year of transfer done. What about tax? Year of tax. Year of tax. Year of tax. When? Yes, when you receive the completion certificate. You receive the completion certificate. Tell me one thing, fair market value is more reliable or stamp duty value? Stamp duty value. So initially they had talks of making it FMV, but later FMV can easily be manipulated. So what will be the consideration? Stamp duty value. So next write down consideration. FVOC. Full value of consideration is equal to SDV, stamp duty value. SDV of the share in the project. 30 flats, 20 flats, 40 flats, whatever. SDV of the share of the project plus cash received. In my example, 30 flats plus 2 crore. SDV of the share in the project. SDV of the share in the project plus cash received. Plus cash received. SDV of the share in the project plus cash received. Now, guys, one variation in this, guys. Now tell me. I have given the possession in 24-25. I have given the possession. Builders are building. I am going to receive in 28-29. They are telling me out of 100 flats, 30 flats is yours, which means 30% they are giving me. But I need some money in 26-27. What I'll do, I will transfer this 30% to somebody. I'll tell, see boss, I have receivable 30%. 30 flats are coming to me now. Next year it's coming. I want money immediately now. I'm ready to sell that 30 flats to you. It's already getting constructed, but I'm gonna sell it to you today only at 2 crores each. Please give me 60 crores today. I just want to exit. Now in 26-27, he has actually sold off his share and he has received 60 crore. Now tell me, is the tax postponed to 28-29 or should he pay in 26-27? That's all logical. If you retain the share till the date of completion, then okay, you pay that day. But if you don't retain the share, now only you sell off. What do you think then? Yes. See, you will need money, no? You will sell. You see? In case individual or HF transfers his share in the project on or before the date of issue of the said completion certificate, the capital gain shall be deemed to be the income of the previous year in which the transfer takes place. You will pay tax in 26-27 or you will pay tax in 24-25 only. You are getting the money in 26-27. You will pay tax in 26-27 or you will pay tax on 24-25. Sir, in 24-25, how will you pay tax? You haven't even received. Income tax department says, even though you receive in 26-27, it is deemed to be income of 24-25. What should you do? Go back to the old return, revise the old return, update that old return, pay the money in 26-27 including fine. Nirmala madam is telling no benefit is given. I will deem that this money is received in 24-25 only. But when are you actually paying it? 26-27. 2 years fine you pay. 2 years penalty you pay. You pay in 26-27. You can't go back and pay in 24-25. You pay in 26-27. But the income is from which year? 24-25. Pay fine, penalty, interest, everything. If you want the benefit, don't sell till 28-29. If you don't want the benefit, sell it off. But pay tax as if you had to pay in which year? 24-25. Are you understanding? Do you see the example? Mr. Shashank, landowner, enters into an agreement in July 20. Which year this is? 2021. With Bhavya developers for developing a residential project. The Shashank is entitled to 30% as a share in the project. Project completion certificate was issued in August 22. Mr. Shashank transferred the share in April 22 only. In which year? 22-23 only he changed. In this case, capital gain shall be chargeable in financial year 2021 itself, guys. What should I do then? Revise my return, pay penalty, interest, everything. Understood? Everyone? Yes. That is the example you are given also accordingly. See the example here. Same thing I have already given. Mr. Kunal acquired the asset in 2001-2002. Cost of acquisition is 2 lakh. He transferred it, the land, on 24/7/2018 to these builders. They gave completion certificate on 14/7/23. So the transfer date is 18/19. Completion is 23/24. Taxation is postponed to 23/24. 3 flats is getting. 3 flats is getting. The SDV of each flat is 40 lakhs. So what is the taxation in 23/24? 40 lakhs into 3, 1.2 crore. Less transfer expenses nil. Net consideration 1.2 crore. Index cost of acquisition. What is the index cost of acquisition? Cost of acquisition 2 lakh. So 280 by 100. Why 280 by 100? 18/19. 1.14 is the long-term capital gain. And let us say Mr. Kunal sells off one of the flat for 90 lakh rupees. So what is the FVOC in 24/25? FVOC 90 lakh. What is the cost of acquisition, guys? 40 lakh SDV, because I've already paid tax on that. Are you understanding this? In the year 25/26, I've sold one flat. How many flats I got? 3. How many I sold? 1. What is the selling price of that flat? 90. Minus cost. What is the cost of that flat? 40. I've already paid tax on that 40 year. No, I've already paid tax on that 40. 40 into 3. I can take that only as the cost, 40. And since it was transferred within 1 year only, what is the short term capital gain? 50 lakh. Understood, everyone? Yes or no? Yes. So ultimately, guys, what I'm trying to tell is 4 cases we have discussed now. These are exceptions. 45(1)(a), destruction of capital asset. 45(2), conversion of capital asset into stock in trade. 45(5), compulsory acquisition of capital asset. 45(5)(a), joint development agreement. What is the year of transfer in the first one? Year of destruction. What is the year of tax? Whenever you receive the insurance claim. When you convert capital asset into stock in trade, what is the year of transfer? Conversion into stock in trade. What is the year of tax? Whenever the stock is sold. 45(5), compulsory acquisition of a capital asset. What is the year of transfer? Compulsory acquisition. What is the year of tax? Wherever the compensation is received. Joint development. What is the year of transfer? Whenever the possession is handed over to the builder. What is the year of tax? The completion certificate is received whether in part or whole. Understood? Simple, no? Yes. These are the 4 exceptions, very important exceptions. Please copy, guys. Copy this chart. After this, we'll have to do the special provisions. Special provisions, so many, some 7, 8 special provisions are there. Exemptions are there. Tax rates are there. Over capital gain. Special provisions and all will take time. We done? So these are the write down, guys. First one, special provisions. Special provisions. Special provision. Point number 1, section 50C. Point number 1, section 50C. SDV is treated as FVOC. SDV is treated as FVOC. SDV is what? Stamp duty value is treated as full value of consideration. SDV is treated as FVOC. SDV is treated as FVOC. So, special provisions. That one, SDV treated as FVOC. Stamp duty value. So guys, what used to happen was people were doing this a lot. The SDV is generally treated as a real value. Real value of some land, let's say, was 110 lakh. Real value. But what people used to do, through the banking channels, they used to pay 70 lakh. Cash dealing, they used to do 40 lakh. So if Mr. A wanted to sell it to Mr. B, if he sells it at 110 lakh white money, he has to pay tax on 110 lakh. Instead, what he used to do, he will go to B and say, sir, I will give you 110 only, sir, no problem. 70 lakh I will pay bank account, sir. 40 lakh I will pay cash, black money you use. Black money is unaccounted money, no tax. Sir, we will pay tax on 70 and close it. People were doing this from 1960s to almost 2000. The year 2000, during that time, almost 25 years ago, they said, no, this is cheating. The real value is always higher. And these people are cheating like this. What is the consideration that is getting? 70 lakh. What should have been the consideration? Actually 110 lakh. Government is losing out on tax on 40 lakhs because it is black money is being used. To stop this from happening, in this example, consideration, is it less than real value or more than real value? Less than real value. Real value is nothing but, as I told you, the sub-registrar's value, that is the stamp duty value. SDV is more than consideration or less than consideration? More. SDV is more than consideration or less than consideration? More. So in this example, SDV is actually more than the consideration that you are getting. It is really more. Income tax department is losing money. See, you cannot, they'll ask one question. When the market value, stamp duty value is only 110 lakh, how are you paying 70 lakh? Is the other person fool enough to take it at 70 lakh? No. So I will assume that you are doing some golmaal. Assumed. So what does the section say? Section says whenever SDV is more than consideration, if you don't want to lose money, you will take FVOC, that is your full value of consideration for the purposes of income tax. FVOC is equal to consideration or FVOC is equal to SDV? If you want government to collect more tax, the calculation of FVOC, will it be consideration 110 lakh? Sorry, consideration 70 lakh, or will it be SDV 110 lakh? SDV 110 lakh. So they said, whenever I find out that the stamp duty value is more than whatever you have actually paid, FVOC, full value of consideration, will now be SDV. Deemed. They created a fiction, deemed. They inserted a new section, 50C. If you cheat the government by paying or dealing less than the stamp duty value, whatever you do, I don't care. But for tax purposes, full value of consideration will be deemed to be what? SDV. Will be deemed to be SDV. You understand? Yes. But many people went to Nirmala Madam and said, ma'am, I understand everything, ma'am, but let's consider a genuine case. Let's consider a genuine case. Ma'am, consideration I have paid 100 lakh. Stamp duty value is actually 105 lakh. Is SDV more than consideration? Yes. Ma'am, you are telling FVOC is deemed to be SDV. That is 105. So no. But I will go to Nirmala Madam and say, Madam, I understand SDV in that area is this everything. This entire line area, SDV is 105. I totally agree. Madam, but that last house which I am selling, it is next to a smashana, cemetery. People don't want to live there. They are asking for 5 lakhs discount. I had quoted my house at 105 only, madam. But they are telling it's next to smashana. And I don't want, many people don't like the vibes of a cemetery. Because it is, souls will be going everywhere. I don't want that. Imagine in the middle of the night, you'll get up, somebody is looking at you, like, what's up bro, how are you? Right? So, I cannot help it, ma'am. You are 100% correct. This entire area 105 only. But our house, I cannot sell. With great difficulty, I have found somebody who is giving 100 lakhs. His grandfather was buried next, it seems. That's why he wants to buy. His grandfather had given him many land, a lot of money he has made. So, he wants to buy there only. Good. So, what do you think? A genuine case? Ma'am, please give me some breathing space. Just 5 lakh difference, no? Please. So, do you think they considered or not? Yes. There will be many such cases. Symmetry is one example. There are many such cases where SDV and your, here, slight difference, yes, slight difference. So, they came out with one threshold percentage. They came out with a threshold percentage. They said, what did they say? Because this is needed. So what did they say? They came out with a very good thing actually. They came out with a very good thing, guys. What did they say? They said, okay, if SDV is greater than 110% of the consideration, I'll give you 10% extra. Then only I will do SDV is equal to FVOC. But if SDV, if it is less than or equal to 110% of consideration, then what? Consideration only will be FVOC. What is SDV in this example? 105. What is 110% of consideration? 110. Is 105 more than 110? No. So will you take it as 105 or will you take it as 100? 100 only you will take, or 105? So anyway, if the SDV is more than 110% of consideration, then SDV is equal to FVOC. But if the SDV 105 is less than or equal to 110, 110% of 100 is what? 110 only. Is 105 less than 110? Yes. And the consideration 100, that itself is the FVOC. Government gave a threshold that, okay, consideration you take 10% plus you do. Your SDV should be within that 10% extra. To cover these peculiar cases of symmetry or anything for that matter, I will give you a buffer of 10% buffer. So they came out with this formula. It is very important for you to remember. If SDV is more than 110% of consideration, then SDV is equal to FVOC. If SDV is less than or equal to 110% of consideration, then consideration is equal to FVOC. Did you understand the logic? What is the threshold? 10%. Here you put that threshold and see now. First example. What is consideration? 70 lakh. What is 110% of consideration? 77 lakh. Is 110 lakh more than 77 lakh or less than 77 lakh? More than 77 lakh. So what is the FVOC? Still SDV. How much? 110. So much gap if it is there, 10% will have no use. It is to protect these genuine cases of symmetry and all those things which I gave you example. Some 5 lakhs, 6 lakhs here and there difference. For that to protect only this rule is there, not to protect everything. Got it? So final rule is this, guys. SDV greater than 110% of consideration, then SDV is equal to FVOC. If SDV is less than or equal to 110% of consideration, then consideration is equal to FVOC. Did you understand logic? Copy this. This formula is enough for you to understand. That's all. I told you the concept, but this is the formula. Ultimately, you have to remember this. 50C says this only. 50C says if SDV is greater than 110% of consideration, then SDV is equal to FVOC. Next, if SDV is less than or equal to 110% of consideration, then consideration is equal to FVOC. Got it? If SDV is greater than 110% of consideration, SDV is equal to FVOC. If SDV is less than or equal to 110% of consideration, then consideration is equal to FVOC. Got it? Understood, guys? So on sum you see, check. Only when you solve a sum, you'll understand that very clearly. Yes, leaving over. C. DC. I'll only give you an example, guys. I'll only give you. Write down. So, example. So, always know any sum, you should write 4 steps here. Step number 1, consideration. Step number 2, stamp duty value. Step number 3 should be 110% of consideration. Step number 4. Step number 4 should be what? It is step 2 versus step 3. Correct? If step 2 is greater than step 3, basically step 4 is FVOC. Step 4 is FVOC. If step 2 is greater than step 3, then what? Yeah, so basically FVOC will be step 2, or no? If step 2 is greater than step 3, then FVOC will be the step 2 SDV. Yes or no? All of you. Same thing. But if step 2 is less than or equal to step 3, then yes. Then step number 1 will be FVOC. FVOC is equal to step number 1. One, two, consideration 10 lakh, SDV 10 lakh 70,000. Consideration 10 lakh, SDV 11 lakh. Consideration 50 lakh, different scenarios. This one is 57 lakh. Fourth one, consideration 10 lakh. This one is 7 lakh 40,000. 7 lakh 40,000. Come on guys, solve. You just have to do 110% of step 1. Then you should compare and tell me what is the answer. You should figure out the FVOC. Remaining you can only solve. Solve it now. Answer. Here 110% will be how much, guys? Lakh, lakh, 55 lakh, 10, 11. So obviously this and this I should compare. There's this and this, sorry. So this or this, SDV is less than or more than? Less than. So what will be the FVOC? 10 lakh. Here, same. So 10 lakh. Here, 57 lakh is more than 55 lakh. So 57 lakh. 11 lakh 40 is more than 11 lakh. So 11 lakh 40. Everyone with me, understood? This is the entire scheme of things. Got it. Right. So last part of the day, this only. Yes. This is all. Over. Yeah. So last part of the day, guys. So here, this happened with my auntie only. My auntie, which is my mom's cousin. She was living in Netherlands all these years. So many years she lived there. And I understood the practical aspect when it happened with her only. And what did she do? She came back to India along with the uncle. Uncle was stinking rich. And uncle eventually passed away. But now the scene, what has happened is, they have bought a property in Madikeri. You know Madikeri? In Kodagu, Kurg. So it's a hill station. And in that hill, in the middle of the hills, they have one nice, very nice house, like one palace. So they bought it many years ago. I think 15 years ago. They bought it for 3 crore. What is the cost of acquisition? 3 crore. Today, the stamp duty value actually there is 10 crore. Stamp duty value is 10 crore. But the market value for that house is unfortunately 6 crore. Why? There is no smashana and all that. Don't worry. Why? Why? What risk? No, it is not outskirts. It's just next to. In Madikeri only. Madikeri, all houses are like that only. It's all like one estate and one house will be there. So what happened was 3-4 years ago, landslides had happened. Madikeri, if you remember, Kurg. So because of the landslides, all the other houses got destroyed. So though it is on top of a hill like this, but because of landslides, it is destroying all in and around houses. So people have a fear at what if this also gets destroyed. So even though the stamp duty value is not changed as per the municipality records, the real market value is just 6 crore. Now think about it. If my auntie sells it for 6 crore instead of 10 crore, what is the rule? SDV greater than 110% of consideration. 10 crore is definitely greater than 6.6 crore. My auntie has to pay tax on 10 crore. Unfair. Is she taking cash? No one is ready to pay more than 6 crore only. Real story it is. I didn't understand these provisions before, but then when I connected it with her case, then it made sense. What is the option available to my auntie? She can go to Nirmala auntie. Right? And she can say, Madam, it's not that I am taking 6 crore bank, 4 crore cash. No, I do this. Your SDV only is wrong. Your SDV it's wrong because real market value is actually very less. The SDV and market value should be almost same. But in this case, market value is very less. Practical life, market value will always be more than SDV. Practical life, market value will be more than SDV. But in this peculiar case, market value is lesser than SDV. So I can go to a valuation officer of the income tax department. I can tell the assessing officer, sir, this is wrong. Before you charge me on 10 crore, now only I am applying to you. Please, you'll think that I am going to be corrupt, right? You only appoint a valuation officer from the department. The department, income tax department, will have a certified valuation. He cannot cheat like that. So on an application to the assessing officer, I will go to the valuation officer and tell him his market value is 6 crore only. This will be my consideration. But this SDV is only wrong. Please see what can be done. I am getting only 6 crore here. Please see what can be done. Now tell me guys, valuation officer can do 3 things. That valuation officer becomes one mental fellow. He will tell, according to me, fair market value is 12 crore, he'll tell. He'll increase this 10 crore to 12 crore. That he can do once. Or he can say, according to me, the fair market value is only 4 crore. Boss, the fellow is ready to buy it for 6 crore. You are making it less 4 crore. Nirmala aunty will slap that fellow. Or a good valuation officer will go somewhere in between these two. He will say, no, 6 crore is very less. I think it is 8 crore. Yes. Three options. One is beyond SDV, one is below market value, and one more he will fix in between the two. Now tell me, if he is going beyond that 10 crore only, this will have to be ignored. Nothing can be done, guys. Why will I take that 12 crore? It is not possible. So then they say the FVOC is equal to consideration only. Please take that only. It's okay, no problem. What is consideration? 6 crore only you take. Close it. I don't take 10 crore, take 6 crore and close it. It is wrong. Right? It is right or wrong, guys? What do you think? 100% wrong. Who will, in the right mind, who will do this? Will anybody do this? No. So if the valuation officer determines something more than the SDV, sorry, not consideration, not the valuation officer determines something more than the SDV. According to valuation officer, SDV should be higher. So I will say, sorry, FVOC will be the SDV only, 10 crore. Don't take 6 crore, take 10 crore. 10 crore only you should take, no choice. Because you went and fought saying that 10 crore is not 10 crore. But valuation officer is telling 12 crore, which means 10 crore should be correct only. I'm sorry, you should pay tax on 10 crore. Otherwise, wait for the prices to go up. Nothing can be done. This is a rare circumstance, it will not happen. One more you can do. FMV will make it 4 crore. So the valuation officer, what will he do? Valuation officer's value will be less than the selling price only or the consideration. This case, guys, FVOC is equal to what? Selling price. How much is it? 6 crore. Correct or not? 6 crore. Third is the most important thing. This really makes sense. If value determined by valuation officer is definitely less than the stamp duty value, but valuation officer's rate is more than the selling price. More than the selling price. Then they say the valuation officer's value will be the FVOC. How much is it? 8 crore. Pay tax on 10 crore, 6 crore or 8 crore? Pay tax on 8 crore. Pay tax on 8 crore. Makes sense? This is a very peculiar case when SDV greater than 110% is not followed. You cannot practically follow it. You can go through this method. Go through this method. Right? Copy, guys. So what is the cost of acquisition? 3 crore. What is the SDV? 10 crore. What is the market value? 6 crore. So I go to a valuation officer. Valuation officer's value is these values. Valuation officer's values are these values. 12 crore, 4 crore, 8 crore. 12 crore, 4 crore, 8 crore. Got it, guys? This is the provision. FMB 12 crore, 4 crore, 8 crore. Got it? So this is a special case only, not in all cases, special case. General rule, that general rule you should never forget. What is that? SDV more than 110% of consideration, then SDV is equal to FEOC. One more, SDV is less than or equal to 110% of consideration, then FEOC is equal to consideration. Alright guys, this much is enough for the day. So tomorrow we'll... Yes guys, good morning. How are you all? Fine, superb. So let's revise quickly. Yesterday we were discussing the... Yes, types of capital asset we did yesterday. Huh? Alright, that was day before yesterday. Yeah, I don't even remember what we do. Yeah, exemptions, correct. Sorry, the conditions and special provisions. Cool, I think we started off with this, yes. So property acquired before 1/4/2001 should always be what? Now we should see whether it is cost or FMB, whichever is higher. But then we also saw that SDV, so FMB or SDV, whichever is less, and then that or cost, whichever is high. We have to do, we understood the logic. For everything we are talking about the logic so that it's easy. Then we saw the the exceptions. General rule is what? The year of transfer will be year of taxation. But there are 4 exceptions to it. In these 4 exceptions, year of transfer will not be year of taxation. Transfer will happen some year. The taxation is postponed to some other year. Calculation will all be till which year? Transfer. Calculation will be till year of transfer, but the taxation is postponed to some other year. That's all we need to see. So, 4 exceptions. Exception number 1. Conversion of capital asset into stock in trade. In that case, the FMB will be considered as the FEOC. And however, whenever that stock in trade is sold in the future, that only will be considered as what? The taxation will happen only on that day. That is what we saw. Right, and then yeah, conversion of capital asset into stock in trade, compulsory acquisition of capital asset, damage, destruction of capital asset, then joint development agreement, then compulsory acquisition of capital asset. So when you compulsorily acquire, you will get a initial compensation, then you will get additional compensation, enhanced compensation. Whenever you get initial compensation, that is a short compensation. The day you receive it, you need to pay tax. Even though if you receive in installments also, first installment only you have to pay tax. Whereas final enhanced compensation, as and when you get money, you have to pay tax. But there is something called interim compensation. Interim means what? Temporary. Means it's like until the final order is passed, initially I'll pay you something. So there, if they have given you a interim order, and then later they will give you final order. Based on final order, whatever payment comes, that will be taxed at the time of payment of final order. But interim order, if they have given you, that even though you receive it in 1 year, it will be taxed only in the year when the final order is passed. We saw all the variations, everything we saw. That's about it. And then we saw the, what is that? Third one, if there is any force majeure, except arson, like fire, whatever it is, then in that case, what happens? The thing is postponed to the day when the insurance money you will receive. And then we saw joint development agreement. So year of transfer is the year when possession is handed over to you, whereas the year of tax is the day you get the completion certificate, either in part or in whole. Then we did the first special provision, section 50C, whereby the stamp duty value only is treated as the FEOC. So people were, even though the stamp duty value was 100 lakh, people were selling it at 60-70 lakh, remaining they were doing cash. They said nothing doing, stamp duty value should be taken into account. Stamp duty value and market value almost is the same. Generally, stamp duty value will be slightly lesser. But people also want to ensure that the consideration and stamp duty value should be almost the same, but I'll give you a 10% threshold, because of which they came out with a formula. If the SDV is greater than 110% of consideration, then FEOC is equal to SDV. On the other hand, if SDV happens to be less than or equal to 110% of consideration, then consideration only is the FEOC. They say, okay, 10% I will agree. Nothing more, nothing less. But then I gave you a peculiar case of my auntie who, though the SDV was 10 crore, unfortunately the market value was very less because of landslide and so many things. Correct? Some cases, no, if any house is there where some suicide and all people have done there, that house also will not sell. Not joking. Nobody wants to buy only. So even though the market, the SDV is some, let's say 2 crore, people will be asking for 50 lakhs. Because obviously if any death is there in that particular house, it is treated as, bad karma. And they say there is a lot of, negativity around it. So many people, I have only seen many cases, they have not sold only. Not possible. This guy died in 2020, that actor, Sushant Singh Rajput. For 4 years, that house was not sold also, not rented out also. Imagine, nobody bought. That he was paying 5 lakh rupees per month rent. He was paying 5 lakh rupees per month rent. After he died in that house, for 4 years, people could not live there. Nobody wanted to. Now it is rented out again. So what I am trying to tell is, those things when it happens, genuinely, practically speaking, it will reduce. That time what should I do? I should go to the valuation officer and say, sir, there was a death in this house, sir. Death will be there in everybody's home, sir, but here it was like a suicide, murder, whatever it is. So, sir, it's not selling. The SDV, the actual market value of this place is way lesser than the SDV. Or like my aunt's case, where genuinely because of landslides, the market value was less. So the valuation officer will frame the value, right? If the valuation officer says SDV is more than whatever you have given, then you should only take the SDV, correct? Or if he says that the whatever consideration you are giving, the SDV is less than that, then that should be ignored. But if he fixes a rate in between what? In between the consideration and the SDV, then that amount will be taken as the FEOC. We saw that yesterday. No, that's what it is. These are all the various things that you have to keep in mind. Right here. So, one concept capsule we'll see. Question number 15. Mr. Appa, name only is Appa, awesome. Mr. Appa acquired a building in previous year 87-88 for 4 lakh rupees, right? The fair market value of the property as on 1/4/2002 was 10 lakhs. 1/4/2001. 1/4/2001 was 10 lakh. He sold the property to Miss Ragini on 7/7/24 for 80 lakh rupees. Stamp duty paid at the time of registration of the property was 6,28,000. 7% it is. Stamp duty was 6,70,000. There is 7%. 7% is the stamp duty. Guys, like this, if they give, how do I compute stamp duty value? 6,28,000 is the stamp duty paid. What is the stamp duty value of the house? If 6,28,000 is 7%, what will be 100%? That's all. 6,28,000 divided by 0.07, you will get the answer. How much? Guys, 6,28,000 is 7%. What is 100%? 89 lakhs. That is how you should compute. If they give you stamp duty paid and they'll give you percentage. Stamp duty is always paid on the percentage of the full amount. So if they give you stamp duty like this, you should compute the overall thing. 6,28,000 at 7%. Transfer expenses to Mr. Appa amounted to 1,50,000. Commission paid by him to the broker at the time of sale was 1%. Calculate the capital gain in the hands of Mr. Appa. So here, what should you do? 4 lakh or 10 lakh? Whichever is higher, first of all. 10 lakh. But that 10 lakh is in 1/4/2001. From there, I have to pull it to 2024. So I should do into 363 by 100. Yes or no? Yes, that will be the cost. Correct? Yeah. First of all, what is the SDV? 6,28,000 into 100 by 7. So 89,71,429 will be my SDV. And what is the what will be the consideration? 80 lakhs. What is SDV? 89,71,429. What is the actual consideration? 80 lakh. 110% of consideration will be 88 lakh. Is SDV more than 110% of consideration? Yes. So 89,71,429 is more than 88 lakh. So FVOC will become my SDV. Total SDV 89,71,429. So even though I received 88 lakhs only in my bank account, unfortunately I have to pay tax on 89,71,429. That is the unfortunate part of the story. Whatever you do should never be less than SDV. So this is the computation of SDV and FEOC. So first I have to compute the SDV, that is by 100 by 7, because 7% is 6,28,000, what is 100%? Then I will compare it with the actual consideration 80 lakh. Then I will do 110% of 80 lakh, 88 lakh. Then I will do, is SDV more than 110% of consideration? In this question, answer is yes. So 89,71,429 is more than 88 lakh. So FVOC is equal to SDV. Computation of capital gain. FVOC is how much, guys? 89,71,429 because of 50C. Did I actually receive so much money? No, I received only 80 lakhs. I received only 80 lakhs. I have to pay extra tax on 9,71,429 because of this 50C calculation. So I should take my FVOC as 89,71,429 as per 50C. Then what are the transfer expenses here? See, 1,50,000. Then brokerage 1%. Guys, brokerage will be on 80 lakh or brokerage will be on 89 lakh? 80 lakh, no, that is what I actually got. Don't make it on 89 lakh. FVOC is the deemed consideration here under 50C. That is one more mistake we'll do. We'll do 1% on 89 lakh. No, how much actually I am paying him? Only 80 lakh, 80,000. 1% of 80 lakh is 80,000. So 1,50,000 commission, 80,000 brokerage. Sorry, commission is 1%. This 1,50,000 is some transfer expense. The net consideration is how much? 87,41,429. Then cost I should do. How much is the cost? Will be wrong. How much will be the cost? 10 lakh into 363. How much will it be? 36 lakh 30,000. How much? $51 lakh. 51,11,429. 51,11,429. That's all. So I should do this first. I should compute the SDV, the actual consideration, POC, less transfer expenses, less commission, net consideration, less cost of acquisition, FME on cost, LTCG. So that is what I have to compute. Got it? That is special provision number 1. That's it, guys. Simple. Next. Now, also we saw if TV is what, all that we have seen. One MCQ question they may ask, that I'll discuss later. No problem. Next, guys, second question. Second point. Special provision number 2. Write down. Special provision number 2. Special provision. Did you write this or you want time to write? Okay, right. Sorry. Write down, guys. Computation of SDV. I'll give you time. Write down. This is question number 15. Computation of SDV. Write down. I scroll down. Copy. FEOC. Guys, this 1 and 2. This is commission. This is which one? Transfer expense. transfer expenses. Done. 51 lakh 11,429. Second point, write down, guys. Second point. So before second point, before special provision number 2, one more thing is write down this example. Sir, RCB on 24/8/22 bought a house. Selling price was 1 crore. SDV was 1.09 crore. On 24/8/22, selling price was 1 crore. SDV was 1.09 crore. And he signed something called as AFS. AFS means what? Agreement for sale. Agreement for sale. Is it a sale deed? No. When you want to buy a house, no, initially they will pay some amount. Some basic amount you will pay. When you pay that amount, you will enter into something called agreement for sale. On the day when you paid some amount, no, agreement for sale, what was the SDV? 1.09 crore. But on the date of registration, on 14th October 23, 1 year later, selling price was still 1 crore, obviously, because that is what we had discussed. But SDV had become 1.2 crore. SDV will keep on changing every 6 to 7 months. Government will update it. SDV became 1.2 crore. Now, if you take on 24th August 2022, the problem is SDV more than 110% or SDV is less than 110%? What is selling price? 1 crore. What is 110% of 1 crore? 1.1. SDV is less than 1.1 or SDV is more than 1.1? Less than 1.1. So what should you take consideration? But the moment you go to 14th October, unfortunately, SDV is 1.2 crore. Is it more than 110% or less than 110%? More than 110%. So it will become 1.2. What will you take? SDV we will take. But now what is the correct answer? Will you take 1.2 or will you take 1? What I am indirectly asking is SDV should be seen on which date? Agreement for sale or registration? That is the question. So write down. You wrote this example? Write down this example and then I'll dictate the answer. This is, you should see this very clearly in the exam. Sometimes they'll give you two SDVs. One is on the agreement for sale date, one is on the registration date. So if you take the agreement for sale date, it would be 1 crore. If you take the registration date, it will unfortunately be 1.2 crore. The SDV should be seen on which date is the question. Write down, SDV should always be seen. SDV should always be seen. SDV should always be seen on the date of registration. SDV should always be seen on the date of registration. SDV should always be seen on the date of registration. However, SDV as on agreement for sale. SDV as on agreement for sale can also be taken into account. Can also be taken into account if some payment is made. Some payment is made. Otherwise than what? Cash. Otherwise than cash. What is that? Cross check. Otherwise than cash cross check. Would have seen that in 40A3 and all that, no? Basically, we should make payment through banking channels. EFT, IMPS, account pay, check. If you've made some payment also is okay. Some 10%, 5%, then you can take on that day only. So now in this question, if you have made some payment on agreement for sale date, booking amount or whatever it is, some installment you have paid, then what amount you will take? 1 crore. You will take FVOC as 1 crore. But if you have actually paid nothing on agreement for sale, but you have paid everything on registration, then what you should take always? Registration. So always it should be taken on registration. But you can also take on agreement for sale date if you have made some payment. Here, that is this. 24th August 22, 14th October 23. Point number 2, write down, guys. Special provision number 2. Special provision number 1 was 50C. Special provision number 2 is section 51. Advance money forfeited. Advance money forfeited. That's called token money. Advance money forfeited. Section 51. Token money. What is this, guys? You want to sell a house, you'll approach me first. I'll ask how much. You will tell 1 crore. Then you will say, sir, pay some advance. I'll tell how much. Pay some 5 lakhs. I'll pay. But you will tell, sir, one condition, sir, if you don't buy this house in the future, you should make the payment in the next 3 months, sir. If you don't make the payment, sir, at 5 lakhs, I will only keep. It is a non-refundable amount. That is called, I will forfeit that amount. So you have the house, you will approach me, you will ask for 1 crore. that you will first ask for booking amount of 5 lakh. The booking amount a deposit? No, it is actual money. Is it non-refundable? Yes. Because it is blocked in your name and you have to purchase in the next 3 months. I will pay you 5 lakh rupees. After paying 5 lakh rupees, we sign the agreement, everything, where it's clearly mentioned it is non-refundable. I agree. After some time, in 3 months also, I cannot pay the amount. So what will you do with that 5 lakhs? You will keep it. Question is, Nirmala madam come and tax that also. That 5 lakhs is in your hand. Is it taxable? Did the sale happen? No. So if you tax it, what will it be? Is it taxed? Let's say that 1 crore house, you had purchased it for 20 lakhs. You are selling it for 1 crore to me, no? I have given you 5 lakhs. You had purchased it for 20 lakhs some 15 years ago. Now this 5 lakhs, you have it in hand. That 5 lakhs will be, only 2 things can happen. 3 things. One, you will not tax it. Tax free. Second one, you will reduce it from the cost of acquisition. Your cost was how much? 20 lakhs, I told you. Now this 5 lakhs, you are reducing from that. Because you have received something which obviously is you can keep. Third one, it is taxable as IFOS. What do you think? So write down this entire thing, then write down. Whatever I told you, write down, then you tell me the answer. Write down, guys. You write your name, Mr. or Miss. Mr. or Miss, your name. Mr. or Miss, your name. Purchased a house for 20 lakh rupees. Purchased a house for 20 lakh rupees. The year 2010. The year 2010. In 2024, he or she, that is you guys, you can write your name, decided to sell it to Mr. PJ. Decided to sell it to Mr. PJ. Decided to sell it to Mr. PJ for 1 crore rupees. For 1 crore rupees. Then, Sir or Miss, your name. Sir or Miss, your name. Collected 5 lakh. Collected 5 lakh as non-refundable booking amount. Collected 5 lakh as non-refundable booking amount. In bracket, advance. Non-refundable booking amount within bracket, advance. From Mr. PJ. From Mr. The balance had to be paid in 3 months. The balance had to be paid within 3 months. Mr. PJ gave Kai. Give Kai means what? Didn't pay. Right? Yes, Mr. PJ did not pay. That 5 lakh was forfeited. That 5 lakh was forfeited. All gone. The correct tax treatment would be. Correct tax treatment would be. First one. Reduce 5 lakh. Reduce 5 lakh from cost of acquisition of 20 lakh. Reduce 5 lakh from cost of acquisition of 20 lakh. Second one. Do not touch cost of acquisition. Do not touch cost of acquisition. $5 lakh will be IFOS. 5 lakh is taxable as IFOS. 5 lakh taxable as IFOS. Third point. 5 lakh is capital receipt not taxable. 5 lakh is capital receipt not taxable. What do you think? What do you think? Capital asset not taxable? Sorry, capital receipt not taxable, or what? What is the answer? Taxable. Tell me. Do you think? So actually, this is what it is. It was, to be honest with you, before 2014, no, they were stupidly reducing it from the cost of acquisition. That is very, very stupid. I bought my house in 2010. Advance you received in 2024, 14 years later. You go back and reduce the cost of acquisition. You reduce the cost of acquisition to 15 lakhs from 20 minus 5 is 15. When you do indexation, you will do indexation on 15 or indexation on 20? Indexation on 15. So weird. You bought the house in 2010. You received advance in 2024. Then next seller you will sell it to some other seller. You are selling it to some other seller, some other buyer. You are selling it to some other buyer. You will sell that whatever amount you will sell, and when you subtract the cost of acquisition, what they are trying to tell you is you should do 20 minus 5, 15. And that 15 lakh indexation will now be given from which year? 2010. Isn't it weird? 14 years later you received money, you go back and reduce that money, and now that reduced money you are giving indexation. It is very, very absurd, but that was the treatment till 2014. It was very, very stupid. And what if your cost of acquisition was 10 lakh and your amount forfeited was 15 lakh? So will the cost of acquisition become nil or minus? See, that all those problems were there. It was really, really a very stupid provision in 2014. After 2014, they decided should not touch cost of acquisition at all at any cost. Now, is this 5 lakh taxable or not taxable? Do you really think Nirmala madam will say not taxable? No. Taxable as what? Income from other sources. So this is the chart. Take it out. Tell you, yeah, see. Advance money forfeited before 1/4/2014. Section 51. Reduce from cost of acquisition. But after 1/4/2014, 5629. Income from other sources. Advance money forfeited will be taxable in the year of forfeiture only. So this is reduced from cost of acquisition. See, if asset was acquired on or after 1/4/2001, I will reduce. Or I will reduce from FMV also, imagine. Horrible it was. I will reduce from FMV as on 1/4/2001. If the house was purchased in 1980, I will bring it to FMV as on 1/4/2001. No. This advance was deducted from that FMV. Very, very stupid, guys. Illogical provisions. If it was WDV, then I will reduce from the WDV also in case of depreciable asset. Monies payable. Remember WDV? Monies payable. Guys, PGBP, do you remember? Additions. Opening WDV. Additions minus sale. Less monies payable was there. That money is payable, they would reduce. So absurd, very, very weird. This is not at all followed now. You can just write down for your knowledge what is followed now after 1/4/2014. Very simple. New section is inserted called 5629 under income from other sources. Is it taxable? Yes. Yes, taxable. This is the treatment of advance money forfeited. Please copy down. Do you understand, guys? Left hand side is just for your knowledge. Very rarely they'll ask in the exam. Just for your knowledge, the correct treatment is on the right hand side after 1/4/2014. Advance received before 1/4/2014, the other treatment. Advance received after 1/4/2014, very easy now. Ignore cost of acquisition, directly reduce. Sorry, directly tax under IFOS. We're done? So, the left hand side may or may not give, guys, but right hand generally they'll ask. But in case in the question they have told that you had received the advance before 1/4/2014, just say that you have to see this. Right? Yes. So you will reduce from the cost of acquisition if it is advance is received before 1/4/2014. Otherwise, no. See, question number 18, please read. Question number 18. Mr. Abi acquired a residential property in the previous year 2002-2003 for 4 lakh rupees. What is the cost of acquisition? 4 lakh. During the previous year 10-11, he entered into an agreement to sell his property with Mr. Srinivas for 60 lakh rupees and received an advance of 80,000. Advance he has taken 80. Since Mr. Srinivas did not pay the remaining amount, Abhi forfeited the money received. Mr. Abhi again entered into an agreement for sale with Mr. Das Gupta on 17th August 2024 for 80 lakh and then received an advance of 2 lakh 50. The agreement also did not go through and advance was forfeited. Finally, on 20th March 25, Mr. Abhi sold the property to Mr. Pinto for 76 lakh. Expenses on transfer was 1 lakh 20. Pinto also paid 5 lakh on the same date. Calculate the capital gains. Guys, 2 times it has been forfeited. One was before 2014, one was after 2014. For before 2014, what will you do with this 80,000 rupees? Reduce from the cost of acquisition of 4 lakh. And this 2 lakh 50,000, one more advance money forfeited will directly be IFOS. Or no? Eventually he sold. What is the FVOC? 76 lakh. Expense on transfer 1 lakh 20. He's already paid 5 lakh on the same date. He's already paid the advance amount in bank account. That's why you should take the SDV or FVOC, whatever, on which date? That date, 76 lakh. Capital gain will be 76 lakh minus advance amount 1 lakh 20. Cost of acquisition will be how much? 3 lakh 20. Yes, 4 lakh minus 80, 3 lakh 20. That 3 lakh 20 should come from which day? From 10-11 to, I have to pull it till 24-25. Understood? So, structure will be like this, you see. Cost of acquisition 4 lakh. Abhi first gave to Srinivas before 1/4/2014. This 80k will be forfeited and reduced from the cost of acquisition. Whereas after 1/4/2014 to Mr. Das Gupta, advance of 2 lakh 50 will be forfeited. It will go to IFOS the year 22-23. And Pinto finally 76 lakhs. Right? So how much will it be? FVOC 76 lakh, transfer expenses 1 lakh 20, net consideration this much. Cost of acquisition will be 4 lakh minus 80,000 into 363 by 100. Into 363 by 100. 7 lakh 7,000. What is the final LTCG? 3,18,400. And IFOS will be 2 lakh 50 in which year? In that year. Here is this. That same year. Before 24-25, IFOS will be 2 lakh 50. Come from other. So it copy down. This lakh 50,000 will be this year 24. Copy down. Question number 18, guys. This is all concept capsules. Question number 18. So before 1/4/2014, after 1/4/2014. Some structure if you write down, just for your understanding. That's Then guys, this will be 2 lakh 50. Alright guys. Now, one interesting thing guys, we will discuss that in a while, but your father had bought the property in 1980, assume, for 20 lakhs. And your father has gifted you that property in 2020. My question to you is, you are now the owner of that property. Your father has gifted it to you. What is your cost of acquisition? And in 2024, you sell it to me for 1 crore. What is the sale consideration? 1 crore. Less cost of acquisition. Is it zero for you? Is it zero, or will the cost come from your father? That is the question. So that you will answer it either as 0 or as 20 lakhs, depending on whether you agree that is gift a transfer or gift not a transfer. If gift is a transfer, then your father has transferred a 20 lakh property for 0. Then your cost of acquisition will be 0. But if you say gift is not at all a transfer, then you will say everything will come from the previous owner. Cost of acquisition will come from the previous owner. Period of holding will come from the previous owner. The period of holding according to you will be from 2020 to 2024, or is it from 1980 to 2024? So what will come from the previous owner is the question. So simple rule, gift is not a transfer. At a later stage, we will see that gift is not a transfer. When anybody gifts you something, everything comes from the previous owner. Cost comes from the previous owner. Then period of holding comes from the previous owner. Why I told you this was, now think about it. Your father had bought a property in 1980. In 1990, he decided to sell it. Some advance he took from somebody. Then it got forfeited. Again in 2000, he wanted to sell it. Advance was forfeited. Then in 2020, he gifted it to you. And then you sold it further. My question to you is, Your cost of acquisition will be, I told you, will be coming from the previous owner. That is how much is your father bought it for 20 lakhs. My question to you is, should you also subtract advance money forfeited by your father from the cost of acquisition? It all happened before 2014. What do you think? Did you understand the question? First of all, gift is not a transfer, right? Everything comes from the previous owner. So I told you one example. Your father had bought the property in 1980 for 20 lakhs. In 1990, he tried to sell 1 lakh, he took advance, didn't go through. In 2000, he wanted to sell 2 lakhs, he took advance, didn't go through, forfeited. So in 2020, he just gifted it to you. So what is your cost of acquisition coming from the previous owner? 20 lakh. My question to you is, this 1 lakh and 2 lakh advance money which he got forfeited, should you reduce it from the cost of acquisition? So tomorrow when you are selling the property, you will sell it for 2 crore. Less cost will be 20 lakh or 20 lakh minus 2 minus 1. This is the last part of the story here, right? So what do you think? Guys, actually it should be 20 lakh minus 2 minus 1, no? Because everything is coming from previous owner. Very, very illogical section is there. It says advance from the previous owner should be ignored. How? God only knows. Whatever you told was 100% correct. It should be 20 lakh minus 2 minus 1. You are 100. That's why I didn't even tell you anything. I only asked you. You logically analyzed it and told. Unfortunately, what does the lawmaker say? Advance money received from the previous owner should be ignored. So if your father has received advance money and forfeited it, but has gifted the property to you, your cost of acquisition will be 20 lakh only, and not 20 minus 3 minus 1. Really makes no sense. Doesn't make any sense. Illogical point. So when you do the gift taxation, when it gives you the gift, what will transfer? Only the cost will transfer. What about advance money forfeited? Not taken into account. Right? So I'll give you this example, then you can copy. See, Miss Sheila. So Sheila went off. Yeah. Right. Yeah. Miss Sheila, okay, let me make it full screen, and then you can copy down. Miss Sheila, in the year 2002-2003, has a property worth 1 crore. He was about to sell it to Mr. K.D. Atesh. On 2009-2010, gave 10 lakh, got forfeited. Correct? Got forfeited. Then will gift it to Kaushik in 14-15. And I told you gift is not a transfer. Gift is not a transfer. So for Kaushik, the cost of acquisition will be 1 crore or 90 lakhs. Actually, it should be 90 lakhs, yes or no? And when you are subtracting, here they are telling don't subtract. How? It's really illogical. Unfortunately, cost is 1 crore. Anyway, now Kaushik is selling it in 22-23 to Mr. Abu for 4 crore rupees. Now, gift is not a transfer. POH means what? Period of holding will be from the previous owner and the current owner. What is the previous owner? 2000 to 2003 to 14-15 and 14-15 to 22-23. Cost of improvement. It is incurred by previous owner after 1/4/2001 and incurred by current owner. Everything you should take. But advance money forfeited from the previous owner. Advance money forfeited from the previous owner has to be ignored. Is it a logical point? Illogical point? Illogical point. They also don't know how they inside. It's still prevalent. But now anyway, after 2014, no tension. Will you touch the cost of acquisition? No. What will you do? Directly take it under IFOS. Everybody understood this point? Copy, guys. All easy, guys. Full logic. There is no mugging up. Some illogical points will be there like this. Nothing can be done. It is 100% illogical. Doesn't make any sense. Gift is not a transfer, mind you. Gift is not a transfer. What doubt? Which one? Previous. Gift is not a, this one, no? One? Gift is not a transfer. POH, this period of holding is previous owner plus current owner. So from which angle? From every angle. Plus current owner. Right? Plus current owner. 0203 to 1415 plus 1415 to 2223. Then cost of acquisition is coming from the previous owner. Cost of improvement is also coming from what? Previous owner. Done? Next, write down. Special provision number 3. I just told you, there are certain things which is not a transfer. One example is gift. Like that, there are many things which are not a transfer. Even though it is a transfer, it is not a transfer. For example, if I gift something to you, am I transferring ownership to you? Yes. Shouldn't it be a transfer? Yes. But lawmaker specifically tells it is not a transfer. There are some few points which is not a transfer. One by one we should write down. Write down, guys. Third point, special provision number 3, section 47. Special provision number 3, section 47. Transactions not regarded as transfer. Special provision number 3, section 47. Transactions not regarded as transfer. Special provision number 3, section 47. Transactions not regarded as transfer. Means what? These are exempt. No capital gain tax. If I gift my property to you, is there any capital gains for me? No. First one. Hindu undivided family transferring family asset to members. You can write down like this only. HUF transferring family asset to members. HUF transferring family asset to members. Guys, a Hindu undivided family will do partition of the HUF and then distribute everything to members. Is it taxable for HUF? No. Specifically exempt. Specifically exempt. Second one. Gift, will, inheritance. Gift, will, and inheritance. Gift, will, inheritance. Slash, you can also write irrevocable transfer. Irrevocable transfer. Gift, will, inheritance, irrevocable transfer. Irrevocable means what? Cannot be cancelled. Irrevocable transfer. Gift, will, inheritance, irrevocable transfer. Now tell me, guys, can a company gift its property to the director? Is it taxable? Okay, in the previous example, one individual gifted one more individual a property. Is it taxable or not? Not taxable. What about company? Company has one of the assets, houses. It has now transferred it for free to its director. Is it taxable or not? Sorry? Perquisite is if you just let you use it. I'm saying I'm transferring the full thing to you. I'm transferring the ownership. It will become a perquisite if I let you use it. I have a car, I let you use the car, then it's perquisite. Assuming you're an employee. But I am just transferring the full ownership to you. Guys, people were doing all these things. They were buying in the name of the company, then gifting it to individuals. 2024, Nirmala Madam put a stop to it. He said, gift, will, inheritance will only apply to individual or HF. That's it. If a company does that, it will be taxable. This is a very, very new section, a new edition. You see, if you see in our notes, page 8.23, you see. Transfer of a capital asset by individual or Hindu undivided family. Amendment, it is via 2020. So gift, will, irrevocable trust. Irrevocable means cannot be cancelled. I am giving something to you and I cannot cancel it, which means with my whole heart I have given it to you and I am not going to take it back. That is called irrevocable trust. So here only you can write down, it is only for whom? Only for individual. Gift, will, inheritance, only for whom? Individual or HF. But I write down exception. Exception. If ESOP is gifted, employee stock option plan, ESOP. What is ESOP, guys? Employee stock option plan. Basically, if you are working in a company, for your honesty and for your hard work, they will allot some shares in your name. Can you gift that to somebody else? You receive Infosys. Narayan Murthy told you to work for 70 hours, you are working for 90 hours. You don't have a life. He becomes happy and gives you shares worth 20 lakhs. You now gift that 20 lakhs to your wife because you didn't spend time with her. So you will give that 20 lakhs to her. Nirmal auntie tax that. Yes. Because generally gift by an individual is not taxable. What's the exception? Gift of ESOP. What's the exception? When employee stock option plan is gifted by employee to somebody else. An ESOP is gifted by employee to somebody else. Company will give him. He will gift it further. When he is gifting further, is it taxable or not? Taxable. When ESOP is gifted by employee to somebody else, exemption does not apply. Exemption does not apply. Tell me, guys. I received 20 lakh worth of shares from Infosys. I have gifted that to you. Exempt or not? Not exempt. Now the question is, what will be my FEOC? There is no exemption. I have to pay tax. What is the FEOC? Yeah, FMB. What is the value? I have received it for free. No, it is the FMB. The FEOC is equal to FMB as on the date of gift. FEOC is equal to FMB as on the date of gift. Third one. Third one. Transfer of capital asset. Transfer of capital asset to government or university or museum. To government slash university, to government slash university slash National Museum or Art Gallery. Museum or art gallery. So guys, if you feel that you have something which is worth crores, you just gift it off to somebody. To whom? To a government museum. Then that is not a transfer. It is not a transfer. So one of my dad's friends had recorded very endangered species of birds. The Western Ghats. He had gone to this Agumbe and all Western Ghats, and he had recorded almost 100 plus species of birds which nobody had even heard their voices. So he had gone into the deep jungle and recorded. That was almost worth 2 crore rupees. If he had sold it to BBC or National Geographic, they would have purchased it for 2 crores. He went to Bombay Natural History Museum and donated everything. True story. Then I realized, that is exempt. Right? So I gifted it off. If Nirmala madam wanted, she could have said, okay, you gifted, but still it is taxable. How much? 2 crore. And nobody will gift. No. That's why he actually went and gave that entire thing free to the Bombay Natural History Museum in Mumbai. So, yes. Is it taxable or not? Not taxable. It is not taxable. That's the third point. Right? Fourth point. Transfer of capital asset. Transfer of capital asset. By holding company to 100% subsidiary company. Transfer of capital asset by holding company to 100% subsidiary company. Or subsidiary company to 100% holding company. Subsidiary company to 100% holding company. Transfer? No. Conditions. Write down conditions. What did you write? Holding company to 100% subsidiary company and subsidiary company to 100% holding company. It is not a transfer. Wholly owned it should be. Wholly owned. The only condition is either the subsidiary company or holding company should be an Indian company. Should be an Indian company. I'll give you an example. You write down the example, you'll understand. See, let us take Tesla Incorporated. Tesla Incorporated is USA based company. It has 100% subsidiary Tesla Bangalore. So, holding company, this is wholly owned Indian subsidiary. And this subsidiary company is a Indian company. So, any asset transferred by Tesla Incorporated to Tesla Bangalore, taxable or not taxable? Not taxable. Taxable or not taxable? Not taxable. It is transfer or not a transfer? Not a transfer. So, Tesla Incorporated USA gives 100% to Tesla Bangalore. It's an Indian company. Holding company is giving 100% to wholly owned Indian subsidiary. What do you think? Covered or not? On the other hand, Reliance or there is this foreign subsidiary called Hamleys. Hamley is a toy company. Correct? Hamleys. Hamleys is Indian company or foreign company? Foreign company. Hamleys, UK. It is a 100% wholly owned subsidiary of Reliance. Hamleys is transferring asset to Reliance. Reliance is 100% holding company. Reliance is an Indian company. Is it taxable or not taxable? Not taxable. This is what they are trying to tell. 100% holding company is transferring to 100% subsidiary in India, but that Tesla incorporated subsidiary must be an Indian company. So here the condition must be what? Subsidiary must be Indian company. Here holding company must be Indian company. These conditions are satisfied. Any asset being transferred to India, it is not a transfer. Copy down this example, these two examples. Good guys. The thing. So holding company transferring to 100% subsidiary in India or 100% subsidiary abroad transferring to 100% holding company in India. Any asset is not a transfer. So conditions is first of all fully 100% owned it should be. Second one, subsidiary should be an Indian company in the first case. Here holding company should be an Indian company in the second case. That's why there are specific exemptions for these things. Next one. Write down, guys. Next point. Amalgamating company. Amalgamating company. Transferring a capital asset. Amalgamating company. Transferring a capital asset to amalgamated company. Amalgamating company transferring capital asset to amalgamated company. Is not transfer. If amalgamated company, then Indian company. Amalgamated company, then Indian company. Conditions. 3 conditions. Conditions. All the property of the amalgamating company. All the property of the amalgamating company should become the property of the amalgamated company. All the property of the amalgamating company become the property of the amalgamated company. Second, all liabilities of amalgamating company. All liabilities of amalgamating company should become liabilities of amalgamated company. Liabilities of amalgamating company should become liabilities of amalgamated company. Third one, shareholders having 75% of the shares. Shareholders having 75% of the shares become members of the amalgamated company. Should become shareholders of the amalgamated company. Become shareholders of the amalgamated company. So guys, this amalgamation, no, it can be in 2 types. Both are called amalgamation. One is in the nature of merger, one more in the nature of, that is purchase, that is amalgamation. So in amalgamation is called, one is normal amalgamation, one is merger by absorption, and then merger, that is again amalgamation. Both, everything is the same only. But there are differences. For example, if one company completely takes over one more company, that is called absorption. Whereas 2 companies come together, that is called amalgamation. For example, there was Reliance which took over a company called Tesseract. Tesseract was a company in Bangalore that took over all the artificial intelligence, etc. now is handled by Tesseract. So if Reliance completely took over Tesseract, that is called what? Absorption. On the other hand, Vodafone and Idea merged to become Vodafone Idea. In this case, Reliance in this case, Vodafone and Idea are called amalgamating company. This is called amalgamated company. Same thing. So in this Reliance is again, Tesseract is a amalgamating company. It is merging into Reliance. Reliance is the amalgamated company. So what are the conditions? All assets of Vodafone and Idea should become assets of Vodafone Idea. All liabilities of Vodafone and Idea should become liabilities of Vodafone Idea. And shareholders having 75% shares of Vodafone and Idea should now become the new shareholders of Vodafone Idea. Do you understand? That is the condition. Those are the conditions. Amalgamation is done. So, last part before we take a break, demerger. Demerger. Demerger also same. Demerger. Assets transferred by demerged company. Assets transferred by demerged company to the resulting company. To the resulting company is not a transfer. Not a transfer. If point number 1, same conditions as amalgamation. What? All assets should be transferred, all liabilities should be transferred, 75% should come same. Same conditions as amalgamation plus some 2-3 other conditions. Next condition. Same as those 3 are same, guys. 3 conditions of amalgamation plus resulting company should be an Indian company. Resulting company should be an Indian company. Resulting company should be an Indian company. Done? Yes. Yes, guys. So, before the break, we had done the other points. Couple of other points are there, write down. Which, how many points over? 6 points. Point number 7. Conversion of bonds slash debentures. Conversion of bonds slash debentures slash deposit certificates into shares or debentures of that company. To shares or debentures of that company. So guys, for example, if I have bonds or debentures which are convertible, 10,000 debentures at 10 each I issue in 1819 with a conversion ratio of 2 debentures. For every 2 debentures, 1 equity share will be given. So in 2022-23, for 10,000 debentures, I am going to get 5,000 equity shares, correct? 2:1 ratio. So in 2024-25, I am going to get how much? 5,000 equity shares into 1,000 each. So they'll give 1,000 each that. So is this, what do you say? Sorry, in 22-23. In 22-23, I am converting this 5,000, no? This conversion, is it a transfer? No. After conversion, let us assume in 24-25, I sell it at 1,000 rupees per share. Would that be capital gain? Yes. Is conversion transfer? No. But later when I sell it, would that be transfer? Yes. So conversion of bond, debenture, deposit certificate into shares or debentures of that company is not a transfer. So for example, debenture at 10%, if it is converted to debenture at 12.5%, that is not a transfer. What will be a transfer after conversion if it is sold? In 24-25, I am selling those 5,000 shares at how much? 1,000 rupees per share. Would that be capital gain? Yes. But if I convert 10,000 debentures into 5,000 equity shares, would that be transfer? No. Copy the example, guys, along with debenture example also. Debenture at 10% is converted to debenture at 12.5%, not a transfer. All examples. Guys, tell me, if I convert bonds of Tata Consultancy Services, TCS, if I convert bonds of TCS to shares of Tata Coffee, is it allowed? Is it transfer or not transfer? I repeat, if I convert bonds of TCS to shares of Tata Coffee, is it transfer or not a transfer? Why? Yes, the key word here is that company. Right? So you should understand that if I convert same group, bonds of TCS, Tata Consultancy Services, to equity shares of Tata Coffee, 100% transfer. Why? What is not a transfer? Conversion of one form to another form in that company is not a transfer. These are the two different companies. Did I say in that group? No, in that company. What about conversion of TCS bonds into, okay, what about conversion of preference shares of TCS to equity shares of TCS? Transfer, not a transfer. Transfer, because conversion of bond, deposits, debenture certificate to shares. Conversion of shares to shares not covered. This created a problem. They went and said, everything else you have given, why not preference shares? So they added a point. Next point, write down. Conversion of preference shares to equity shares of that company also not a transfer. They added it later. Because here it's missing, no? Isn't it missing? Yes. So conversion of preference shares to equity shares of that company also is not a transfer. Later they added it, 2-3 years later. Conversion of preference shares to equity shares of that company, not a transfer. Preference to equity of that company, not transfer. Next point, guys. Sovereign gold bonds redemption. Sovereign gold bonds redemption. Sovereign gold bond redemption issued by RBI. Sovereign gold bond redemption issued by RBI for an individual SSE. For an individual SSE is not a transfer. Sovereign gold bond redemption issued by RBI for an individual SSE is not a transfer. SGB. So sovereign gold bond is one gold bond. You invest in the bonds of RBI, they will give you the redemption money. That redemption money is not a transfer. Last point. Reverse mortgage is not a transfer. Last but one point. Reverse mortgage is not a transfer. Reverse mortgage. I'll explain what it is. Reverse mortgage is not a transfer. Reverse mortgage. So guys, generally, how does a mortgage work? You will need a loan. So you will give some security, or even if security is not there, you will get a loan from the bank. You will have to pay EMI to the bank. That's how a mortgage works. You have a property. That property you will give it the papers, you will give it to the bank. Bank will give you a loan and you will repay. There ends the matter. Reverse mortgage means what? This is a wonderful concept introduced by P. Chidambaram, Lungi man. Chidambaram, what he did, very nice. In his budget speech, he told, many people, many sons and daughters, after nicely using their parents' money and after ensuring that their parents take care of them really well, they abandon their parents and go abroad. Going abroad is okay. Abandoning their parents, they will throw their parents, they will not be in touch with them. Was happening. So the parents do not know where to go after a certain age. They'll only have one house, but they have no income. There is absolutely no support from the children. So many cases it has happened. So Chidambaram said, India will be like your children. Government of India will be your child. And we will ensure that we will help you. How? It's a very good concept. He said, your house which is there, no? You are living in a house. This house, you please give it to a bank. I will tell you which bank to give. You give it to the bank. Bank will pay you either a lump sum amount, or if you don't want lump sum, either little bit of lump sum amount plus they will give you per month annuity. Some amount they will give you annuity per month. That annuity will be like your EMI. Imagine. Who is paying? Generally, who will pay EMI? Borrower will pay. Your lender only is giving you. Crazy. House will be transferred to bank's name, or rather it will be the papers will be with the bank. The old people only will be the owners, but the papers will go to the bank. And in return, bank will give monthly payment to these people so that they can live their life. How many years will it be? Till the person dies. Till the person dies. Which means Government of India is telling, sir, don't worry, some security you give me the house, I will now look after you till your death. You don't have to worry. After I die, why will you care about that? We will take care, don't worry. You until you live, we will ensure we will take care of you. Wonderful concept. So when the house is being transferred to the bank, actually a transfer, capital gain will apply because I'm getting consideration. No, this is consideration. Is it a transfer or not? No. Now you may ask me, sir, what happens after that fellow dies? The couple dies. Until that you will be getting. After you die, I have paid so much money to you. I have paid almost 20-30 lakhs to you. Suddenly the son will come. I want the property. Properties and all, they'll come off, children. That time bank will say, boss, if you want, clear this loan. If you don't clear the loan, no problem. I will sell the house and anyway I'll get the money. So for bank, there is no loss. They'll anyway sell the property and get the money. Or you clear the loan now. Now, would that be a transfer when they are selling the house? That time only it's a transfer. Or if these people are alive, in some cases it may not be till the death, it will be for 20 years. After 20 years, if these husband and wife are still alive, can they only buy back the house if they want to? Yes. That is depending, if they want to, otherwise no problem. This is the wonderful concept of reverse mortgage, where mortgage is given to the bank, but bank is paying monthly. And there is no repayment concept only. When is the repayment? Death. I will sell the house and get the repayment. Wonderful concept. So, when I am giving my house to the bank, is it transfer or not a transfer? Not a transfer. When I am giving my house to the bank, is it transfer or not a transfer? Not a transfer. Got it? Not a transfer. You see? That money also that I am getting, no lump sum, is it taxable? Not a transfer. This is, okay, it is not a transfer. Is it taxable under IFOS or something? No, you see, section 1043 exempts any lump sum payment or any installment received under the scheme. Deadly. So when the loan is disbursed directly to the reverse mortgager, 20 years from the date of signing. And the loan is disbursed in part or full or period. So if I want like lump sum payment, full one shot payment, 20 years is the term. I don't want lump sum payment. I want monthly payment till I die. What is the term of the loan? Obviously, residual lifetime of the borrower means till the borrower dies. So in your lifetime, you don't have to repay only. That's the best part. After you die, bank will sell the house and get the money back. Or if the child wants to come, son and daughter wants to come and take over the property, what am I saying? Please pay and take over. Got it? Very, very good section. Reverse mortgage. Everyone understood? Yes, everybody? Called reverse mortgage. Very simple. Next point, last point guys in this heading. Last point, transfer of rupee denominated bonds. Transfer of rupee denominated bonds or government securities. Transfer of rupee denominated bonds or government securities by one non-resident to the other non-resident. By one non-resident to other non-resident outside India. Transfer of rupee denominated bonds or government securities by one non-resident to another non-resident outside India. What do you think? What is this guys? So India is telling you are a non-resident, you transfer to one more non-resident, transfer of shares. Is it actually taxable? Yes. But since I want you to buy and sell Indian securities, so I am denominating in rupee denominated bonds. or I am buying and selling what? Government security. In order to encourage people to buy bonds in Indian currency and also encourage non-residents to buy government securities, this exemption has been given. So if one non-resident sells rupee denominated bonds or government securities to one more non-resident outside India, is it transfer or not a transfer? Not a transfer. If it is not at all a transfer, there is no capital gain. So they are encouraging people to buy more and more rupee denominated bonds, which is a risk-free investment, or buy government security, which is also relatively risk-free investment. It is just a method to encourage people to buy more. That's all. Okay? Yes. Next, write down, guys. That's all. This is regarding special provision number 3. Next one, special provision number 4. Bonus shares. Bonus shares. Bonus shares. No need. Leave it. Bonus shares. Now tell me, guys. You only tell me. You have 100 shares already. Company issues you 100 more shares. Today you have 200 shares. What is the cost of acquisition of those 100 shares? First 100 shares you bought it at 1 lakh rupees. Second 100 shares was given to you as bonus. What is the cost of acquisition of the second 100 shares? Is it 0? What do you think? They are free, no? Capitalization of reserves. What is the money called? What do you think? Should I take FMV? What do you think? So you got market value. Market value will you take or cost? You would have bought Reliance shares for 1 lakh. Today the Reliance shares are 2 lakh. Now you get 100 more shares of Reliance. Cost will be 0 or you will take 1 lakh or 2 lakh? That was the question. Guys, bonus which is acquired before 1/4/2001. They said cost is nil. Cost is always nil, guys. Cost of acquisition of bonus is always nil. But if you received a bonus before 2001, 1980 you had bought shares, 1990 you got bonus. In 2001 what happened? You should bring everything to market value. But guys, bonus also, should it be market value? No, never. Bonus shares are always free. If the bonus is acquired before 1/4/2001, cost is nil. FMV as on 1/4/2001, whatever amount, whichever is higher. So obviously which will be higher? FMV only will be higher. It's a most illogical point. But bonus is acquired after 1/4/2001. Cost of acquisition will be nil. So in the question you please see when the bonus was issued. 99.99% it will always be issued after 1/4/2001. But if the bonus is acquired before 1/4/2001, what will be the cost? Unfortunately, cost nil or FMV, whichever is higher. So unfortunately I should take FMV. Stupid, but nothing can be done. Period of holding will be from the date of allotment to the date of transfer. Tomorrow when I am selling those bonus shares, what will be the period of holding? Whenever they allotted to me till the day I transfer. Do you understand? So this is, see in the question when the bonus was allotted. If the bonus was allotted before 1/4/2001, different treatment. It's a very stupid treatment. Cost or FMV, whichever is high. Obviously FMV only will be high. The bonus is acquired after 1/4/2001, different treatment. That is, cost of acquisition will be nil. Period of holding will be from the date of allotment to the date of transfer. And there is this one dialogue. If 112A applies and bonus is allotted before 1/2/2018, FMV benefit as on 31/1/2018 will be available. Mother promise you will not understand this now. You just write down and just mark this particular page when you write down. When I do some other concept much later, I will tell you, go back to that bonus page and read that. That time 100% you will understand. To understand these 3 lines, we need to do something later. So when we do tax rates, that time we will understand this, not now. Okay? Just copy this, no problem. This you understood? No, this is nothing. Before, then this 3 lines you just blindly copy, guys. Trust me, blindly copy and mark this particular page, because sometime later I will ask you to come back to this particular page, bonus page, and ask you to read these 3 lines. You will not understand anything now, those 3 lines, please copy, that's all. Later we'll see. Done. So these 3 lines you will understand later, guys. So this section 112A, it applies and bonus share is allotted before 1/2/2018, and FMB benefit is available. We'll see this later, no problem. Got it? Next one, right issue. Right shares. Right shares. Right shares. So I told you already in Reliance example, that only will write down. Right shares treatment. Write down. Market price 1600 rupees. Market price 1600 rupees. Second, right issue price. Right issue price 1300 rupees. Right issue price 1300 rupees. Mr. PJ shareholder. Mr. PJ shareholder is entitled to buy, means he has the right to buy, is entitled to buy, is entitled to buy 50 shares. Mr. PJ is entitled to buy 50 shares. So two options, what can I do? I can either buy 50 shares or I can sell that right to somebody else. Or no? So for example, PJ here, explain, then you can copy 50 shares. Now PJ can acquire 50 shares. What is the cost of acquisition? 50 shares into 1300. That's all. The period of holding will be from the date of allotment. So tomorrow when I am selling those 50 shares, period of holding will be from whenever the right shares are allotted to me till whenever I am selling it. Is okay. Correct, no? Today I am buying those 50 shares. At how much rupees? I told you what is the right issue price? 1300. So what is my cost of acquisition? 50 into 1300. My period of holding of those 50 shares begins from today. And like 1 year later, I'm selling those shares. What is the period of holding? From today to next year. That is very easy. But what happens if I sell the right? That comes the right hand side. PJ renounces the right, surrenders the right, relinquishes the right. Relinquish means what? Again, give up. Surrenders the right to Sheila auntie. Right? So, from my point of view, I sold the right for 200 rupees per share. What right did I have? To purchase 50 shares. I have sold it to whom? To Sheila auntie at 200 rupees per right share. What is my FVOC? 50 shares into 200. What is my cost of acquisition? Nil. Did I pay anything to get that 50 rights? No. What is my capital gain? 10,000 rupees. It is always and always and always short term because I can sell the right only within 1 month as per law. 1 month is short term or long term? Always short term. So, in the hands of PJ, 10,000 rupees is always short term. For Sheila auntie, what would be the cost of acquisition? First of all, to Reliance, she is paying 1300 rupees per share. To me, she is paying 200 rupees. Market value is 1600, but she is getting it at 1500. So, what is her cost of acquisition? 1500 into 50. This I already discussed in relinquishment of right. I am again discussing with figures. What is the treatment for me? What is the treatment for the other person? For the other person, what will be the cost of acquisition? 1500. Tomorrow when Sheila auntie is selling, she will sell it at whatever rate minus cost of acquisition. How much will she take? 1500 into 50. 1500 into 50. If 50 shares are being sold. For me, when I am selling the right, what will be the cost of acquisition? Nothing. But if I end up buying the shares, what will be my cost of acquisition? 50 into 1300. Because 1300 is the right issue price. Did you understand this? All of you guys, any doubt? Copy fully. I'll just make the screen proper so that you can copy this entire. Very easy, guys. Very easy. 50 shares. Right shares. right? Run. Try question 26, guys. Try all of you. The Ravi purchases 800 equity shares in Taxi Limited unlisted company at a cost of 45 per share. He gets 200 bonus shares in September 1999. July 2005, there was another bonus issue, allotted 1000 bonus shares by virtue of their holding. FMB of the shares of Taxi Limited on April 1st, 2001 is 110. On 1st March 2025, he transfers all the shares at 400 rupees per share and paid brokerage also 1% for transferring. One. Try. You have to think about it. One is before 2001, one is after 2001. For before 2001, what is the cost of acquisition of bonus share? FMB. Cost or FMB, whichever is high. For bonus shares after 1 for 2001, nil. All. Try. All of you try. It is 7. Be wrong, obviously. Solve it. 38. 38 is correct. Mandar, it's very easy, guys. 200 into 380, 26,000. Less cost of acquisition will be 2 times cost will be there. One is to pay company and one to pay Nandan. How much will you pay Nandan? 200 into 40, 8,000. And 200 into 150 will pay the company. So what is the short term capital gain? 38. Everyone got 38,000? Then Mr. Nandan, FEOC, 1000 shares into 400, 4 lakh. Less. Now we will make that separately also if you want. We can, guys, you cannot add it together. Why? Cannot be 1200. Why? 1000 shares will be long term, 200 will be short term. I always told you, if I sell the shares, it will always be short term. If I buy the rights, etc., it will always be, if I sell the rights, it will always be short term. Yes or no? Pronunciation price. The short term, guys. Why? See the date, no? The date first. Renounces. 2024 he bought. 25 only he sold. Short term or long term? Short term. Whereas these 1000 shares are bought in 2001. That time selling. Long term or short term? Long term. That is one mistake. You should see which is the short term or long term. I got the rights in 24. Selling the rights, selling the shares in 25. Short term. So cost of acquisition how much? 1 lakh into 363 by 3 lakh 33,000. Then other thing will be short term. 200 sold it for how much? Much? Ultimately 200 shares he sold it for 400. What is the cost of acquisition? 30,000. So short term capital gain 30,000. This is a big mistake. You cannot make it 1200. Correct? 1000 and then 200 is short term. Got it? Guys, write down. A is what? Right share. B is, sorry, A is bonus. B is right. C, write down now. No indexation in case of debentures and bond. No indexation in case of debenture bond. Why, guys? Because there is no fluctuation in this. There any fluctuation in debenture and bond? So much fluctuation? No. So there's no indexation, except two exceptions are there. For these two exceptions, you will get indexation. One is capital index bond, is discontinued now. One more is sovereign gold bond by RBI. Sovereign gold bond by RBI. Sovereign gold bond. Sovereign gold bonds. Why, guys? Normally in debentures and bonds there is no fluctuation, but these things, these two, you will get indexation. Sovereign gold bonds issued by RBI. You written these two? Sovereign gold bonds issued by RBI. Three things, guys. We already discussed. For individual, no, we have seen when you're redeeming or on maturity, it is not a transfer. You only wrote down, correct? Sovereign gold bond, that is for individual. Is it a transfer or not? No. And if you am redeeming before maturity, then capital gains will apply. I will get indexation benefit also. Maturity period of SGB is always 8 years. Other SSE, other than individual, whether you are redeeming on maturity or before maturity, it is always a transfer, always capital gain will come, and indexation also will apply, assuming I am selling it before 23rd July 2024. Anything sold after 23rd July 2024, no indexation. So I'll write down here SGB, that is transfer before. I'll write down transfer before 23rd July 2024. Or you can say, instead of transfer, I'll say redemption. Redemption. Copy this chart. Any redemption after 23rd July, I already told you the concept of indexation only has been removed. There is no indexation. Indexation benefit. Run. If you understood, guys, that is the SG. Now, after 1, you can write down somewhere, after 1 to 23 2024, no indexation benefit for anybody. Correct? No? After 23rd July 24, no indexation benefit. Indexation. Next, write down special provision number 5, concept called slump sale. SLUMP. Special provision number 5, concept of slump sale. SLUMP, slump sale. Slump sale. Guys, what do you mean by slump sale? It is selling the entire undertaking, segment, division for lump sum payment. For example, I am ITC, Indian Tobacco Company. Assume I have cigarette division, that is tobacco division. I have the ITC hotel division. I have Sunfeast biscuit, that FMCG, that is fast moving consumer goods. I have classmate notebook, stationery division. I sell my entire division of stationery to some other company. Classmate notebooks, it's not doing well, assume. So some other company will come and tell, I will take over that entire division. Am I amalgamating? No. Am I merging? No. I'm just selling one division fully to you. In my books in ITC, I would have taken building. When I take building, I will add building of all the divisions in my block, or division wise I will maintain block of assets. What do you think? When I am doing block of assets in Income Tax Act, I will add buildings belonging to all the divisions, or separately division wise I will maintain block. No guys, it is SSC wise always. So if I have buildings in ITC hotel, buildings in classmate notebook, building somewhere, everything will be added and written in my block. But now what I am doing, missionary also everywhere, everything is added. I am removing one part now. I am removing one part from the block. I am removing all the assets of that unit, and that entire undertaking only I am selling it to somebody. Will I sell individual assets, or will I sell the entire block, the entire unit, undertaking? I will sell the entire undertaking. Right? So basically, let's say I have factory building, factory building, factory building, factory building. This is ITC hotel. This is classmate, that is the stationery division. This will be my fast moving consumer goods. This will be tobacco division. Like that, machinery, everything will be added. But for me, in my income tax, I will add everything and keep. But now I am selling this entire stationery division, which will have factory building, machinery, plant, vehicles, everything. But this will be also part of my block of assets. No. So first I'll remove from the block of assets that you leave. I'll remove from the block of assets. From each block I will remove. If I remove from block of assets, will it come in PGBP or capital gain? Guys, if I remove from block of assets, will it come from PGBP or capital gain? PGBP, no. Block of assets, if I remove PGBP or capital gain? PGBP. So now you see one magic I'll show you. I had told you in PGBP that one day I will connect that point. Come back. Go to PGBP, guys. See page 7.13. 7.13. In the block, if at all any slum sale is happening, see 7.13 here, you see guys, less money is payable, less WDV of assets transferred in slum sale. I told you that time I will connect it in capital gain. Now that connection has come. That time I would, if I made you understand also, you wouldn't have understood anything. So what I am trying to tell is, this each block, no, I have to go and remove this part. This will be the block here, no, block. Different blocks will be there. From this block I should remove this machinery. From this block I should remove this building. From this block I should remove plant. From this block I should remove vehicles. That is under PGBP. Now in capital gain, what I should do? Am I selling this full unit or am I selling assets? Oh, I am selling the full unit, guys. Full unit I am selling. Are you understanding the concept? Full unit only I am selling. I am not selling asset. Full unit only I am selling. How will I sell the unit? How will I value the unit? That is only slump sale. So slump sale is selling of undertaking, segment, division for a lump sum payment. When I am selling the entire unit, what division am I selling? ITC, stationery division. The full value of consideration will be the FMB as per rule 11 UAE that they will give in the exams. They will only give the FMB. Minus transfer expenses will be net consideration minus cost of acquisition. Cost of acquisition will be the net worth of the undertaking. And ultimately, I will get my short term or long term based on the period of holding. Period of holding will be not when I buy the assets. Period of holding will be when the undertaking started. Undertaking started 10 years ago. Assets I bought 2 years ago. Will I take 2 years or 10 years? 10 years. Please understand, I am not selling asset. What am I selling? Entire undertaking. In that undertaking, some assets may be new, some assets may be old. All that I will remove in the block of assets in PGBP. There properly I will remove that WDV. But here this entire unit I am selling. How will I sell? FEOC. FME will be there. What is the cost? Cost is not cost of the asset. Cost will be net worth of that entire stationery division. And what is the period of holding? Is it individual asset period of holding? No, it is when the undertaking started 10 years ago. Period of holding will be long term. Undertaking started 1 year ago. Period of holding will be short term. Sir, but in that undertaking, old assets from other divisions were transferred here. Assets may be long term, but undertaking is short term. Hope you are understanding. That's a peculiar concept of slump sale. Did you get it? So what is the FEOC? FMB. What is the cost of acquisition? Net worth. And what type of gain is it? Short term or long term? How will you decide it? POH? Undertaking. Sir, how to calculate net worth? That we will discuss. Come on guys, write down. This is the slump sale calculation. FEOC is equal to full value of consideration, which will be FMB as per rule 11 UAE. Given in the exams or what? Yes. Less transfer expenses. Net consideration less cost of acquisition. Net worth. Short term capital gain, long term capital gain. Period of holding is the entire undertaking from when the undertaking was started. Right. Sir, what is net worth, sir? What is net worth, guys? Net worth is the value of that undertaking. So you only tell me net worth will be calculated what in what way? All assets minus outside liabilities, no? The assets you should take fair market value or book value? Book value. Liabilities you will take book value or fair market value? Value. Yes, you are correct. You are 100% right. You only told me the answer. How will you calculate net worth? Asset will be depreciable asset will be WDV as per Income Tax Act. Non-depreciable asset will be book value. Liabilities will be book value. That is only my net worth. You only told the answer. Did I tell? No. So it's already you know the concept. I am just telling you this is the answer. No need to mug up anything. Income tax is the easiest subject if you understand the logic. Otherwise, it will be toughest. In the market, you go and tell some stupid faculty only are telling income tax is difficult because they just want to sell their classes. Simple. If you teach it properly, if you understand the logic, easiest chapter ever, easiest subject ever. Did I tell you? You only told the answer. Correct? Asset minus outsiders liability. Always book value. Done? Yes, simple. So guys, once you solve a problem, you will understand. See question number 28. Let's read together. Slump sale concept. The following is the balance sheet of SS Limited as on 31/3/25, on which date Division 3 has been transferred by way of slump sale. Division 3 is gone, Division 3 is gone, Division 3 is gone. For how much? See, FVOC they have only given 0, 0. Additional information. Fixed assets of Division 2 include land which was purchased for 40 lakh and revalued at 80 lakh as on 31st March 2000. Division 3 only. Everything is Division 3. Fixed assets of Division 3 include land which was purchased at 40 lakh and revalued at 80 lakh. Will you take revalued figure or book value? Book value. Fixed assets of Division 3 reflected 520 lakh. 600 lakh less land value 80 lakh is written down value of depreciable asset as per books. However, the written down value as per Income Tax Act is 480. Will I take 520 or 480? 480. For depreciable assets, I should take 480. Non-depreciable assets, I should take book value. Revalued figure should be ignored. Other assets of Division 3 reflect 770 lakhs representing book value of non-depreciable asset. Further, it includes 200 lakhs representing goodwill which is self-generated. Should I take goodwill and all? No. Division 3 is in existence since April 2011. Selling it in 2025. What do you think? It is. Sorry? From? So is it. What do you say? Uh, Short term or long term? Long term. So you see, I like to explain the answer, then you can copy. Check it out, guys. First of all, you should do computation of capital gain on slum sale of division 3. The assessment year 24, 25. Sale consideration, how much? They have only given in the question 1060 lakhs. Less net worth. I have to calculate net worth only, no? So net worth will be working note. We will calculate. So long term or short term? Long term. Why? Division came into existence in 2011. So working note number 1 is computation of net worth. First one, book value of non-depreciable assets. They have only given land was 80, but actual cost 40. So I should take 40. Other assets I have to remove self-generated goodwill. Goodwill is never part of the assets, we have already told you. So 770 minus 200, 570. Total 610. Written down value of depreciable asset. They have given aggregate value of total assets. How much? I mean, this thing. Written down value of depreciable assets 480. See this one 480. I should take always the income tax depreciated value. So 480. Total assets 1090. What is outsiders liability? Here 100. Outsiders liability 100. So what is the net worth, guys? 990. That 990 I have to put it here. What is the long term capital gain? 70. Everybody with me on this? Simple. What is there? Very easy. Copy. 9. 29, solve on your own. We will do it together. First, you try. Come on. Question number 29, solve, guys. After this, you can leave. After this, one more concept, and then you can leave. Enough. Don't want to overdo. Tomorrow, we will finish. Go to exemptions. Try. Read. And 29. Computation of capital gain on slum sale. Scroll down. Copy this. We're done. And scroll down. Liabilities. Any doubts? Or after this, you can leave, guys. Enough. Tomorrow we will continue further thing. We're in a very good position, good pace, nothing to worry. Are you able to understand, all of you? Yeah.